All right. Good morning. New Year's Eve. Okay, let me just get a few things organized here or knock stuff over. Okay, what is going on here? Okay. Meta, the New York Fangs were higher this morning. Let's go here. Let's see. SPY is up. Let's see how far we go with this. SPY. All right. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Wednesday, December 31st. Last trading day of the year. We have the JP Morgan collar roll. Currently, stocks bounced. Palantir keeps going. See what's up with Palantir. Palantir trying to get back. Needs to get back above that 21 day, that dotted line. Palantir needs to get back above this level. Currently, we're trading right in this area, in the upper half of yesterday's range. Palantir, nice run up this morning. Watch for a fade first thing. Futures are only up 3.5 handles at the moment. Okay. Okay, swing high we have right there. Let me just note that on the chart. Swing high. Okay, so all the New York Fangs are up a bit. Palantir's higher. New York Fang components. We've got about 15 green at the moment. About 10 are red. The rest are unchanged. So we got about 75 stocks that are unchanged at the moment. 15 are up, 10 are down on the NASDAQ 100. Okay, let's see. NVIDIA looks like it wants to keep going. NVIDIA got January calls there. Meta, we did buy some FBL, some 2 times leveraged Facebook shares. Looking for that to get above 671, the 200-day. Yesterday, Meta was rejected at the 200-day. Nice work, Frano. Last trading day of 2025. Just seems like yesterday in April or March when we were heading lower. We're talking about, Christmas, the end of the year, and how we most likely see a bounce in the short term after we were down more than 5 or 10%. And here we are, near all-time highs. Okay, let's look at junk bonds yesterday. Junk bonds, at the end of the day, I thought junk bonds looked better, right? Yeah, junk bonds look better by the end of the day. So this is only one indicator. For the most part, as Brett mentioned, the markets right now are positioned neutral. You can see Bollinger Bands are tight. Price action, for the most part, hasn't moved anywhere. We've had a couple of highs and a couple of lows, but we're near the 50-day moving average. RSI is rising, so that's looking good for the beginning of 2026, first couple of weeks. Remember, Santa Claus rally lasts in the first 2 trading days, I believe, of the new year. So Friday and Monday. We'll see where they adjust their JP Morgan collar. 5% above, somewhere up there. For the upper strikes. But junk bonds look good. We've got 4 minutes to go, 4 minutes to go. Let's look at advanced decline percent. That was lower yesterday. Okay, advanced decline percent. S&P 500 in the top panel, mid caps, small caps, NASDAQ. Do we get a pivot today? New York Fangs are trying to hold their gains. All right, so Google's starting to deteriorate a little bit. Meta, a little profit taking into the opening bell. NVIDIA is still staying pretty strong. Semiconductors. Looks good. What's going on here? Why is my chart so big? Okay, got less than a minute to go. 40 seconds to go. First 15 minutes, I'm not doing much of anything except taking profits off the table, reassessing the markets after 9:45, 9:50. Today's probably going to be kind of slow. We're in a neutral stance. Let's look at, keep an eye on Trace to start the day. See what we get out of this. Futures continue to drop. Futures continue to drop here from the highs. All right, we're open. ONDS is on the move. Okay. I guess people are going to speculate on that one today. Here's Palantir. We'll go back to, just stick with Trace for now. Let's see if Trace gets any kind of movement. 0 day. Okay, we got some support just below at 68.90. We'll see if we test that. All the New York FANGs look pretty good. Maybe some profits in some of these names to end the year. Let's see, Adobe. Adobe's up quite a bit. All right, so got $1,000 on Adobe. You got $300 to go on Adobe. The looks good. Adobe looks good. AFJK, that one got up to about 140 overnight. All right, so we got a little dip down towards 100. That's 118. AFJK yesterday. I had an average around 65. I'm out now. I got out near the 100s. That ran up to 136 after hours. I was actually stuck in those shares for a while. Okay, Micron dropping a bit here. Micron with a little selling pressure. Pretty steep drop here on Micron. Okay, what's going on with Micron? Any news? Let's see what's going on here at Micron. All right, what's going on with Micron here? All right, everything's getting sold now. Micron dropping off. Micron. Okay, news. Yeah, I don't see anything. Just people taking profits. Micron. Somebody took some profits right there. Micron. Hedge flows turning up now, even though price is moving lower. Hedge flows turning up. Okay, let's see what the story is here. Hedge flows are turning up on the S&P. We got calls being sold or profit taking. We got puts being sold. That's positive gamma. That's the reason why gamma's jumping like it is. But people are taking profits on calls. Calls dropping off. Puts are being sold. That's creating some positive gamma. So the net effect is hedge flows turning up. We need to see calls turn up as well. Okay, hedge flows. Okay, now puts are being bought as the markets drop a bit. Okay, let me just add a put and a call to my active trader window. Expecting a bounce pretty soon. Looks neutral. Junk bonds were higher. Let's take a look at what that is saying this morning. Junk bonds. Okay, junk bonds, still neutral. Bitcoin popped and then dropped. New York Fang, all of those started off green. These are fading a bit. Meta just dropped off quite a bit. A lot of activity here. Last trading day of the year. Okay, let's take a look. Micron, ONDS, ONDS. Okay, that's running there. Okay, so watching MACD. There's a little bit of news. I guess it got a $100 million contract or something like that. NVIDIA still moving here. NVIDIA still on the move. Looking fairly strong, NVIDIA. Okay, it's above the 50-day moving average, NVIDIA. Chips, are chips going to be in play today? Let's see what some of these others look like. So this is NVIDIA. Junk is flat. NVIDIA. Let's look at SMH. SMH flat. LRCX. Like yesterday, I'm not interested in taking on a lot of risk today. I want to see if there's anything that begins to trend that looks good. We've seen financials hold up okay. Those have been fading this week. Financials, XLF. The banks, JP Morgan, they report in 2 weeks. January 13th starts off. S&P is still dropping off here. Okay, Palantir resuming the trend down. Palantir resuming its trend down. Started the last couple of days. Palantir. Okay, we're below the 50-day now. Is it a double top? What is it? Bollinger Bands trying to hold price. RSI drifting lower. So Palantir not at this point. A lot of selling. End of the year selling. Interesting. So where does that leave us, Vinny? Well, the New York Fangs are all mixed right now. NVIDIA just saw some selling come in too. NVIDIA was looking good there for a sec. NVIDIA thought that might hold up a little better. Okay, now we just right back down. Okay, so hold on to your cash. Palantir is still drifting lower. Bitcoin dropping off. Okay. New York Fangs back to neutral. We're looking at a neutral stance today. Okay, so puts are starting to get sold again, creating some positive. Again, we're starting to bounce a little bit. Hedge flows turning down very quickly, following price. Lots of calls being sold, profit taking, negative gamma. Haven't done anything this morning. Let me just do this. S&P. Let me put some puts and calls in here. Active trader window. Let's see, 30 deltas. I usually start with a 30 delta on either side. Calls and puts of current price action right now as we're moving lower. 68. What's a 30 delta here? 30 delta on the put side. 30 delta. 30 to 40 delta. 34 delta. 40 deltas is 68.80. That's $8. $566 for the 68.70s. Call side. 30 delta is $6. That's a 6,900. Okay. So everything's dropping off here. Quite odd. They were showing a positive open. Everything dropping off. Hedge flows. We're going to wait for around 10 o'clock to see if the hedge flows start to turn back up. Okay, why did it give me puts? Why did they give me puts here? No. Oh, I had these reversed? No, that's right. Not much to do at the moment. Getting caught in the sell-off there. 6,900s. Let's see what that looks like. If we get a bounce here. Wouldn't be surprised to see another doji. Okay, let's see. S&P 500. S&P. Okay, so we're back down to the 21 day. Okay, let's go through money flow and see what's going on here. Advanced decline. Actually, you know what? Let's take a look at equal weight index. Equal weight. That is pulling back too, regardless of the New York Fangs. Removing the weight. We're headed back to the 21 day. So we got a lower high. Number of stocks above the 20 day. No inflection here. No V shape. Looks like we're just going to keep moving lower here. $5, $15, $30, and $60 are on sell signals at the moment. Futures. NVIDIA, pretty decent pullback. Okay, Palantir. It's like, did a hedge fund or something just blow up or whatever? Got a sell program, everything pulled back. It's a little odd, all things considered. A little odd. I'm being sarcastic, by the way. It was like a sell program. Everything moved lower at the same time. Okay, we have only 113 stocks advancing on the S&P 500, 22 out of 100 on the Qs, and 500 on the IWM. So looks like a bearish day. We're below some of our threshold levels. Currently, the S&P 500 trading at 68.85. We got support right in this area. Hopefully, we bounce. We'll see what happens here. Non-zero day. We got some support right in this area. 68.75. So we're a little bit above that. 68.83. Microsoft dropping below the pre-market lows. Apple pulling back. Everything is just pulled back. Looks like a sell program hit the markets. That's very odd. Very odd. Okay. So yesterday we talked about the possibility that we would move lower. Remember, we took some February 20 calls. We only have 10 of those. I was hoping that we would push a bit higher so I could add to those. Okay, let's see how VIX is doing. VIX shooting up. Okay, so it doesn't stay down here very long lately, it seems. Obviously, I don't want to buy puts at this point. What I'd like to do is see if we get any kind of inflection back in the opposite direction. Hedge flows continue to drop off. Let's see if we get any kind of relief here, a relief bounce. Okay, so far since last week, we're off about 1%. 1%. No bounce yet. It's about everything got hit all at the same time. I thought there was a possibility if we couldn't get a follow through, another way to consolidate the recent run up that we saw in the previous week, since that low below the 50-day, was to pull back towards a 9 or a 21. We're currently at the 9 EMA. Currently at the 9 EMA, just below it right now. 21 days at 68.53 or so. That's possible. All right, so we're down 1% so far from all-time highs. VIX starting to fade a bit now. Looking for a bounce. Look for a bounce in the opposite direction. I don't want to buy puts at the low of the day. I want to buy calls down here. Let's see some cheap calls. Where are we? 30 handle bounce. Can we get a 30 handle bounce? There's not a whole lot. The only thing we see here on non-zero day are these negative gamma bars. And then we've got above 6,900. If we get a move back to 6,900, the 6,900s right now are going for $5.50. Okay. Got to see a turn first. I don't want to jump into this too soon. Okay, 6,900s. As we saw yesterday, just want to refresh everybody's memory. Yesterday, we had this very whippy hedge flows. Price action stayed in a pretty narrow range around 6,900, but hedge flows were very whippy. It looked like we're going to start to trend around 1 o'clock, but that eventually faded as well. So right now we're looking for a trend. Looking for a trend back up. Hedge flows, let's see what they're doing here. Hedge flows. Okay, so they're selling calls, selling puts and buying calls right now. Okay, they're selling puts, buying calls. That's creating positive gamma, so that hedge line is going to turn back up. Okay, so the orange are calls; those are being bought. The puts are blue, creating positive gamma, lifting upward as traders, investors sell puts down below. Okay. Let's see if we turn back up. Let's see if we turn back up here. Futures are on the move. All right, I bought a couple of 6,900s just now. $6.50. SP bought 6,900s. 650 filled. $2 stop. All right, so you don't want to buy puts. You don't want to buy puts at the low of the day. You want to buy calls. You want to see what we have right now. Hedge flows turning up. Okay, S&P. Let's see how far they go with this. Okay, Adobe. What's Adobe doing? Adobe. Okay, this is the only iron condor I have left. Adobe. So this, I just looked at it a couple of minutes ago. We're up. I only got $300 to go, so I could close this for $30, or I could wait through the holiday and the weekend. Probably close this for like $15 to $20, or just let it expire worthless and collect the whole 13. I already got the $1,300. It's just a matter of when I decide to buy back this iron condor. So let me see what I could buy it back for right now. Okay. All right. So it's not as good as it was earlier. This morning I could have got out for 30 bucks. Right now it's 45 bucks, 45. All right, looking for a bounce. Hedge flow still rising. Orange line are calls being bought. Blue line is puts being sold. That creates positive gamma. It's actually pretty easy to understand. What do you always hear hedge funds doing? When they start selling puts down below, you see all these social media posts from Joe Cuckle, or whatever his name is, from Option Hawk, or Jason from Three Peaks. Anybody that you follow, if people are selling puts, bulls like that because that's creating a floor. If calls are being bought, in addition to that, we should see a bounce. Right now, we had a pretty decent drop. May dissipate and we may get a bounce. Right now, we're not following through on the bounce, so I'll be very quick to take this off before I hit my stop if this starts to flush again. And we'll look for the next floor, if you will. But so far, it looks like hedge flows want to keep rising, so we'll keep an eye on this. Okay. See lots of support here, 68.75. We didn't get that far down there. Okay, we're not following through yet. These calls are not appreciating yet. Okay, looks like they're going to flush it one more time. All right, so too quick to jump, looks like. Puts are starting to catch a bid. All right, so it's kind of a tricky place right here. Okay, this is real time watching calls and puts, orange and blue respectively. Bear flag on Micron. Palantir continues. Okay, NASDAQ 100 got a few more stocks starting to turn. People buying a dip. 166. We had about 115 advancing on the S&P. Now we're at the 166. 167. The Qs 24. That's not much of a change. 24 out of 100. Futures look like they're going to move lower again. All right, I'm going to take these calls off if this keeps up. All right. Pull the trigger. Going to wait. Going to pull the trigger. Oh boy, last day of the trading year. Last trading day of the year. NYMO is minus 11. Hasn't been much of a change in amplitude on the NYMO. It's been pretty much hovering 10 to 15 points above or below the zero line, the McClellan oscillator. So that's why we've been seeing this sideways price action. Okay, looks like we're going to move lower here. Okay. Everything got sold all at the same time. So we had everything up pre-market. New York Fangs, everything was up. Google's trying to hold on. Google is trying the hardest to hold on. Everything else is down. Apple's trying to hold on as well. So Google and Apple, maybe they hold on. But Amazon, Microsoft, Nvidia, Netflix, Tesla, Broadcom, Snowflake, Meta all saw profit taking. Micron, dip buyers. Okay, Carnival starting to bounce. Carnival. What's Walmart doing? Walmart, one right below 112. Palantir trying to turn back up. Nike trying to turn up. Fewer stocks advancing now. Got a few more turning back down. Okay, let's see what the markets look like. What a way to end the year. Okay, I mean, it looks mostly red, light red, bright red in some of these areas. You know, light, everything looks neutral, neutral tones, okay? So light red, light green. Striker, for example, is sort of grayish. Amgen's down 0.1%. But the majors like Broadcom, these are off a bit. NVIDIA is still up a bit. All right, so this needs to change. Let's see what the leaders look like. Molina Healthcare, that was active yesterday as well. Molina Healthcare, that gapped up yesterday, looking for the follow through. The earnings didn't look that great. Okay, S&P 500, Molina, Nike, continuation off of the low. So dip buyers stepping up for Nike. Was that Lamb Weston, LW? Lamb Weston, turning off the, oh, that looks ugly. Turning off the low, Lamb Weston, they've been around a while. Yeah, all sectors are down. Real estate down the most. Utilities, healthcare, financials down the least. A lot of red. So don't fight the tape. Right now, the markets are bearish. Looks like Palantir with the first turn. Palantir turning along with Microsoft. Palantir and Microsoft turning. Okay, Palantir turning back up. Palantir. That's below the 50 days, so hands off for now. Needs to get back above the 50-day. Need to see some more positive price action. Just looks like somebody was exiting towards the end of the year, taking their profits off. Start the new year, new plan going forward. Portfolio manager, perhaps. Hedge flows, they're trying to turn up modestly. Okay, so calls, orange being bought, pushing a bit higher. Puts being sold down here. As that blue line rises. Palantir, nice little bounce, shorts covering. That's about all I would expect for now. The markets are red, so the tape is bearish for now. Okay, so very choppy right now. JP Morgan collar roll today. Expiration of 7,000, the 7,000 strike above. And a new entry to a 35K lot position for March. This likely triggers a 2 to 3% out of the money March call to be sold. And they'll use that to buy a out of the money put spread. That'll probably happen in the late afternoon. Right now, the markets are not doing anything. They just pulled back and sitting here, enticing speculators like us. I'm not doing anything else. I'm just going to wait to see if the markets are going to continue this red day. All 12 S&P 500 sectors are red at the moment. Least red are XLU, XLV, defensive, and financials, not defensive. So let's see what financials look like right now. They're down like 0.1%. They're down almost 0.2%. Okay, the last time we pulled back for 3 or 4 days, we bounced at the 90 EMA. We're at the 90 EMA, so they're not supporting it right here. It's the last trading day of the year. You don't have to trade every single day. Yesterday, we talked about that too. We had 2 dojis in a row on the S&P. Market's pretty neutral. Brent talking about neutral positioning again today. I imagine there's a lot of bears chomping at the bit. Finally get their day, last trading day of the year. NVIDIA, let's see what NVIDIA is doing. Trying to bounce. Okay, so we got some short covering on NVIDIA. A little bit on Microsoft. Apple turning back up. There goes Google. Google starting to move. Google. Are you buying IMBS? What is that? That is, yeah, that's moving pretty good there. INBS. INBS. Volume looks good. INBS halted. Okay. Just got a slow grind. Calls. I'm going to take these calls off if we don't get a bounce here. Okay, I'm going to take these off. All right. I took the calls off. Okay, Molina, Hershey's, eBay, NVIDIA, hanging out at 190. Let me see what these look like. Oh, I want to sell some premium. VIX moving back. Let me just check that again. VIX starting to move. That's going to help with the implied volatility calculation. All right, it's starting to move off the low. Just at 15. Okay, let me look here. Oops. Okay, I clicked on the wrong toggle. I can always get back in these 6900s once the trend turns. The tape is red. Palantir. What are we doing here? What are we doing? What's the number one? NASDAQ 100, NVIDIA, AMD, NVIDIA, AMD, NVIDIA, AMD. These are the number 1 and 2 on NASDAQ 100. Very choppy price action. I'd rather, okay, S&P futures dropping off, testing the, okay, going for a new low here. Going for a new low. Micron just rolled over again. Micron just rolled over. Futures making new lows this morning here. Okay, hedge flows. Hedge flows turning back down. Okay. Okay, so you want both of these lines, blue and orange, to turn up. Okay, we got this level here, 98 percentile, 68.65 currently. And S&P, of course, at the low of the day for now. We're losing more and more. We're about, what, 90% red? I haven't seen that in a while. 90% of the NASDAQ 100 is red. Okay. S&P 500, we only have 60 stocks, 67 stocks advancing. The rest are declining. Only 60 stocks out of 500. That's not a good sign for now, for the last trading day of the year. Futures trying to bounce. Mhm. Okay, sectors. That's what we look like right now. Everything is red. $65 stocks advancing. $430 stocks declining. Same thing with the NASDAQ 100. We've got 90% are declining. Very bearish tape for now. Unless something changes, the last trading day of the year. We're going to be down a little bit more than 1%, looks like, on the S&P for now. Okay. Excuse me. Okay, so we're below the 20 EMA on the 60 minutes, so you want to think bearish. Okay, so we're basically down 1% from all-time highs. Suck the bears in. For now, it doesn't look like they need to do much convincing because everybody seems to be selling. New York Fangs are mixed. We do have Google trying to hold on to the highs. Apple pulling back from the high now. Everything else is pulling back as well. Meta trying to bounce, a little short covering. Okay, more than 1% now. Okay, we're dropping off. Puts are bid. Okay, that's ripping higher. $68.50. We had a node down there at $68.50, right? $68.50, $68.65, $68.75. We're currently at $68.77. So can we hold on to these areas? Hedge flows continue to drop off, though. So this is bearish for now. Don't fight the tape. Everything is red. Every sector is red. All 12 sectors red. Okay. Okay, yesterday we talked about the possibility that we would pull back. You'd have to be open to the idea. What if we pull back? Did you buy any of those VIX calls for February. I had the 20 strike. VIX did bounce a little bit today. Still below 15, or was last time I looked at it. VIX. Let's see what VIX is doing. VIX. Okay. Headed back towards 15 again. You don't have to do anything. If you're a long-term investor, use the opportunity maybe to buy some. I wouldn't do it today. Maybe start of next week. Depends on where we stop on the S&P. We stop at the 21 day. S&P still showing weakness. AFJK dropping off a bit here. AFJK down to 93. AFJK. S&P looks like it wants to keep going here. 6850s. 6850s. Can we get down to 6850? What are those going for? 6850. Those are 6850s. People buying those puts. 6850s of $2.70. It's a 16 delta. Interesting. Another bear flag. All right, looking for a bear flag to take any puts. Look for bear flags to take puts, these little bounces. They get rejected and start to roll over. That's where you want to buy puts, not here at the low of the day, because your premium just pops, especially on 0 day. Watch for a pop here. Palantir turning back up. Palantir looks like some short covering. Palantir. Dip buyers, volumes picking up on Palantir. Palantir trying to bounce. Risk seems very high for continuation to the downside. Futures just looks like a bear flag right now. If it gets rejected and rolls over, have some puts ready. INBS bouncing. ESHA is pretty active today. What do they do? They're an acquisition company, ESHA. Let me see if there's any news here. ESHA. Nothing there. Okay. ESHA. ESH acquisition. ESH acquisition. A newly organized blank check company formed for the purpose of effecting a merger, capital stock exchange, blah, blah, blah. What are they? Hospitality, entertainment, sports, and innovation. ESHA, that one popped this morning. It was trading at what? It was trading at 14, 15 yesterday. It's at 27 now and pushing higher. ESHA. If you're trading any of these cheap stocks, make sure you're watching MACD. For example, let's look at INBS. INBS, that's one that Frano mentioned. Hey, that's breaking a downtrend. INBS. The thing you want to watch is what's MACD doing. Okay, taking profits when MACD starts to taper off. Watch the volume. INBS. Excuse me. Palantir. Palantir turning back up. What if we get a rally here, right? What if we get a rally? Okay, BNAI, big pop there, just jumped BNAI. Okay, so let's see, BNAI, this is a cheap stock, right? I believe, yeah, it's a $2 stock. All right, so these cheap stocks, all right, if you insist on trading any of these, make sure it's only like 1 or 2% of your account, okay? Don't bet the bank. But watch MACD, volume, and price above VWAP for bullish trades, the reverse for bearish trades. When you get pullbacks towards VWAP like this a couple of minutes ago, MACD needs to turn up, volume needs to pick up. All right, so that's let's look at INBS while we're waiting for the markets to do something. INBS, same thing. When it came out of the gate this morning, it already had a lot of volume prior to the open. MACD is trending, but now you're seeing some selling volume up here at the high. MACD's turned back down. So in order this to continue higher, we need to see the green volume pick up again and MACD turn back up as well. Overhead resistance is the previous high. Looks like. Okay. What's futures doing? Futures, bear flag. All right, so that's that. Let's see what else is working here. ESHA. Okay. Volume, MACD turned up, prices moving higher. This is a SPAC in the hospitality, sport, entertainment, and technology group for acquisition of companies, a blank check company. You can see what it did on the daily on the right there, big gap up. Looks like people play in this one. Okay, let's see what NVIDIA's doing. Back to quality. NVIDIA's coming off the low, higher high. NVIDIA looking better. It was kind of an odd start to the day, wasn't it? Just about everything. I haven't seen a day where we've had such negative breath. 79 stocks. We're below 100. Generally, you never see S&P 500 below 100 stocks advancing. We're at 75 right now, 78. The Qs, 85% of the Qs are either unchanged or moving lower. Only 15 are moving higher. IWM, nearly all of the IWM stocks are declining. Let's take a look at IWM. IWM. Okay, that just made a new lower low. Okay, stocks like Palantir trying to turn up. Oops, Palantir. But nothing really jumping out as far as a trend, new trend. Okay. S&P. Bear flag, bear flag. Looking at hedge flows again. Not much to go on here. Still looking like lower highs, lower lows, trend down. We've got levels below 68.65 and 68.45. If you want to play these levels with puts, I would buy puts on bounces like we just had a few minutes ago, and this is turning back down, rather than buying at the absolute low of the day. That tends to not work out. Keep your size reasonable. It's the last trading day of the year. We got a JP Morgan caller later today, most likely the roll later today. People speculating on these cheap stocks today. Not much action in the New York Fangs. NVIDIA is bouncing, trying to sustain that bounce. I don't trust it, though. I don't trust it today. Given all sectors are lower, all 12 S&P 500 sectors are lower. Micron is trying to build right here. Micron. What's Oracle doing? Oracle is down 0.3%, not a big deal. Adobe is down 0.5%. Adobe, I have a iron condor on, so I want to see Adobe stay right in this area into next week, in which case I'll probably be able to get out at $20 or just let this expire worthless. I know you might probably get tired of me talking about this, but this was a good trade. We had earnings, that big white candle there, the first week of December. We had an iron condor for that. When it dropped in the morning, we took off the call side. When it popped towards the evening, closed in the upper half of the daily range, we took off the put side out of that trade. And then a couple of days later, we took this particular trade that expires on the 16th, $1,300 in cash credit. Okay, currently this morning I could have closed this for about 25 bucks. It was going for 1,000 and change. So I'd like to close this around $20 if I can. $20 to $30. Make 1,000 on this one. And we've got 2 weeks. In 2 weeks, we're going to have the banks start earnings again, so we can start selling iron condors. Okay, what do we got here? ESHA they're looking at. BNAI turning down. Mm-hmm. 68.80. What are we going to do here? We're going to hold this low. We're going to turn back up. What are we going to do? Yesterday, they killed premium. If you went too far out of the money in either direction, 30 deltas wound up not working that well. 40 deltas managed to break even. 45 deltas were a little better. We had that doji. We moved up to the highs, back down to the lows, back and forth yesterday. Looked like we might start trending towards the 1 o'clock hour, and then we just kind of faded after 2 o'clock, rendering a lot of these puts and calls worthless. So, yeah, just taking it easy. Just taking it easy. Don't have to trade every single day. Looking for low risk trades. Like, for example, the February 20 call on VIX. VIX at the lows. Kind of hard to stay down here for any substantial length of time. So, can this move towards 16 to 17 in the next couple of weeks? Maybe. That's just a hedge. So, I'm okay with this hedge not working. If the hedge doesn't work, that means that the calls and the long side is going to be working. So I have most of my positions are longs, obviously. Kind of a dead day. BNAI turning back down. Ours. What's up? Bitcoin down. Futures rolling over again. Hedge flows headed lower. Like yesterday, it doesn't feel like institutions are very active. There might have been a sell program this morning. Other than that, I don't see a lot of volume. There are a lot of reasons to do anything on the long side for now. Just given the lack of energy. Okay. We only have about 10 stocks on the NASDAQ 100 that are green at the moment. A lot of these cheap stocks are being bought at the moment. Okay. Futures turning back down, testing the lows again. Hedge flows turning back down. Okay. Puts being bought when the blue line is dropping. Puts are being bought. Calls are being sold, taking profits, whatever. Okay. Oracle, Micron. Micron is off. What is that? Almost 2%. Calls being bought. Puts being sold. Very active here. Let's see what the Nasdaq looks like. Nasdaq, IWM. Okay. Qs. Just a slow grind back down to the low. All right, looks like we're going to bounce. Tape. What's active? Meta, Microsoft, Google, Netflix. Meta, Microsoft, Google, Netflix. We got support down below, perhaps 68, 65. Not quite there. VIX is still the top of today's range. S&P still moving lower. Volume is mostly bearish. S&P bouncing now near the lows. AFJK back to 106. Is that halted? No. All right. ESHA is halted on a downside move. What's ONDS doing? I keep hearing ONDS in the background. Okay, that keeps going. ONDS. Maybe it's going to become a really big deal soon. ONDS. Let's see what this looks like on the daily. Okay, back up to the highs. ONDS. For now, volume looks good. Fair value gaps on the upside. ONDS. Futures testing the lows again. Looks like we're gonna move a bit lower. S&P. Okay, S&P continues to move lower. There, your hedge flows continue to point to this side. If you're going to sell premium, it's kind of tough. Right now, we're at the lows of the day. So if we ever get in an inflection here, maybe some puts down below if we sell those. Yeah. Puts are catching a bid. Futures smacking new lows here. All right, Palantir just rolled back over again a little bit, down for the last 4 trading days. I would like to buy some dips on Palantir, build a little bit larger position. Looking out to next year, mid-year. Intel was active yesterday. ONDS continues. Intel was active yesterday. Let me go take a look at Intel. Intel, okay, giving back some today. Intel inside day, Intel. But generally, this looks pretty strong. Coming off the low, RSI rising, MACD stochastics turning from oversold. So this is reset, volume starting to pick up. So probably next week we'll see this above the 50-day, I would guess. Hedge flows continue lower. S&P continues lower. Got a liquidity grab there. We had a low here before. Previous low right there. We just got a liquidity grab at that level. Let's see if this is a reversal area or if we're going to just keep going. Looks like we're going to keep going. Looks like we'll keep going. Okay, on the right, we were thinking yesterday, what happens if we start moving lower? Are you prepared for a move lower? Are you going to take some VIX calls? I took some VIX calls just for a hedge. It's a small position, only 10 for now. Okay, there goes the puts are being bid again. ONDS is cracking 10. ONDS cracking 10. All right, puts are being bid. ONDS cracking 10, pushing through that level. S&P. Palantir is trying to push higher. People are buying the dip. Volume picking up a little bit on Palantir. Volume is picking up a bit. Here's Palantir. Okay, now note the volume starting to pick up a little bit. We're at BWAP. Just below the 21-day over there on the right. Okay. Like to build a larger position. Okay, INBS charging higher, INBS. Okay, S&P continues lower. All right, we're dropping off through this level here. S&P moving lower. Bear flags continue, persistent. Slow day today. Slow grind lower. I don't sense there's a lot of people active today, except for day traders. INBS Intelligent Biosolutions is a medical technology company pioneering innovative, non-invasive, real-time point-of-care solutions. That's trying to trade higher. INBS. S&P still building bear flags. Futures 15, 30, 60 are on sell signals. Tick cumulative is red. Breadth is bearish. Got all 12 sectors moving lower. All 12 S&P 500 sectors are moving lower. Least impacted. XLU utilities. Okay, those are just kind of sitting here. XLU, not much of a trend. Let's go look at the sector indicators. XLY, XLP. Okay, let's see what that looks like. XLY, XLP. Okay, that's still pushing higher. If institutions were concerned about a big sell-off into 26, you would see this turned over and peaking like it was. This peak right here is February. That's when the tariffs hit the tape and we move lower for a couple of months. Okay, so momentum, the rate of change is also rising. KST is a rate of change oscillator. Okay, it has 4 moving averages, 10, 15, 20, 30. And as the short-term moving averages turn first, you'll get the peak or the trough. In this case, we got peaks, so all the moving averages are up and to the right, telling you that institutions are more concerned on missing out on higher prices instead of concerned about a move lower other than, say, a 1 or 2% pullback, which is what we're seeing now. Over the last few trading days, we're down 1% from the high that we put in last week, Wednesday, Friday, rather. Okay, here we are, down more than 1% right now from the all-time high. I wouldn't be too concerned about a couple of days pulling back. Most indicators are fairly neutral. Okay, S&P just dropping off here, S&P. Okay, the puts just exploded in value. Puts just exploded in value on this drop. Okay. Okay, we're almost oversold on the 60-minute. Okay, just looking at the 60-minute here. 5, 15, 30, 60 are all on sell signals. All 12 Spider S&P 500 sectors are lower, are red. Okay, so where are we headed there, Benny? Looks like we're headed to the 21-day for now. Okay, the 21-day matches up with 68.55, and we're looking at these levels here. Gamma, bullish gamma at 68.68. We're currently at 68.69. So that's a pretty big level. Do these shorts get taken out? Okay, the purple indicates the dealer is long, market is short. Everything turned back down again. Bitcoin is at the low of the day here. Bitcoin just off the low of the day. Another bear flag on Bitcoin. Mm-hmm. Okay, that's our low for now. This is our low of the day for now. You seeing these what they're promoting right now for these emergency radios? You can charge your phone. Yeah, you got to sit there and hand crank this thing for like an hour just to get a little bit of a charge on your phone. It's ridiculous what they're selling out there. Yahoo Finance has a lot of these AI. These people they're not even real people. They're AI generated. It's kind of creepy. Watching the S&P, we're at the lows. Looks like a little short covering again. Bear flags. Last trading day of the year, and this is what we get. 21 days, not too far away now. We're down more than 1.1% from the all-time high that we put in last week. Setting up for next year, perhaps. Looks like a bear flag. Watch for a bear flag here at S&P. Let's see what hedge flows are saying. Hedge flows trying to hook upward. Okay, watch for a hook upward right here, 68.70. Starting to see what looks like short covering like we had over here. We had short short covering right in here. Okay, that short covering that we saw right in here. Could see a similar move here. Look at the volume. Volume's starting to pick up. Okay, that looks good. Maybe we make it back to VWAP. It's possible. Is anything else bouncing? Let's look at the New York Fangs. Those are all lower. Google's holding on to some of its gains for today. Let's go take a look at Google. Google, just consolidation. All right, so coming into this week, one of the things we were thinking about was that, okay, you got, for this example, Google, Bollinger Bands are tight. So the strategy is you want to go long when we break the high prior to the squeeze. All right, here's the high right there, 328. Okay, so right now we're not doing anything. Google's just sitting here. It does look good intraday, maybe from time to time, but for the last week, the last 6 trading days, it's gone nowhere. Just went sideways. All right, so that's one example. Let's take another look. Let's look at Amazon. Amazon looked like it was going to do something yesterday, but we have tight Bollinger Bands here too. It's gone nowhere for 6 days. That's actually dropping off right now. Broadcom, looking for Broadcom to do something. Broadcom, much wider Bollinger Bands. This could go either way. RSI is kind of rolling over, so no follow through there. MACD stochastics are reset, so we could see a bounce at some point. NVIDIA, everybody likes NVIDIA, right? NVIDIA is above the 50-day, consolidating for the past 6 trading days. RSI rising sideways. Not much going on there. We only have 6 stocks on the, 6 stocks on the NASDAQ 100 advancing. It's not much. 6 stocks on the NASDAQ 100. Almost every stock on the NASDAQ 100 are being sold right now. That tells you do not think there's going to be a big bounce at the moment. We start to catapult back up to the highs. It'll be pretty obvious. Down volume's leading. Okay, we've got 4-to-1 down volume on the SPY for the last trading day of the year. Are you going to do that to us? 4-to-1 down volume on the Qs, just shy of 4-to-1 on the Qs. 1-to-1 down on the NASDAQ Composite, 2,700 stocks, plus or minus a few. New York Stock Exchange, 2.6 down. When in doubt, you always want to check out the New York Stock Exchange. Okay, that's fading. So I wouldn't expect that we're just going to see a hanging man candle. We're going to rip back up to the highs. I wouldn't be doing much of anything, actually. We took the hedge that we were talking about just in case. We have the call fly on S&P if we do get a grind higher into January. All right, that's a cheap way to play it. So while it might be disappointing that everything's not working in your portfolio, the idea was we want to lean long, but we want to do it as cheaply as possible. That's why you take a butterfly. Okay, one of the reasons. But we want to protect for the downside as well. So those hedges, the 20 for February, 20 February call on VIX is still a valid setup because VIX is really low. Puts are still pretty cheap. Okay. If this starts to shoot back in the other direction, all of a sudden, VIX puts are going to become very expensive. Let's look at that in perspective. Okay, scanner. All right, so here's the New York Fangs. Let me just turn these off and restart this. Okay, so let me go to the New York Fang. Okay, so all of these are in the far right quadrant, New York Fang components. So volatility is compressed, but calls are getting more expensive. Okay, if that makes any sense, which means that they're not super expensive. If these were in the top right quadrant, I'd be wanting to sell premium. Right now, it's still okay. You could buy call spreads. I'm not doing anything at the moment. These will shift back to the left, so that's why these are called risk reversals. Okay, you see in the top line there, it says Netflix risk reversal rank 68%. So when it gets to like 85 to 90%, you definitely want to be selling calls or buying put spreads or put flies. What are we doing here? Are we going to get going? SPY, S&P. Another bear flag. Okay, so we got the little bounce here earlier. S&P, we got this little bounce right here. That was a bear flag. We rolled right over. We're going to do that again. Watch for a rollover. Watch the MACD down below. And pretty much everything is red. All the red volume here, very few green bars. So it's probably going to persist the way we're going here. Let's go see what junk bonds look like. VIX. Okay, we just talked about VIX. VIX is near the highs of the day. Junk bonds. We got to get some bullish indicators. This is neutral. This is neutral. It's not bullish. Talked about this ad nauseum. Volume tapering off. That's telling you that the people who would normally trade this are risk off at the moment. Neutral. They're not doing anything. The lack of volume is telling me there's very few big trades on this. It'll start to shoot higher like it did right here in this big run up. And you'll see volume pick up. That's not the case right now. So that's telling you maybe take the rest of the day off. If you were looking for a big day today, maybe come back this evening. Not much going on. We just have this slow grind lower. Let's see what sectors are actually okay. Pharma, that's mixed bag. AbbVie, maybe some call spreads on AbbVie. Let's take a look at AbbVie real quick. AbbVie, ABBV. All right, these are kind of nothing. J&J after the big run up in J&J that pulled back a little bit. Merck at the highs. NYMO is at minus 26. Okay, NYMO has been hovering around the zero line. NYMO's been hovering around the zero line. Let's see, let's go to NYMO. Pretty much what you're seeing on advanced decline, just hovering around this area. S&P, mid caps, small caps, these are all getting sold right now. So if you're expecting a big bounce in the calls or the S&P, right now we don't see it. If we do get a bounce, it'll probably be closer to one of these big nodes here. This is non-zero day. Let's enable 0 day. Same level, 0 day. A little bit of profit taking right there at 68.65. Still no bounce. Okay, we're trying to make a higher low. Trying to make a higher low on the hedge flows here. Do we get a bounce and run back up into the range and create a long-legged doji? Okay. Yesterday we had a pretty decent range. The day before that, Monday as well. We closed in the lower half of the daily range. On Monday, we closed right in the middle. Today, do we move back up into this range and create a hanging man candle? Hard to say for now. Looks like we're going to keep moving lower. Looks like we're going to roll over here. Okay, so that's your low of the day right there. Low of the day. I'm just looking at stocks that look like they're trying to start a rally. They just roll right back over. Characteristic of a market with very negative breath. Okay, so that just turned back down. Hedge flows just turned back down. Keep thinking this is Friday. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's 11:11 a.m., 11:11, Wednesday, December the 31st. Yesterday, we got Fed minutes. The Fed basically saying that they're open to cutting rates again, provided they see inflation moving lower. All right. So, mixed message there, a little bit of change in the language in the minutes. That's what they were talking about at the last meeting. So, pretty much baked in a quarter point. If the Fed really wanted inflation to move lower, if they started contracting, Milton Friedman would be sitting here telling you all they need to do is to start contracting the money supply, right? There's just too many dollars printed over the last few years into this year. From 2020, from COVID, they printed like crazy. Crazy people print, giving money away. And we found out what happened to a lot of that money, unfortunately. The scammers were out there, the fraudsters. So it's a double-edged sword there, you know. You try to help people out, and you got somebody always trying to steal. Always trying to steal. And people who do it the lawful way, we wind up paying the price, you know. Just can't catch a break, right? Okay. Still a bear flag here on the S&P. I mean, how do you go from, you know, 2 or 3 years ago being worth $100,000 to 3 or 4 years later being worth $30 million in Congress? I don't know. That speaks of fraud to me. I mean, are they that good investors? I'm not talking about any particular side because it occurs on both sides, right? But it's just Congress is just crazy. Wish we didn't have to have politicians. We would have a lot more friendships because people lose their friendships over these stupid politicians. You know, watching too much social media. That's another thing you got to stop doing. If you watch too much social media, that'll make you crazy. Every time I flip on one of those, what do you call it, X feeds where people are just beating each other up for whatever reason, depressing. Meanwhile, I tend to ramble on when the markets aren't giving you much to go on. We have a negative or a bearish tilt to the markets at the moment. We're trying to bounce. Every time we try to bounce, it seems like it turns into another bear flag. Okay, can we get a rally here? Each rally that we've seen thus far has been met with selling, bear flags. Can we at least end? Can we at least end the year with an up day? You know, and a little bounce here, come off the low. That'd be nice. Amazon's at the low of the day. Google pulling back. Microsoft at the low of the day. Netflix, Snowflake. Apple just pulled back to the low of the day. Broadcom bouncing off the low of the day. Just looks like shorts covering. That little bounce was just shorts covering. Could resume. Okay, volume is starting to pick up here. I don't know if you're paying attention to the volume, but volume's starting to pick up on this move. Is it just short covering, or is this going to turn into a full-fledged rally? I vote no vote. I vote okay. Probably going to trick people. Just feels like it. Everything is down at the moment. And not getting any help. All right, we got 50 stocks advancing on the S&P 500. 450 stocks are declining. The Qs, we got 9 stocks advancing. Talk about a headwind. You got 91 stocks out of 100 declining. The last trading day of the year. Trying to make sense of this. Because this morning we had all 10 New York FANG components green at the high of the pre-market session. And it just sold immediately, just sold it right at the open. Everything. All these stocks got hit. And now we're down to, what, 450 stocks declining? That's crazy. They're watching this bear flag. One more time. Okay, so if you're thinking, if you're thinking higher, a good start to January, I'm thinking we're going to do fine. Most portfolio managers that have been interviewed or heard them speaking or talking on CNBC or whatever, most of them talking about earnings, right? It's all about earnings. It's always about earnings and guidance, right? So in 2 weeks, we've got JP Morgan, all the big banks reporting. 2 weeks. So if you think, like I do, that we have a shot, not 100%, but we have a shot at moving higher towards 7,000, then the call flies make a lot of sense because they're a very cheap way to play it. You won't feel like you're missing anything. If it doesn't work, you're not out of a lot of money, but you can participate. On the downside, if that doesn't work, you got the puts. The puts are cheap. Those were really cheap. The calls on VIX, okay? Those were cheap. The 20 call for February. That gives me, some exposure to each side if we decide to drop off. Watch the S&P here. Okay, you can buy some cheap calls down here, maybe get a nice reversal. Looks like we're going to move here, folks. Looks like we're going to move. What are those 6,900s going for? Oh, those are cheap. The 6,900s are cheap. Okay, here we go. We're starting to move. Starting to get, okay, S&P dropping off. The puts are dropping off. Okay, we should see hedge flows turning up. Okay, we are. Okay, I don't want to get too excited because we could get one of these sine waves like yesterday. Look for this kind of action too. Just farther between, okay? Back and forth, back and forth. So right now, we need to see this trend the rest of the day. Need to see it trend the rest of the day. Okay, we hit support. Okay, right in this area, 68, 65. Where do we bounce? We bounced right at 68.69, it looks like. Okay, 68.69. So we got really close to that node, okay? This node in 0 day, right there, 68.65. That looks pretty good. Notice all these trades that have closed overhead. All these trades overhead. Now we're moving back in the opposite direction. Let's see what Hero says. We want these to be moving higher. Both lines need to be moving higher. Puts need to be sold. That's the blue line. Calls need to be bought. And you can see this is racing to the highs. Okay, these are racing back up. Puts being sold, that's the blue. Calls being bought, that's the orange. Positive gamma. We want to see positive gamma for a bounce. Yep, exactly. Exactly. You got 100% there, Corey. I agree with you 100%. Yeah, who's going to Antarctica? Was that you, Frano, or was you guys are just joking around? I caught a little bit of that. Oh, you're going to Antarctica. What piqued your interest? I'm not poo-pooing it. I mean, I guess I would like to go there. I don't know. Just to say I've been to Antarctica. Is that on your bucket list? Okay, calls. We're trying to turn the corner here. Still not getting a forceful push. Last time we hit this level, the green line, the last time we hit it, we got rejected. Overhead is resistance. Okay, so I'm not going to bank too much on this. Okay, there goes Oracle off the low. Oracle. Oracle. I'd like to buy some ORCX. ORCX. Okay, ORCX. ORCX. I'm buying a little bit more ORCX down here. Right, filled at 1750. ORCX. Mm-hmm, mm-hmm. 1750. Okay, Oracle looking for that to push much higher. All right. All right, S&P starting to grind a bit better. Puts dropping off, losing value. Puts. Okay, as they monetize puts, we could get a tailwind. We need a tailwind. Okay, S&P 500. We need a tailwind. The tailwind could be as simple as puts monetizing. These puts lose value quickly as we rise. So the more people just say, okay, that's it. I'm done for today. Take their profits and run. We could get a bounce. I'm not going to bank too much on it. I don't think there's a chance we get back to 6,900. So somewhere in between, like 68.80, maybe 68.80 on the call side. Maybe that works. Okay, so we are moving a bit higher. Puts are losing value. Let's see if calls can do it. I need to take a couple minute break. I'll be right back. something. They have some job. They could be plumbers. They could be, painters or whatever. And they're going to continue to do that to earn their income. But they realize to get ahead in this economy, you have to be owners of assets. And they are flocking to stocks and, channels like Yahoo Finance like never before, looking to arm themselves with information, looking to buy and hold. And so that's a real game changer. They're not looking to make money from sports betting or the lottery or zero DTE. It's more like informed decisions. I had one painter guy tell me, I spent 3-4 hours a night studying stocks, and I really believe in quantum, and I have a set of like quantum names that I believe are going to kind of fund my retirement account. So that's what's really charged me up this year is this sort of harnessing the power of this rising dynasty one. Like people saying, hey, I'm smart enough, but I have to take responsibility to get ahead and to create some generational wealth for my family. And I think the stock market's the way to do that.
It's truly one of the most amazing times to be an investor. I'm so excited for next year. And Eric, on personal, you've given us a lot of your time this year. I thank you for it. Happy New Year, my friend. I will talk to you in the new year.
Have a great 2026, Brian.
I appreciate it. All right, that does it for Morning Green, presented by Robinhood. I'll be right back on Opening Bid, where I'm going all in on celebrating Warren Buffett's investing.
Feel like you missed the memo? Stuck in limbo, staring down the barrel of yet another ad? Forget the 1,000-ad stare. Relax and spend your break times better with Candy Crush Summit. It's free to play. There's no Wi-Fi needed, and we could probably clear a few of our 20,000 levels before this ad break is over. Download Candy Crush Saga today and make it your own. And now, back to you.
You could save thousands by refinancing your student loans with Earnest. What does thousands really mean? That could buy 438 unicorn pool floats, or enough ramen to reach the moon if stacked into it. A first-class trip to Europe where you find yourself, but mostly buying one of cheese. Lower rates, flexible terms, and zero fees. Your future self will thank you. Visit Earnest.com today to check your rate in just 2 minutes. No credit impact, no cash.
Sensitive skin is a science. It needs uniquely formulated skincare, backed by over 75 years of clinical research.
Designed to care for dry skin,
For uneven skin,
for oily skin,
for tight skin,
Sometimes sensitive skin.
for everyone's sensitive skin.
Cetaphil, recommended by dermatologists.
Witness news as it happens, 24/7, live, raw, and uninterrupted.
Just incredible videos.
Around the clock, live coverage as it happens. Stay engaged, stay connected, stay tuned to Live Now from Fox.
With the VSP Individual Vision Plan, you're the one pulling the strings. Because taking care of your eye health after retirement comes with a lot of decisions that only you should make, like choosing how to save on the lens enhancements you need, the right name brand frames for your style, and choosing your eye doctor from the nation's largest independent doctor network. Even how you enroll is up to you. Make the best decisions for your vision at the eye doctor's office, retail locations, and online with VSP Individual Vision Plans.
What's that? Might be some kind of panel. Need to restore power quick.
Machines are hoping.
Decisions overtake penalties. They will finish the exterior in a matter of minutes.
Good morning. Welcome to Opening Bid. I'm Yao Finance Executive Editor Brian Zazzi. Congrats, folks. We have made it to the final trading day of 2025. And congrats to you on all those epic gains you're sitting on in your portfolio. I know it took a lot of hard work to make that happen. And to that, I salute you. While I would love to shower you with more praise, I have to share what else is on my mind today. And that is the OG of investing, Warren Buffett. 95-year-old Berkshire Hathaway CEO Warren Buffett officially hands over the reins to his hand-picked successor Greg Abel today. The passing of the torch capped a storied career for Buffett, which included buying a major U.S. railroad in early Northern, striking up a friendship with Microsoft co-founder Bill Gates, and offering up scores of pithy comments in annual shareholder letters. And naturally, I've learned more from him than it being okay to have a full sugar Coca-Cola and a Dairy Queen hamburger from time to time. Here are 5 things I have learned specifically from the Oracle of Omaha the past 25 years of my waking life. First, you can be a ruthless business person, but you don't have to be a total jerk in the process. Buffett is viewed as having done business in a right and honest way. Good to see. 2, saying no is a powerful tool in life. You have never seen Buffett do 30 TV interviews a year, even though we all want him to. He has been able to channel all his focus on building a successful Berkshire empire. 3, it's great to be the go-to person. In times of crisis, Buffett has been the person to visit for a loan or great advice. In turn, that has allowed Buffett to make great deals for Berkshire shareholders. 4, having an amazing business partner is often critical to success. Berkshire Buffett wouldn't be where it is today without the guidance of longtime owner Charlie Munger, who died in 2023. And lastly, know when to strike. Buffett has scored favorable deals and investments because he knew when the time was right to strike. All right, lots to get here with Buffett. Big day. Let's keep the Buffett vibes going here. Here in the Open Bid Roundtable, Lisa Schreiber, Rating Investments Associate Portfolio Manager, Gregory Zuckerman, a special writer at the Wall Street Journal, and Kathy Seifert, CFRA, VP Equity New Research. Gregory, I'm going to start with you here. You wrote a very fascinating piece on Charlie Munger not too long ago. What did you learn from putting that one together?
Well, Charlie contributed a lot, as we know, but he also was the kind of guy who would keep them avoiding mistakes as well. Be it Warren or others like Berkshire Hathaway, they're going to miss it. They're going to miss Warren, frankly. I don't think enough focus has been paid and attention is paid to the fact that they've got a $300 million investment portfolio. In fact, they're just going to run it right now. Todd Combs is leaving. We have one investor left, Ted Weschler. Now, Charlie said to me, well, I'm not that concerned. We have principles in place. We have a way of doing business, looking for new investments. The jury's out on that.
Greg, I also loved your story that you came out with recently about the CEO sold his business for $1.7 billion to Eaton, paid out, $240 million in bonuses to employees. I mean, it was an awesome story. Hats tip to that CEO. Was he at all inspired by Warren Buffett?
To some extent, I think everybody is. As you had kind of suggested in your opening remarks, it's in our DNA at this point. As investors, people in the business world, to some extent, do the right thing. Be careful what's on the front page. You don't want this on the front page of the Wall Street Journal or somewhere else. What you've done, not everyone has listened, but yes, that executive and most others in some way has been influenced by Warren Buffett. The crazy thing is Warren Buffett in some ways doesn't get enough attention and appreciation. As an executive, but also as an investor, he's responsible for large part for this huge investment in Apple, which has been their biggest home run. So he's going to be missed.
Kathy, how has Warren influenced what you do?
Oh, that's a good question. I think he's influenced the way that I look at other executive teams, and the way that to one of your initial points was that you can be a tough business person, but you can also be a decent person. And I think that's certainly true with Buffett. I do take a little exception to some of the comments about some of the acquisitions. I think there's been a little bit of a mixed bag. And, I think what we're seeing, what we saw this year was kind of the Buffett premium being extracted from the shares. And I think as we head into 2026, you've got a pretty significant company at a very important inflection point.
Kathy, can this business, as Buffett has constructed it, can it look like this 10 years from now?
That's a really good question. And I think the thing to look for is the degree to which that Greg Abel tightens up some of the operating.
Okay, no follow through on that push higher. We got rejected, as Grover was saying, at the 105. Period moving average on the 1 minute futures chart. We pulled back.
And those changes may also portend some structural changes, whether or not the very decentralized management style that Buffett personified, whether or not that remains intact, I think is the one big thing to look for.
Lisa, seemingly every day this month, I've been talking about Max 7 stocks and the valuations on these stocks, and they're all trading above market multiples. Investors continue to buy them, especially on dips. Is Warren Buffett's
Okay.
on value investing, is that relevant today?
Absolutely, it is. I mean, it's
Higher low printing on the S&P for now. We need to get through this area. Futures need to get above 69.23.
generations of investors, right? With his perseverance, his patience, his value he had, and we can still learn a lot today. And his advice is timeless. What he said 50 years ago is still relevant today and is ever relevant getting into 2026, right? And I think what we can take from that is, hey, stay true to yourself, stay true to your philosophy. It's time that counts, and be in it for the long run, and you will come out on top on the other end, right? I mean, when we look at the most famous quotes, investing quotes out there, a lot of them are dropped by Buffett, right? And a lot of that is very timeless and still very relevant today.
Lisa, is there value to be found in this market? And is value being, in the Buffett sense, being redefined given how powerful the AI revolution is playing out?
I think Buffett kind of mainly stayed on the sidelines over the last couple of years, right? Seeing a huge cash pile of over $380 billion, right? And I mean, it's just a huge number, but I like to put things into perspective. I mean, thinking of P&G, for example, household staples, that's the market capitalization of P&G, basically. Or Netflix, for example, a little bit higher than that, that's comparable, right? That gives obviously a lot of wiggle room for his
All right, starting to move a bit higher. Can we get something going? This is really boring.
Buffett stayed on the sidelines for the last couple of years and was a net seller of stocks. There's still a lot of value in today's market, given the overall valuation is still high, extended. We have a lot of market concentration, so we have to look a little bit closer for value there. But
VWAP overhead.
money to be made in that.
VWAP just overhead. At 68.82-ish. Yeah, that makes sense. 68.80, those calls we were looking at a few minutes ago.
Who is the next Warren Buffett? I would argue Bill Ackman is taking his shot. I mean, these are two wildly different people.
Oh no, Ackman doesn't qualify. It's funny, a lot of the people we end up writing about are kind of older, past 50, 60s. The younger generation, they're hidden in these like pods, they call them, within these big organizations that Steve Cohen and other people, hedge fund managers, run. They don't embrace media, unfortunately.
That's not right, Greg. What's wrong with these guys?
I know, we got to get them out of their little pods and holes and come to the surface. But they just don't have these kind of records. They don't have to manage the same kind of money. I think over time, what's been fascinating about Berkshire is the amount of money they can manage. I mean, even people like, Jim Simons and other kind of classic investors gave back money. David Tepper pushes money back to investors consistently, and yet Berkshire kept getting bigger. That's what's remarkable about Berkshire. It hurt their returns over time, but no one has been able to manage this kind of money.
Greg, when I went to the Berkshire meeting 2 years ago, I was at the bar after it ended, and in walked this guy. I told my teammate Miles of the car, Henry News, was there with me. I'm like, that's Greg Abel. I recognize him. He's a little shorter than I thought. Over shook his hand, said hello, and that was it. I didn't want to bother him, but what do we really know about him? We've seen his track record. He has not been missing out there doing his things. He hasn't really given a big giant profile per se. Like, what do you really know about him?
Yeah, it's a great question. We're struggling to some extent. He's an accountant by trade, by profession, and by nature. So, he's not a showman.
I just posted in the trading room top 5 tech stocks. The top 5 tech stocks with the lowest PE. NVIDIA is number 1. It's got a forward PE of around 23. We're also looking for increasing earnings growth, positive earnings growth, and positive revenue growth. Altogether, that puts NVIDIA in number 1 spot. Taiwan Semi is number 2 at a 28 forward PE. They dominate the foundries for AI chips. Google's number 3. Okay. Seagate Technology has been growing like crazy. That's number 4. And then Broadcom's number 5 with a forward PE in the mid 30s. Futures just does not look like it wants to follow through. The New York Fangs and most stocks are looking kind of tepid. Very few stocks advancing on the NASDAQ. This is kind of an odd day. Very odd day. 52 stocks on the S&P 500 are advancing. Okay. So 448 stocks are declining or unchanged. We only have 9 stocks on the Qs advancing, back to 8 out of 100. So 92 stocks are declining or unchanged. And IWM is only 324 stocks out of 2,000. Very odd end of the year price action. Throughout the year, I can't remember a day where we had, 7 stocks advancing on the Qs, 52 stocks on the S&P. I mean, I'm sure there were days, but I just don't recall them off the top of my head. And this being the last trading day of the year is kind of odd. So how am I playing it? I already told you about 1 million times now. Call flies, expecting that there could be some upside. I don't want to miss it if it happens. Cheap way to play that. Call flies, 69.50, 75, 7,000. With 69.75 being the center of the butterfly, that probably cost you pretty very little today, about 120, I would think, 125, with a payout of around $2,000 per fly that you take. I have 7 of them for now. And, if it does work, if it doesn't work, I don't lose a lot. Cheap bet for under $1,000 that pays out more than 20 to 1. And in case the markets do melt down, if VIX starts to spike, I have the February 20 call. That's it. And I got a bunch of other things that I have right now that are long only in my investment account. TRBCX being one of my largest positions. Okay. Here's the weekly TRBCX. Inside week, 2 weeks up, pause. 2 weeks up, pause. That seems to be the pattern for the most part. 2 to 3 weeks up, we pause. 2 to 3 weeks up, we pause. The most we've seen since the April 7th low was like 5 weeks up and then a pause right here. Okay, that was back in June, July. Okay, we had those 5 weeks up. We paused. We went higher for another 2 weeks, pause. 3 weeks up, pause. So that seems to be the pattern. So I'm not taking on a lot of risk. I added to Oracle this morning. Looking to buy some Micron on the dip, some Palantir on the dip, some Nvidia. Nvidia's starting to turn up. Other than that, I'm just kind of keeping it slow. I'm not doing a whole lot today. Last trading day of the year. Got tomorrow off.
Out there that resembles Warren Buffett. And then secondarily, in times of crisis,
Adobe, I'd like to close this Iron Condor. I'm not in a hurry. I have a tendency to close them too soon. This one doesn't look like it's going to do anything. Adobe got into this one at the right time, back into it, I should say. Took it for earnings. You know the story with the earnings. Took the call side off on the dip early in the morning, that big white candle. Took it off here. Okay, we had Iron Condor into earnings right there. Okay, so we took the call side off in the morning because we dipped. Took the call side off at the low. Those got crushed. And then when the market started to bounce back up to the highs, the same strikes, by the way. We took the put side off for a nice win. 2 or 3 days later, I took the same trade right in here. Took the same trade. I saw that the Bollinger Bands were still pretty wide. Implied volatility was pretty high. So we sold 10 of these for $1,300. And I know you've heard enough of this, but right now I could close this for $1,000 profit. I don't think I'm being greedy by waiting. I could trade it for, actually, I could get out for $30 right here, 38, $35. Do I want to do it? Probably not. Tomorrow's off, so Theta will kick in some more. Maybe we'll be able to get out of these for like $20. I'm going to put in a limit order to sell this, to buy it back at $30. All right, so that'd be $1,000 total. If I get out today for $30, that'll be good. Good till canceled. $30. Adobe, I put in a limit order to sell it at $30, so that would be a $1,000 profit there. The good thing about earnings season coming up again, a lot of people don't like earnings season. I do personally, because I love to sell Iron Condors. You know, you can do one of these a day, you know, for the entire week. Close them the next week or at the end of the week. Most of these make really good profits. Okay. With the exception of Micron, which bolted a lot higher. Micron's still at highs, just off the highs. So Micron, we wound up closing this one for a loss. It's kind of a little deceiving. It's not really a $2,000 loss because I bought calls as well. Calls are up quite a bit. So this is closer to a $1,000 loss. Overall, since we started doing it this way, I started tracking these so that you guys could watch it during earnings season. Since November, that's $20,000 in profits. Okay, just doing Iron Condors and credit spreads on Palantir. So, watching the S&P, see if we can't get something going here. I really should just let this thing go. Really should let it go. I want to take one of these all the way to expiration. Yeah, I'm going to close that trade. I'm going to close it. What I will do. All right, let me change the limit. Let me change the limit to $10. $10 per. That I can go with. If I can get closed at $10, that'd be good. $10 limit. 10. So it'd be $1,200.
I used to until I found the spinny scrub.
Okay, $10.
Showed you why this little powerhouse is a total game changer. You can also scan the code on the screen now and find out more. This is the spinny scrub, your new best friend when it comes to cleaning. It's got a powerful motor that rotates at high speed, so no more scrubbing by hand. It comes with 5 different brush heads, so no matter what you're cleaning, you've got the right tool for the job. From your bathroom tiles to kitchen countertops and more, the spinny scrub has you covered. So if you want to make cleaning faster, easier, and way more effective, the spinny scrub is your answer. And right now, if you order today, you'll get 20% off. Trust me, your cleaning routine will never be the same. Go ahead, scan the code on your screen right now and get yours today. You'll thank me later.
Warren Buffett officially stepped down as the CEO of Berkshire Hathaway today. Ahead of this, I got the chance to speak with Brooks running CEO Dan Sheridan about Buffett's biggest leadership lessons and what's ahead for the company's high-performance running shoes. Brooks has been owned by Berkshire since 2006.
So what's happening in our space right now is the material engineering is just accelerating at a rate where I think what you're going to see is the heights are going to kind of minimize here because you don't have to put as much foam underfoot because the engineering of the foam is so good. It can dampen and give you cushion and give you resiliency and energy on your run.
What's your big innovative bet for next year?
Yeah, well, it's definitely in performance categories. So this is a good example, but we're also pushing into trail as well, and a lot of innovation in trail, and then daily trainers. Again, the midsole compounds are just incredible now. So you can get multiple factors out of it. You can dampen and cushion and still get resiliency and energy. And so we're working that puzzle, and we do every single day at Brooks. Why trail? Why trail? Trail's one of the fastest growing categories globally right now. We think it's a bit of a push off from the COVID era when people wanted to be out in the outdoors and in the space. And so light hiking, road to trail, and then top of the mountain. UTMB is an ultra marathon in the French Alps, and no, God, not me, but we had
Okay, Netflix trying to push. All right, Apple. All right, seeing more short covering now. Short covering.
Last time we talked was actually for my opening bid of the podcast, maybe 5 or 6 months ago. It was the height of the tariff hysteria. Now that we're somewhat behind, that tariff's still in play. How much have your costs gone up because of these tariffs?
Yeah, so
Hedge flows. All right, we're trying to make higher highs and higher lows. This could start a trend higher. Okay, looking good here. Looking good.
We really tried to take a full supply chain approach to this. We didn't want to punish the consumer, so we were thoughtful and intentional in price increases. But we'll have a slight price increases on our products.
That doesn't sound like very much. How have you been able to only raise prices 2 to 3% when tariffs are what, double digits?
Yeah, I mean, it really is. We've worked with all of our partners all the way back to our manufacturing.
Okay, looking for this to continue. If we can get another higher high, higher low. Low of the day. Okay, we're starting to develop a wick on this candle, so it'd be nice if we could close back near the highs of the day. Not expecting it, but it would be nice. Futures are above the 105 at the moment.
Sales pressure from 25 to 34-year-olds. Yet your third quarter sales up double digits, like 17%. Why do you think that disparity?
Yeah, well, it starts with participation in the sport. It's at an all-time high. New York City Marathon had 200,000 people that wanted to get into the race. 55,000 are going to run. London Marathon, 850,000 people tried to get into London. 60,000 people are running. So participation's at a level that is driving our category. And then people are paying for performance products to improve their experience on the run.
Yeah, tennis and trainers, they're freaking ridiculous. $150 for a pair of sneakers. It's just totally ridiculous. Come on, can we get something going here? This market is so sleepy. Sleepy, sleepy.
Is that the future? Do I want to see something that looks like a leg bracelet stuck
we may take a
Okay, here's the sectors again.
power your journey.
Still off quite a bit.
So we try to innovate for real
0.1%, almost at 0.2% on healthcare. Okay, so these have shifted a little bit. Energy is still off almost a whole percent. Can we get more short covering?
All I know is what our approach is, and that approach is we're going to do real innovation that improves, reduces.
All right, Palantir, starting to see a little bit more short covering across the board here. Okay, Microsoft is pretty clear. The change in direction here on Microsoft. Watch these stocks, Microsoft. Okay, coming off the low. Okay, what am I doing with Microsoft? Do I have a position? I'm pretty sure I have Microsoft, right? Microsoft, let me just scroll over here. Oops, where are you? Microsoft, there you are. Microsoft. Microsoft from the low. Okay, so I have Microsoft February calls. Okay. Microsoft.
I always say I've got the greatest job in the industry because of our ownership structure.
Yeah, it's been fascinating to follow both of your journeys, Dan. Good to see you. Let's see you in the New York City Marathon next year.
I would love it.
All right, good stuff, Dan. Good to see you as always.
Before I go, I want to wish you and your family a happy and prosperous new year. Every single day, I wake up at the crack of dawn thinking how I can help you, the passionate Yahoo Finance investing community, build wealth and live a better life. It's a mission I take super seriously. I'm very grateful for your support each and every day.
Microsoft,
As they say,
watching.
see you in the new year.
See if that can follow through. We got shorts covering, it looks like. There goes Netflix. Netflix on the move. It needs to get it back above 100. Netflix got a ways to go. Another $6. Palantir turning off the low. So is Micron, Oracle. These are all looking better. NVIDIA's turning off. Okay, NVIDIA. Let me see NVIDIA. NVIDIA, what do I want to do with NVIDIA? That's number one. Lowest PE with the highest probability. Earnings growth. Revenue growth. Okay. NVIDIA. NVIDIA looks like it might move here. NVIDIA. NVIDIA. I just bought some 190s for February for $10. Vertical. Bought the 190, 195 for February.
So you mean our phones will always be charged so we can still doom scroll in a power outage?
The Rescue Volt 7-in-1 power station is travel-sized and ready for any emergency. And yes, it charges your phone too.
Okay, great. So I got to push myself this.
It makes a great gift. Order now and get 50% off plus free shipping. Scan the code on your screen and get your Rescue Volt 7-in-1 power station today.
He needs the talking points before he leaves. Now.
Okay, there goes Microsoft. Okay, Microsoft bought a scalp here, 45s. See how far we go with this for Friday. Microsoft, that's it for now. That's enough speculation. Need to see the markets do something more productive. Microsoft bought the January 2nd calls. at the money 485s. As a day trade, NVIDIA day trade for now. I did buy February's just in case I need to hold on to these a little bit longer, or if I turn out I like this by the end of the day. If S&P can continue trying to put something together in S&P, trying to put something together. Microsoft still climbing. Let's see what NVIDIA looks like. NVIDIA just grinding along. Okay, so I bought February's for NVIDIA. I like NVIDIA. I posted in the room a few minutes ago. The top 5 stocks in the tech group, tech AI /AI, with the lowest PE, with the highest earnings growth. Number 1 was NVIDIA. So NVIDIA is just kind of puttering around just above the 50-day. I expect NVIDIA to take off next year. So I'm playing the February's for now. I'm not going to take on a whole lot of risk. We do have the call flies on S&P that expire at the end of January. Already talked about that ad nauseum. And the puts, excuse me, the VIX calls. VIX calls. All right, so as VIX starts to rise, these calls start to get some IV as well.
And if they are positive, and this is why it's an indicator, that portends a bullish year. And if it's negative, well, odds are just slightly that we might have a negative year. There are 3 total indicators that we want to take into account for the month of January. So it's not the final word, but things are looking a little bit bearish for 2026 already. Can you believe that? 10-year T-note yield is up 1 basis point to 4.4%, and 30-year is flat at 4.81%. You can see it's just been chopping around.
2026 is going to be bearish because of what? We're at all-time highs. 10-year yield is up. Dollar's up a bit. All right, so this is looking pretty good. NVIDIA. NVIDIA is on the move, starting to move here. NVIDIA. S&P is back above, trying to get above VWAP now. S&P trying to get back above VWAP. Oh, this was recorded earlier. See if they can turn it around in the new year. And Netflix, nice little pop on Netflix. NVIDIA is trying to push more, so is Microsoft. Maybe we'll get some follow through. If Apple can push a bit higher, we would see potentially that lift the markets as well. Okay, we're right at VWAP, not following through yet. S&P. Okay, NVIDIA.
Yeah, I mean, it's really been an interesting year. Shares down about 16% on the year, as you've been talking about. And of course, China has really continued to be that story for a lot of retail companies. But what other stocks do you have on your mind?
Yeah, let's look at Hyatt Hotels. Shares are down today by about now it's actually about 2%. We know that the company now said that it expects full year adjusted EBITDA to be at the low end of its expected guidance. And the company also said that this is largely due to
all sectors are off today. They're all red, so it would take quite a bit for these to go green on the day. That said, we have some stocks that are moving off the lows, so it looks like some activity in some of the tech related names like Nvidia, Netflix coming off the low, still hanging out in the 94 zone for the last couple of weeks. Skydance, Paramount Skydance, still trying to do something with the Warner Brothers deal. I don't know. Did they lift their offer? Okay, BNAI, that one dropped off. What's going on there? BNAI.
Really, and just another red flag for the K-shaped consumer. There are, of course, always biotech firms that have massive gains and massive losses. Today is no exception, particularly in such thin liquidity days like this. But Corcept is one that you've been watching, and I remember this one because I couldn't help but think about The Last of Us and the cordyceps and how the two might be linked. But Corcept is a biotech firm out there. What's going on there today?
Exactly. So shares are down by 50% today. It's a pretty big move today after U.S. regulators rejected the company's drug to treat a form of high blood pressure. So the FDA administration said, quote, the drug could not arrive at a favorable benefit risk assessment. CEO said that he is disappointed and surprised by this outcome. We know that Corcept was studying this drug, which is expected to treat patients with high blood pressure. Last year, interestingly, Corcept said that late stage trial of this drug met its primary goal. So we'll see how this plays out. And many analysts are still see some kind of optimism ahead. So maybe it's not the final decision.
Nvidia pulling back in now. Nvidia.
Down by 50% today and 30% on the year-to-date basis.
Yeah, a lot to really dig into.
Huh, interesting.
Movers on the day, but really the
Interesting.
activity. That's Natalia Kenny-Javich. Thank you so much for joining us. Now let's bring in Rohit Chopra to discuss the state of the economy this upcoming year. He's a former consumer financial protection
S&P rolling over.
also a former FTC commissioner from 2018.
S&P just rolled over. Everything's doing pretty much the same thing.
Kick some things off with the ACA subsidies expiration that we've been talking a lot about right now, Rohit. What exactly are these
Wow.
enhanced
Got rejected at former supply. That area overhead, VWAP. Volume coming in.
Gave people a little bit of a break on their health insurance premiums, but that's going to go away. And what we expect is that about 5 million people are going to go completely uninsured, and many more will likely move to plans with much higher deductibles and copays. I think the way this ends up playing out, it's not that people are suddenly going to get healthier, but we will see the costs for healthcare land in different ways. For example, I think we're going to expect much higher credit card debt for people who are having to put that healthcare expense on a credit card, or even using things like buy now, pay later in a healthcare setting. All of that, I think, is going to be a bit of a drag on consumer spending.
S&P is still drifting lower. That was a pretty big dump there. Hedge flows turning back down. Hedge flows.
Well, we're seeing actually a lot of people from all different demographics are going to get hit, because it's not just people who purchase insurance through those exchanges. Employers and small businesses, they are seeing their premiums go up and up. Some people dealing with over 30% increases. That could lead a lot of employers to slow some of their wage growth. It could also mean that people are going to deal with, less high quality health insurance. The statistics suggest that the biggest hits are going to be in southern states.
Shorts covering right here.
Florida. We'll see some big increases in the number of uninsured. So that's going to have to play through their
Markets, S&P's down 20 handles, 21 handles at the moment. Are we going to go back down to the low of the day like we did recently? Double tap that low.
Absolutely, and ultimately it's going to affect everybody in one way or another, right? I want to ask
Not taking on a lot of risk today. Makes a lot of sense. Call flies. Again, call flies if you think we could see higher prices by end of January. back to the highs. VIX calls, the 20 strike for February, if you want to hedge for downside. And we'll see how we start off the year. Everybody has their opinion. Apparently, Yahoo Finance is already predicting a lower or a discount in 2026 just because of what they're seeing.
After Wall Street and Silicon Valley, we have seen zero law enforcement actions taken against banks and financial companies that broke the law. And that is something that consumers are going to pay for. During my time in office, I think we recovered about $10 billion from people who were cheated on an auto loan or credit card. So I think people are going to pay the price for this.
Excuse me.
The Trump administration is looking to shut all of this consumer stop them so far.
And the Fed is now profitable, so it could potentially power the CFPB, which was, a point of contention for some time. Now, the agency, assuming that it does work through some of next year at least, has 24 items up for consideration at the moment. Will any of those rules get written, do you think?
Well, it seems like they want to do everything they can to deregulate and let those who want to break the law do it more brazenly. We don't know what's going to happen, regardless of whether the court allows this to go forward. This entire year, we are seeing increases in crimes against consumers, and there's not much being done about it. Now, there's an exception to this. The state attorneys general of the states in the U.S. have some law enforcement power. We have seen some of them step up, take action, filing lawsuits against banks like Capital One and tech companies. But of course, that's never going to be a full replacement for a true federal law enforcement agency charged.
And I should just mention, you actually work for the state's attorneys general, right? You're leading their consumer protection and affordability working groups. We just want to put that in.
I help them think through how are they going to step up to be able to prosecute some of these crimes that are happening, especially ones that are making life more expensive for people.
What does today's data tell you about the financial resilience?
Nice little bounce. That was a quick sell-off, right? Somebody took some profits. Do we have any information on the JP Morgan yet? Let me go check. Let's see what Brent's talking about on Twitter. See if he's on here.
Consumers experiencing some real stress. So you talked earlier about that K-shaped economy. It is clear that while people on the high end are really spending, people who are living paycheck to paycheck are finding that the treadmill is getting faster for them. I think this is something really to closely watch in 2026 about whether they are going to struggle even further and how that might affect the macroeconomy.
We're not quite seeing it in the labor market data yet, though, Rohit, are we? Are you anticipating that the jobs report that we get next Friday, for example, will start to show a weakening labor market more, or will it take some months into 2026 before things like student loan delinquencies and so on get eased?
Okay, so Europe is closed, right?
The impact on young labor in particular.
It's really hard to say, and some people don't even know if we can fully trust the data. I think that we are clearly seeing some weakening in the labor market. One thing to really look at closely is to what extent is AI already causing employers to really not go big on hiring when it comes to young white-collar workers, those young college graduates. Many of them, of course, are already facing a lot of student debt, high housing costs. That's going to really make it tough for that demographic in particular. I think we're also seeing people quit at lower rates, not seeing a lot of places that they could move to new jobs with higher pay. So it's really tough to predict, but I think it's obvious to many people that, especially for younger people, but lots of other demographics, there's just going to be fewer opportunities than there were. say 2 or 3 years ago.
Rohit, thank you so much for joining us today, and Happy New Year to you. Looking forward to chatting with you again in 2026. Rohit, of course, former FTC director, former FTC commissioner, and of course, currently works.
Okay, what's INBS is trying to make new highs here. INBS.
Do stay with us. We're going to take a look at the year's winners and losers.
INBS.
Who do you call?
INBS continues looking good. Intelligent Biosolutions, INBS, continues trending higher. Looking for Microsoft, NVIDIA, and the rest of these to catch some higher highs, higher lows. Maybe catch a bit at some point. At some point today. Oh, it's 12:16. Let me switch gears to see what they're saying over at CNBC.
Really, where we see a lot of robust data center demand, in particular for Virginia. And ultimately, natural gas is going to be a power generation solution for that data center demand. So I love the way this company is positioned. As I've said, I've owned it since the mid-30s in 2024, and it really hasn't even had the benefit of a rise in natural gas prices. And when you look at how this company is hedged out going into 2026, a rise in natural gas prices would really benefit them because they're largely unhedged in that regard.
Yeah, I like your call, Joe. I just want to point out, you said natural gas pricing is a little lackluster. It depends on your time frame, of course. You go back two years ago, natural gas was trading under $2. Now it's a little bit under $4, and that's I think that's basically what the energy sector has been riding on all year. It's certainly not crude oil, which is down whatever it is, 20% year to date. Natural gas is strong, and it's going to be strong for exactly the reasons you pointed out.
Okay, S&P moving back above the 105. S&P.
Wall Street Journal article, I think yesterday, about how CAT is basically building its natural gas-fired generators as fast as it possibly can to allow data centers that don't have connections to the electrical grid to power themselves.
There's so much going on with alternative energy, but my view on energy, traditional energy, is I haven't changed. It's a very, very difficult sector to make money in. It's very situational. That you can, if you put up a 10-year chart of a Chevron or any of those, you're going to see that's basically flat. Now, it may not include dividends, or not. I don't know what they use for charting, but I don't even know why you waste the time. I'm not saying on an EQT, there are idiosyncratic stories that do make sense, that do work out. But overall, I mean, you can make a lot more money elsewhere and save a lot of aggravation. Even the chart.
S&P, the likelihood of getting rejected here again, yes, pretty high. Pretty high. Look at the volume, though. Watch the volume compared to the last time we hit VWAP. Look at the volume here. Okay, so we can push through this area. We'll see. I'm going to take a couple-minute break. I'll be right back.
Energy investing is difficult. Also understand.
I also think it's rigged. Well, I think it's rigged not in the crooked sense, but that there are some very large players, some players that only do that, and they control the markets. I'm not insinuating that there's crooked or anything illegal. I'm just saying it's rigged by those big players and where they want it to go, and the leverage they use in the futures contracts. And then you have the Saudis and all the others. So as a tourist there, it's very tough.
Well, the commodity space is very concentrated in terms of the pool of participation. So in fact, that ultimately what you're describing could occur. But there are some in the energy sector, some winning names so far year to date. ExxonMobil, I think, is close to a 52-week high. So you don't want to completely disregard it. I know when you speak to a lot of financial advisors, what they're saying is, okay, we're going to extract the energy from our portfolio because it's only 3% roughly of the S&P. We understand President Trump and his administration want lower energy pricing, and guess what? We are going to place in the portfolio utilities as the alternative to energy because we like where utilities are with the AI data center demand.
And just keep this in mind, one more point. If you overlay that XLE chart against the S&P or NASDAQ, you'll see that go way on the bottom. The underperformance is stark.
We keep touching on this AI data center trade. I want to bring up the news today. NVIDIA getting an order for about $16 billion from ByteDance. I think that leads us to one of our next picks in the chip space. Steve Weiss, going to come over to you. TSMC, this $16 billion order from ByteDance to NVIDIA. A pretty exciting thing. I think it has to change some of your sentiment when it comes to NVIDIA from earlier this year. NVIDIA's had some certain volatility as well. And I think people have changed their thought. At first, there seemed to be in the middle of the year some thought that the chips might be commoditized, and the TPUs came out. There might be a rise in competitors. Then you see this. Yeah. So I want to go to your pick, though. TSMC. How does this news shape your view of TSMC and that thing?
It's ratification. First of all, I do own NVIDIA. It's a much smaller position in Taiwan Semi, which is my largest position. Look, Taiwan Semi, they're agnostic. It could be the new Alphabet chip. It could be a Meta chip. It could be an Amazon chip. It could be an NVIDIA chip. It's being made at Taiwan Semi, chances are. And Taiwan Semi, it's not just a manufacturer, it's also a design company. The biggest risk, of course, is a Chinese invasion, but, Alibaba's in China, and they're still operating, and I own that. So I think Taiwan Semi, it's growing cash flow, EBITDA at 20%, revenues 20%, operating income at 20%. Its EBITDA margins, its EBITDA multiple is about 11, 12 times. Think that versus NVIDIA, I'll just guess. I'm going to put NVIDIA at 30 times. And it's much more predictable earnings. And it doesn't have to worry about the competition. So that's why I like the PE's 20 times. So it's a 1-peg ratio in this market with the value of those assets. It's ridiculous. So that's why it's my largest position.
We got another pick in the chip space, Jimmy, coming over to you. You previewed this yesterday. You were talking about this company yesterday, shifted away from mobile phones.
Yeah, well, that's Qualcomm. And I do think that it is still too much regarded as just a cell phone chip manufacturer. They've done a great job diversifying, first and foremost, into automotive, but Internet of Things. And both of those aspects of their businesses are growing at 20% year-over-year compound annual growth rate. By the way, that's not just a one-year, hey, flash in the pan. That's what they're actually projecting through the end of this decade. Add on top of that the data center chips that they are now going to be putting into the Humane project in Saudi Arabia, and they look like they're going to be a legitimate player within the data center space. So you're getting this stock well diversified at 14 times earnings, 2.2% dividend yield, basically no net debt on the balance sheet, which means they can do any of a number of things, some strategic acquisitions if they want, maybe do an accelerated share repurchase. I just see an asymmetric trade here, likely that it goes higher as opposed to going lower from here.
All right. While we're talking about the mobile phone business right now, I want to shift over to Apple. It's been an underperformer within the Mag 7 this year, setting the stage for a pivotal 2026 as its AI strategy comes into focus. Our Steve Kovach joins us now with a good look at what's at stake. Steve.
Yeah, Frank, it was an underperformer. But if you look at the chart since August, we're still showing year to date right now, that's 9%. But since August, after that deal with President Trump to kind of alleviate some of the worst of the tariffs, it's up about 35% or so. So that's one issue that Apple got through this year. It's the AI issue. That's the big one that happened this year, and it's going to bleed into next year. We all know back in the spring, they failed to launch that AI upgrade to Siri. They did a huge executive shift around to kind of get everybody in place to actually make it happen. And now they say it's coming next year. Most people think we should expect to see it in March. And while so many people are talking about this thing, that it's going to happen and it's going to be a boost to the stock, we need to talk about how that will play out. And the biggest thing is you got to remember that Apple Intelligence is being given away for free. It's part of your phone when you buy a new iPhone. So not only does this product have to be good and amazing, it has to be so good and so amazing that people with an iPhone 15 or lower have to go out there and get a sense of FOMO to buy the new devices in order to use it. There are, of course, some chances that Apple will change its mind, maybe charge a subscription fee, or there are even some talks about individual services like the Fitness Plus service, adding some AI juice, so to speak, into those services in order to drive subscriptions there. But really it comes down to nailing this AI chatbot with Siri, making sure it's good, and then beyond that, using that to move more iPhones. So I'm curious to see how you guys are thinking about that going forward too, guys.
Our Steve Kovach back at CNBC headquarters. Happy New Year, Steve. Good to see you very much. Joe, I'm going to come over to you. You're an Apple shareholder. Just your thought about what Steve had to say. And also, I don't know if you were watching yesterday, we actually had Josh on saying Apple's been winning recently, but not playing. That's kind of where they're
reference some of us were talking about by staying away from the CapEx race and staying away out of trying to compete. And that's really where they've kind of gotten an advantage over these last couple of months when it comes to the stock. Steve pointing out, since Tim Cook was at the White House, stock's up about 34%.
Yeah, well, that's the Apple playbook. So I agree with Josh's remarks there, because in fact, what they do is they sit back, they look at a product that's brought to market, and then they see if they could ultimately perfect it in some regard in a mannerism which doesn't involve significant capex. Steve is right to point out that in August, the meeting between Tim Cook and President Trump, from that moment in the Oval Office, there was a very clear trade that you were able to take advantage with Apple and participate in nearly a 40% decline. And if you observe right now the Mag 7, there's a lot of conversation about the Mag 7 and the concentration of the Mag 7. I don't think you want to move too far away from the Mag 7 in 26. But when looking at the momentum right now, it is Alphabet, it is Apple, and to a lesser extent, more recently, you have some strength in Amazon as well. Those appear to be the three names where you have the strongest momentum. I expect a very good year for Apple in 2026. I think we are going to learn more and more how they are ultimately going to benefit and participate in the Apple Intelligence and overall artificial intelligence story. I wouldn't be surprised to see them partner at some point with Alphabet, maybe with Gemini 3. But I think 26 sets up nicely for them, for us to get what we've been looking for the last couple of years, which is full clarity, and then also realize I think you're going to get the return of significant growth in China, and that's going to benefit Apple as well.
Jimmy, quick question for you. Steve's pointing out that Siri has to be so good it's going to make you want to upgrade your phone. Do you see that setup coming up for 2026?
I don't.
Apple Intelligence, excuse me.
Look, why do I own this stock? First off, because it's in the S&P 500 at about a 7% weight. So if you're not going to own it, you're going to say that relative to the S&P 500, and yes, I am a relative manager, that you're going to take one heck of a huge bet that Apple is going to underperform. Now, I am taking a bet that it's going to underperform because I only have about a 4% position in it. I kind of wish I didn't own any of it. You know, you were bringing up a second ago the PEG ratio on Taiwan Semi. I love PEG ratio. That's my favorite metric for any stock. It tells you if you're paying too much. Apple trades right now about 33 times forward earnings. This is for a stock that is projected to grow at 8% earnings per share over the next few years. Now, maybe that goes to 12% if they get AI right. Maybe. But still, it's just not priced at a level that I want to be even at market weight for it.
All right, we got to leave the conversation there. Coming up here on Halftime, retail's rough year in the playbook for 2026. Our Courtney Reagan breaks it down for us coming up after the break. Plus, Jim is ready with a move in the retail space. Stay with us. We're going to have that trade. Halftime back in just 2 minutes.
LTMH.
ONDS.
ONDL. ONDS. GBH halted down.
And welcome back to halftime. Retail's had a pretty rough year despite a relatively resilient consumer. But what could be in store for the space in 2026? Our Courtney Reagan joins us now with the details. Courtney.
Hey, Frank. Yeah, so the retail ETF, the XRT, it gained 8% this year. That is less than half the growth of the S&P 500. But after that massive sell-off and concerns about the impact of the April 2nd announced tariffs, the damage honestly could have been much worse. You can see it very obviously in the charts. The retail theme for 2025, in my mind, was sort of two-headed. The resilience of the U.S. consumer in the face of economic uncertainty and the ability of retailers to pull every mitigation level possible to blunt the consumer impact of tariffs. Now, consumer prudence did drive some of the bigger retail winners. Dollar General, Five Below, both gaining 79% in the year. Dollar Tree up 65%, but TJX up 29%, and Walmart up about 23%. At the premium end, Tapestry grew 96% after its deal to acquire Capri was blocked in late 2024. So the year turned out pretty well for Tapestry after all. Department stores Kohl's and Macy's stealthily gained 45% and 29% respectively, though UBS doesn't think the department stores will stay in the winner's circle with sell ratings for both of those names into 2026. And they can't all be winners. Target, Lululemon shed 28 and 45% respectively, both now getting new leaders. Target on February 1st, Lululemon, TBD. Walmart too. It will see CEO Doug McMillon retire and John Furner take over on February 1st. Jefferies tells investors it thinks the setup is more constructive and challenges from 2025 are improving, at least for some. So Jefferies has Nike as its top pick on its turnaround and suggests shorting On Running, while UBS puts On Running at the top of its buy list, along with Ralph Lauren, TJX, Victoria's Secret, American Eagle, and pressured Deckers. Frank?
Our Courtney Reagan. Courtney, you have a happy new year. Thank you very much.
Frank, you want to come to me on this since I'm clearly the only one that knows fashion and also the only one that put anything in their wardrobe new in the last 30 years.
I don't know if that's a fact. I think that might be an opinion-wise, but I'm going to go to Jim first. He made a recent buy on all the holdings in the retail space, but I'm going to keep everything you said in mind.
Well,
I'm serious. It's right back here. It's always in the back of my mind. I want you to know that. But Jim, I want to come over to you. You bought some on holding.
Yeah, well, brand matters in retail, and Steve, you are on brand with that comment. Look, I think that the retail consumer has really withstood a lot that has been thrown at him and her. We had the shutdown, which freaked people out. We had tariffs, which freaked people out. We had the resumption of student loans, and yet the consumer still keeps spending. Now, that might tempt one to say, hey, you can throw anything at the retail space and make money. That is hardly going to be the case. You have to pick stocks, as Courtney was pointing out with regards to Lululemon and Target. Let's not forget Saks, by the way, is looking like it's about to go bankrupt. So it's not an easy space to be in. You have to pick the winning brands, and On Brands is clearly a winning brand right now. We saw that in the last earnings report. I think we'll continue to see that in the all-important holiday season, which they will report in about a month and a half. And look, this is a stock and this is a sector that I'm more likely to rent than to own long-term. The instant that I see bad news on On's brand, I'm going to get out.
All right, there we go. On shares, pulling back about 1.5% right now. All right, time now for the headlines with our Leslie Picker. Leslie, Happy New Year.
Hey, Frank, good to see you. California extended commercial driver's licenses to March for about 17,000 immigrant truckers at risk of losing work next week. It comes following a federal review that raised questions about how the state handled expiration dates for non-citizen drivers. U.S. Transportation Secretary Sean Duffy said California may lose $160 million if it fails to meet a January 5th deadline to revoke the licenses. A new report says that U.S. regulators collected 61% less in fines for money laundering and sanction breaches in 2025. Total fines imposed for dirty money offenses were just under $1.7 billion, according to the Financial Times. It comes as the Trump administration's watchdogs have taken a more business-friendly approach and scaled back investigations. And Caesars Sportsbooks unveiled its most popular bets of 2025. Baseball dominated the list for the most bet teams, led by the LA Dodgers, New York Yankees, and Philadelphia Phillies. But the most profitable teams for the bettors were the Philadelphia Eagles, the Ohio State Buckeyes, and the New England Patriots. Something tells me that you're happy to see the Eagles listed in there.
I would put my money on the Eagles. I'm not a gambling person, Leslie, but I would put everything on the Eagles to go to the Super Bowl once again. I don't gamble. Have a great day.
Eagles, huh?
Coming up next year on Halftime, Berkshire's next chapter as Warren Buffett finishes his day as CEO. The committee's take right after this break.
Kind of an odd day. INBS trying to break out again. Get back above 10, I guess. INBS. Let's see. S&P trying to get back above VWAP. Not having it for now. All right, hope everyone's having a decent day. It is the last trading day of the month. Wednesday, December 31st, 12:36 p.m. I'm your host, Cousin Betty, coming to you from theclosingprint.com. Pretty slow day. Just doing a few things. Clerically speaking for the site. Other than that, not a whole lot going on. I did post earlier, about an hour and a half ago, the top 5 stocks I'm looking at. Lowest PEs with the highest increase in earnings growth and revenue growth. NVIDIA is number 1 in that list. So I'll be building a position in NVIDIA. As long as it stays above the 50-day, NVIDIA is fine. Microsoft, a little double dip here, making a higher low. Microsoft. Looking for higher prices on Microsoft. Shorts cover and call it a day, maybe earlier than yesterday. Let's see. NVIDIA trying to do something here. Just kind of sideways. Markets are neutral. I'm not expecting a whole lot. I don't need to keep repeating. I'm looking for the markets to drift higher into January, playing that with a call fly. And in the event things don't work out, there goes NBIS is starting to go. And if then things don't work out, I got VIX calls for February, monthly calls, so no big deal. The rest of my positions, most of them are longs. The usual suspects in my long-term accounts, TRBCX. Also, let's take a look at a few of these here. All right, so also in JEPI, JEPI. Pretty decent sized position in JEPI. About 15%. Also have about 15% in JPQ. Okay. About 25 to 30% is, I have to do the calculations, but TRBCX. That's my largest by far. TRBCX continues to trend. Since 2022, this one's been a good one. Also SPHD. Got about 15% in here, SPHD. This just keeps growing. Been trading this since 2014. Not trading, but investing in this since 2014. Okay, 2014. It went IPO in 2012, 13. I got into it in 2014. And every month, this particular ETF pays a dividend every month. So I have the dividends reinvested in more shares. And it just keeps building and building and building. Okay, so pays a nice dividend 12 times a year. The last week, the last dividend was last week. It's the last, it's like during the last 8 to 10 days of the month. So the dividend gets recycled into buying more shares. I don't need the dividend, so. What else? I also have some SPXL. I go in and out of this one. in and out of this. It's about 10% as well.
They have over what, $300 billion in cash. They have no concentration risk, and they have the optionality.
SPXL. Sometimes I'll flip between SPXL and SPXS depending on what the markets are doing in my longer term accounts.
This is slightly better at this point than a true show me stock. Really? Yeah, I believe so. I mean, you've got the legacy business, as you point out, but you've not only lost Buffett here, Munger, you lost, a couple of years ago. So it's the most significant change you could possibly have with a company where people didn't even know anything about Berkshire other than Warren Buffett. So now you have to work.
Can you separate the operations from the stock? The idea that Buffett premiums off the stock, at least for now.
Okay, INBS. INBS, for those of you trading it, INBS, that's at the highs right now. INBS is starting to break out. Cheap stock. Intelligent Bio Solutions. This one's being played by the risk-taking crowd. Small caps, micro caps, low float stocks. What's the float on this one? INBS. The float is 9 million shares. It's already traded 63 million shares. So if you were a share, the way this works out, okay, so the float versus the shares that have been traded, you could have gotten out of this 6 times over. It's a 6-to-1. 6-to-1 shares traded to float. So there's only 9 million shares of a float. So every single person that owns shares in INBS could have gotten it out today. All right, so you want to see that ratio high. Volume traded against the float. About 6-to-1. A little bit better than 6-to-1. Okay, so everything else. NUAI. That one rings a bell. NUAI. Have we traded that before? NUAI after hours. NUAI. Yeah, that down at the low. Nothing there. We got RCAT. That one was active this morning. RCAT. That's making new highs. RCAT. These are all risky stocks, so I would only do like 1 or 2% of my trading account if I was going to trade these at all. Okay. NBIS looks good. NBIS. No. INBS. Yeah, that's at highs. Okay, that looks good. Oh, boy. Slow day. What are we going to do here? S&P.
Enterprise Institute will join. This is Good Break.
Nothing. NVIDIA just sitting here. Microsoft trying to grind a bit higher. So there's a few people trading Microsoft, it looks like. Off the low. Day traders off the low. Look for sellers up here near 486, it looks like. Netflix trying to push higher. Netflix. Higher highs, higher lows on Netflix. Apple trying to turn here. Apple. Okay, Apple. I like Apple. Coming off the 50-day moving average. It came back to the 50-day this week. Looking forward to bounce again. Lack of momentum.
And we're back on halftime. Senior markets commentator Mike Santoli joining us with this midday word the day after your mystery broker was revealed. It was an exciting moment. I think the big headline is AI bull market goes for 2 more years.
No. The headline is it ends within 2 years, and maybe then we have a dark age. Okay, so the point is not like, hey, happy days for 2 more years. It's much more about, in his view, of course, which is very much contestable, that the secular bull market, this long-running phase we've been in since 2009 or so, is kind of in its latter throes. Now, that latter could be within the next couple of years, as he said, and it's mostly about the starting point evaluation.
Yeah, it's hard to believe we've been in the secular bull market since 2009. We've had cyclical bull markets, bear markets within, but this secular bull market started in 2009, and we just keep going.
We don't know if this is going to, I don't think there's magic to the 16, 17-year cycle, whatever he's talking about. But I do think
Okay, so yeah,
within that context, he repeated
the cycle the guy's talking about with Mike Santoli. Let's see if I can find it real here.
really believe that the transformative powers of the AI revolution are going to create
Multiple expansion continues.
every one of these cycles does. But we
Multiple expansion.
investment benefits of a lot of that.
All right, so we better enjoy these next 2 years. Possible dark ages after that. I want to switch gears with you. The last day of the
Dark
Buffett era,
ages.
so many of these
Jeez.
meetings. Your thoughts on this being Warren Buffett's last day, just the tremendous stock appreciation during his tenure, 5.5 million%.
I mean, obviously will never be replicated. I do believe he was shrewd enough to recognize one of the signature insights he had was that that the market systematically underappreciated the enduring power of certain brands, and you should pay a premium for these great things. Beyond that, I think as an assembler of great operating businesses, he's underappreciated. I think he's kind of people skew toward believing as a portfolio manager, he has racked up all those gains. But I also think that the conglomerate, it's the only conglomerate that's really working anymore. And I think
Okay, so this is pretty decent since the 2009 low.
I also think it's appropriate that he hasn't really done much this year actively in terms of putting money to work because he's willing to let these opportunities pass by when they don't meet his standards.
And doesn't that work in terms of setting the future up well for his successors?
Nearly 1,000% since the 2009 reversal. Nice.
Tremendous amount of optionality is being served up to this new incoming management in the form of the cash. Now, there's going to be pressure too. I do wonder if investors are going to be like, hey,
RSI is still at highs. Okay, so RSI's, you can see that the last time we turned over, we had a divergence in RSI. Okay, this time we're still pushing higher. RSI is still pushing higher. Okay, on this monthly time frame. Last turn right there. 2020, 21. All right, so notice very closely that on previous pullbacks, notice the divergences here. And what we're looking at right this minute, going into 26, notice that we don't have a divergence yet, okay? So this is a monthly time frame. Plenty of time to get out of the way. Okay, so if you're one of those people that worry every time you wake up in the morning, you look at the futures and you think the end of the world's coming, I don't think there's anybody like that in a trading room. But if you even lean in that direction, look at the long term and then gradually come back towards, the weekly, the daily, etc., and the short time frames. Okay, this ribbon, moving averages, these ribbons, okay, 30, 40, 50. Does it look anything? Does it look anything like 2008-9? Double top? No. RSI is not making a divergence. RSI is not making divergence over many months like it did back in 2000, 2001. Doesn't look anything like that, does it? RSI relative strength is improving, which is pretty interesting, So when you get a lot of portfolio managers that saying, oh, we're staying long, we're waiting for earnings, there's plenty of time to get out of the way. We're up, 50%, 45% from the April 7th low. So there's that. Okay, let's go back a little ways. This is 2022. The last 2021. Okay, let's go 5 years. 5 years. Okay, So look at the moving averages. Okay, Chris Shabako does this a lot. Okay, so here is 2022, end of 2021. That's when the bear market started. We pulled back 20%, right? Look at the moving averages. Does it look anything like that? Maybe if you go back here, maybe you go back in 2021, mid 2021, the moving averages were doing exactly what we're seeing right now. Actually, they weren't. They were spread out. Okay, and it was for a long length of time. I'm thinking that we could see a decent 2026, just given RSI strength, rate of change, momentum oscillators starting to slow down a little bit. So we might pull back in a little bit to start the year. I don't know. But it certainly doesn't look like a bear market where things roll over, we put in a lower high, and RSI is making a diverging move here.
BTIG maintaining their buy rating on FTAI Aviation. The stock's hitting a record high today. Weiss, this is one of yours.
It is, and it was good news. Again, this is in the energy for data centers and others. Company has done just a great job over the last year. I got involved a long time ago when they were able to secure a $2.5 billion credit line, which of course leverages their leasing capability. So I'm staying there. My target had been 200, but with the news today, I've got to revisit it.
Okay, here's another thing. Mike Santoli was just mentioning this. He was talking to some guy, his mystery broker, that for whatever reason they withheld the name. Looks at 16-year cycles. Okay, I'm pretty much on the same boat. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 years. Okay, so you can see that on average, we got about 16 years. I got 15 here from consolidation to breakout, consolidation to breakout. Back in the 80s into 2000, we had 20 years up from the breakout. Okay, we had a 13-year consolidation. We're on 13 years. Remember the previous chart, RSI rising, the ribbons moving higher. While we might have a 3 to 5% pullback to begin the year, I think overall we've got pretty good prospects for moving higher over the next couple of years. Okay, so that looks pretty good. So you should be delighted with that information, I would think. Instead of being worried every time you open up your trading account, just keep averaging in. You know, every 2 weeks, if you got a 401k or IRA, put money away, put it into your account. I do that as well. Even 38 years later, 38 years, almost 40 years of trading and investing. Learned a lot in the latter half, the last 20 years, selling premium, etc.
This one's in the Juneteenth. Robinhood price target actually trimmed at Goldman. It's one of the top 5 S&P stocks this year.
Apple moving higher. Okay, Nvidia did pull back a little bit. Microsoft's trying to keep going. Okay. What's NBIS going some more? NBIS is on the move. Okay, Frano. NBIS. INBS, sorry. INBS. Bam. Whoa. Whoa, look at this sucker go. INBS. All right, so there we go. This is moving. I'm glad I joined you, Frano. Wow. Glad I joined you. Boom. Okay, so people are going to be taking some profits off into this. You know it. Okay, so let me take half off here. All right. I'll take half off. Okay, I'm going to take half off here. Limit. Okay, right there. At 11. Okay, got half off at 11 and change. 11.13. Okay. INBS. Okay, this one could squeeze. S&P just can't get out of its own way, huh? S&P. Okay, there we go. S&P on the move. S&P on the moving the opposite direction. S&P. Are we going to finish the day at the low of the day for the last trading day of the year? That would be nasty. That would be mean. Mean old bears. Okay. INBS. Can we go for like a scorcher? Lots of volume on that last pop. Okay, watch your MACD. Okay, watch MACD. Why can I access this MACD? Weird. Okay, let me just try a different MACD. I want to be able to boost my line weight so I can see it a little bit better. MACD. Let's see. Fundamental MACD crossover. Harry Potter. Nope. Okay. Just slow drift lower. INBS still going. Okay, I sold half at 11.14, 11.13. Let's see where we go with this. 11.13 right now.
Adobe, it's had a terrible year, actually a terrible couple of years, but the earnings continue to come in better than expected. And I do think that the stock is starting to respond. The fact that it didn't get crushed in December on tax loss harvesting is evidence of that.
Why did she foreshadow this one? Yeah, first of all, to my friend Jeff Kaplan, keep it to yourself. I'm wearing this jacket again. My final trade is Baba. Look, I bought it at the wrong time, but I still think it's a great story. Very undervalued. Do well next year. Joe.
Final trade is Goldman Sachs on order. Wish all our viewers health and happiness in 2026.
Yeah, absolutely. Number one, Happy New Year to the three of you. It's been a pleasure to be here with you guys all year long. To the audience, you have a great new year. That's going to do it for us on Halftime. The Exchange with Contessa Brewer. It starts right now.
Frank, thank you, and thank you for joining us today.
And thank
We
you.
are the last trading day of the year, the last day for government health insurance subsidies, and Warren Buffett's last day as Berkshire's CEO. Welcome to the Exchange. I'm Contessa Brewer in for Kelly Evans today. Stocks really haven't changed much for the day. On track now for the third consecutive down session, but still we're ending the year with double-digit gains. Big tech, mostly lower. We're keeping an eye on NVIDIA.
MACD.
TikTok's parent ByteDance reportedly is planning to
Okay,
spend
INBS.
$15 billion on
Still going here.
AI chips if the company is allowed
See if we can't get 15 out of this today.
next year. And the metals trade is looking a bit tarnished. Silver and platinum declining more than 8%, gold down 1%. Let's begin, though, with the big year for the markets. The S&P is set to close 2025 up about 17%. This is the third straight year of double-digit gains. And really, we're looking at that AI frenzy that has fueled the NASDAQ. It's up 21%. The Dow up 13%. And look, don't count out those smaller guys. The Russell 2000 up 12% this year. And this rally was broad-based as well. All 11 S&P sectors on pace to end higher. You've got communication services, tech, and industrials as the leaders. Comm services here led higher by a huge gain in Warner Brothers and Alphabet. Real estate and consumer staples are at the top of this
NBIS.
list with real estate.
INBS. Sorry, I keep saying NBIS. INBS. Trying to push a bit more.
A real kick out of the notes I got from you because it's been a long time since I've seen someone so plain spoken about the AI bubble and whether it's there or not. Can we start with that?
Sure, Contessa. Happy New Year. We're people have been talking about AI bubble for the last couple of months. I mean, it's even been on 60 Minutes. What people are paying attention to, they're trying to relate it to the 1990s.
I'd like to see them run this market in the last hour or two. The S&P in particular, the major indices. I'd like to see them pull this off the low.
Investment. And also the largest tech companies right now are doing the investment to try to crowd out and make sure that none of the smaller players actually get a foothold and actually take over and gain market share from them. So it's a completely different situation. And so we're not yet in a bubble. That doesn't mean that there's not going to be one in some future state. But what we don't see are some of the markers that typically define bubbles. Like we haven't seen any of the typical or the privately held companies come to IPO yet. These are typical signs that you see, after when you see before there's a bubble. What we're going to see next year, I think, is some of these companies come to market, and I think what you will see is you'll start to see clarity where you actually get to see, get to digest
Palantir,
some of the fundamental
So, Oracle, just Grinder today. Micron grinding again like it did yesterday, long VWAP.
What do you think fuels the opportunity for the smaller guys?
Microsoft, NVIDIA, Apple, they're all trying to come off the low. It's just no volume. It's just no volume at the moment.
Next year, are we going to see more IPOs for OpenAI or Anthropic?
Yeah, I don't know exactly what will happen, but I assume that you're going to start to see them come public. And the reason is because they really do need to legitimize themselves, and going public will do that. In addition, there have been so many, reports of, electricity deficiencies and the infrastructure play. And what I notice is that investors tend to overestimate the ability for the infrastructure in terms of investment, but underestimate the software portion of it. That's what's really going to define the moment for us is what comes next. What's happening right now with NVIDIA and some of the infrastructure plays.
NVIDIA.
There's plenty of money to be made there, but the real money to be
Okay, NVIDIA turning back up.
productivity enhancements. We all know this. This is not something brand new. It's not in the market. We just haven't seen it yet. But we're going to. And if you look at the economic data that's been released in the past couple of months, one of the things that gives me the greatest sort of hope is we're starting to see some increase in gross domestic income. And if productivity growth picks up, that will legitimize the AI enhancement piece of this productivity wave. And that's going to create a lot of value for investors over time. And I think that's where people need to pay close attention.
Broadcom coming off the low.
The largest tech companies, it's going to be very broad based. It's going to enhance the earnings.
All right, stocks look like there's more shorts covering. Not much else.
Yeah, in fact, Jamie, I'm looking at some of the names here in your strategy list: Raytheon, Apple, BAE, Aerospace, Saab, Motorola, Safran, Schneider Electric. What do those names have in common?
Well, I mean, a lot of it's defense, and a lot of it is security. You know, one of the things that's interesting about defense is that, you know, defense companies don't really care, you know, who's in charge. They only care that the government spend money on defense. And I think you're seeing that in Germany, you're seeing that around the world, in the United States. So that's what is common in that. But what is more interesting is you actually have some Southeast Asian companies who have started to get some religion on corporate governance. They're actually doing things that are really important, like, you know, doing share buybacks and treating investors well with dividends. And you can see it, you know, materialize in Japan and South Korea. You know, significantly more than many of the economy, the markets here in the U.S. And I think that's where the stories are. People need to pay attention. We've been paying attention to metals and silver and all this kind of stuff, but it's really a weak dollar trade. And if you really want to play it, international markets are way easier and way less volatile than trying to play it through the metals markets.
I mean, I'm looking at the metals right now. You've got gold off 1%. Silver is down almost 10% today.
S&P.
Almost 2%.
We got some put sellers, but calls, people taking profits and calls. The oranges are dropping.
Well, I think if you really want to play in industrial metals, copper is the better place. I mean, if you really believe that there's going to be a significant surge in industrial demand for, you know, data centers and things like that, copper makes a lot more sense. I feel like a lot of people are buying the gold and silver trade because they have this debasement of the dollar theory, and that may play out. It may be right. I don't know, but I do know that if there's an infrastructure play and data centers are being built, and there's a lot of copper demand, that seems more realistic and more reasonable to me. So if you really want to pay up for industrial metal, that's probably the better one.
Jamie Cox with Harris Financial Group. Jamie, I appreciate your time today. Happy New Year.
Happy New Year, Contessa.
All right, so we mentioned Apple there.
S&P trying to put, NVIDIA trying to push back above VWAP. Amazon trying to recover the 20-day, the 50-day. Amazon, Google, another favorite. Google with a fairly low PE, all things considered. NVIDIA. Okay, Microsoft like to get that above VWAP and start the run. Okay, S&P is on the move here. S&P. S&P, VWAP just overhead. Got a wick underneath today's candle, kind of a very large body spinning top. If you look at it, there's a wick on top, wick on the bottom. Like to see this close in the upper half of the daily range. That would be nice. Don't know that that's going to happen. Okay, INBS is trying to go. INBS looks like they're playing this for the pop. INBS, okay.
Maybe they introduced some stuff that they didn't show us already, but it's been a long time coming. It was June 2024 when they first announced Apple Intelligence, and here we are. It's by the time they actually get it out the door, it's going to be about 2 years later.
The thing that I find baffling is that Apple has.
I thought it was a great perspective what Josh Brown had of Apple. You may disagree with it, but I found it interesting. It's a different way of looking at Apple. Everybody was saying Apple was behind the 8 ball in AI, right? But Josh's take was that Apple just sat back and saw all the spending, gauging who's winning at the AI, who's not. Avoid the mistakes that some of these big firms like Meta might be making. And then once they get the best solution, is it going to be too late? I don't know. I think there's going to be plenty of time in AI. But I thought it was an interesting take on Apple and how Apple could actually start to perform from the AI space. I know they have Apple, was it AI intelligence, whatever it is. Apple's starting to lift right now, Apple. So I know, Dollar, you're trading Apple, looking at Apple sitting on top the 50-day here on the daily. Okay, so Apple over here on the daily, watching that. That starts to rally. It's got resistance right overhead, so probably going to see some sellers right here. Look at the volume coming into this level and watch MACD. INBS is trying to break out.
So the affordability of the phones becomes less of a problem. It's these subscription fees that they're laying on top of it that could affect kind of what you're talking about.
Kovac, thank you.
Thank you.
Appreciate it. Coming up, the biotech ETFs, SCI and IBD seeing big gains this year following a surge of M&A in the sector. The big players are just scooping up these smaller names to grow their pipeline. Will this trend continue? Who could be next? We dive in. Plus, a legendary 6-decade tenure comes to an end. Warren Buffett officially steps down as CEO of Berkshire Hathaway today. The stock has underperformed significantly since his retirement announcement. Will 2026 turn that around? The Exchange is back right after this.
This is The Exchange on CNBC.
Okay, if we can get AFJK back into the 70s or so, the 60s, I might start another position there. We traded. I had an average around $65. I was stuck in AFJK for a couple of days. Managed to get out near 100 for about a 40-point move. A little bit above 100 average. I got out like I think 110 average. The high between 100 and 110, so it worked out pretty good. 136 was the market high this morning, pre-market. So if this gets down into the 70s and 60s, I'll put in a limit order at 60. Okay, Red Cat Holdings, that's trying to do something. Red Cat. Apple, the quality names that I'm following, like Apple and NVIDIA, just watching these to see if they can follow through and break higher. Apple looks good. Microsoft trying to do something. Okay, it's above VWAP. Can it go? Look at the volume right there. Okay, look at the volume. Okay, INBS is breaking higher again. So that looks good. INBS. I got half those shares left. Can we get 12? Looks like 12. All right. Be fun if they had one of these that ran a double today. I mean, some of these cheap stocks do rip higher. Okay, Microsoft is trying to go. I'm watching Microsoft at the moment out of one eye. Out of the corner of one eye, I'm watching Microsoft and NVIDIA. Apple, those are moving higher. Broadcom. Watching INBS taking off to the upside. INBS. $11.80 and change. Just hit at $11.80. I saw a bid there, offer at $11.80. $11.60. Okay. What's NYMO at? NYMO is still negative. It's minus 24. Q's. The Q's inside the cloud, so that should slow things down a bit.
Welcome back to the Exchange.
INBS.
The name of the game in the pharma space this year, according to Leerink Partners, $65 billion worth of
That's actually a good take. Didn't catch that.
we saw Securities healthcare equity strategist. Jared, thank you for joining us. Are you expecting to see more M&A in the space?
15 possible on IMBS.
This coming year, 2026, is going to be pretty similar to 2025. I think they were about.
All right, so here we go. S&P starting to rally. Buy some cheap calls. What the hell, you know? Don't go crazy, but buy some cheap calls and see where we can go here. Buy some cheap calls.
The GLP-1s have been sort of the theme of this year. Are you looking at new trends?
SPX.
I think it's very difficult to predict where the next deal is going to come from in terms of the therapeutic category. Obviously, this obesity
There's
situation.
not a whole lot of energy. If we get any kind of energy, it's going to happen within the next hour or two. Into the 2 o'clock hour, I really don't think that there's many here from institutions. They might be on the phone on the beach somewhere in the islands calling up their rookies, interns, you know, setting them up. Okay, this is what you do when I call you. If the market's going to be a buy, do this, do 1,000 lot, $1 million, 100,000 lot, whatever. Or have algos do it for them. I'm sure there's plenty of that too. Micron holding up at VWAP. Micron. I'd like to add to Micron, but I'll give it a couple of days. Oracle. I bought some ORCX, Oracle 2 times shares. As it moves off the lows, I'm looking for Oracle to be 50 points higher. Probably by the end of January, hopefully. First quarter would be nice. Long term, I like Oracle. I'm sure you can't pry Frano's shares from her hands, so Oracle, got to have Oracle high. We got to have Oracle higher. Okay, S&P, just like that, comes right back down. There's nothing going on here. Wow, what's going on? Why are they doing this to us? Huh? S&P just got rejected at VWAP.
We've seen the Health and Human Services Secretary, Robert Kennedy, making clear his priorities for
On a bearish day, you look for rejections at VWAP. This is not any different. We hit the low, bounced off of that. We had a little buy program, ran right to VWAP and got rejected. We could stay down here. If we're going to do anything, it'll be after 2 o'clock, I would think. Yeah. Oracle. IMBS. Okay, a little profit taken there on IMBS. Up at the highs, 11.13, back to 11.13. IMBS.
Since 1979. Gold also had a great year, best in 79, as well as up 65%, and platinum with a gain of 122%. And then look at copper on it.
IMBS got profit taking. The question is, will all of IMBS profit taking?
Make good use of copper and drive that even higher. What didn't participate
IMBS profits taking.
20%. The exchange will be right back.
Watch your next INBS. Let's see what it does when it gets to VWAP, if it gets there. VWAP is way down here. Okay. Watch MACD. Volume starting to pick up on the sell side. Might get halted on the pullback. Somebody took profits right there. Somebody took profits. Okay. S&P is still down 10 handles. It was down, what, 20 handles not too long ago or more. Did you guys catch all of the, do you know anybody in Iran? You have any family? Anybody know anyone in Iran? Iran's seeing some crazy stuff. Yeah, anyone have any family in Iran? My thoughts and prayers go out to you. Hopefully that gets resolved. People want their country back. I don't blame them.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
What's up, Carl Nation? It's your number one broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Welcome back. Time for Chart Masters. We chart and trade one of the biggest winners and biggest losers of the S&P 500 in 2025. Rick Ducat's joining me here in the studio, the lead market technician for the Schwab Network. Now, I'll start on the optimistic side. That being SanDisk, this stock, lapping the field in terms of its performance on a percentage basis. Absolutely incredible. Hundreds and hundreds of percentage points. What do you make of it?
Yeah, the storage chip makers are the far outperformers of the group, kind of the strongest of the strong here. And when we do look at SanDisk, we can see that there's a couple different ways to look at this particular chart. One is you could say going across these lows that we established here kind of after our rally to the upside took a breather. You could say we connected these lows here. If you were to extrapolate that, put a duplicate line across the highs, more or less.
No follow through S&P.
Not super well here. Probably, I think the more sensible pattern would be to go across the lows like this and then make an accompanying trend line going downward across the highs to give us more of this triangular shape here. So what that means is an increasingly compressing range in which the price is traveling here. You'd be looking for a breakout beyond either of those two boundary lines here. To the downside, our 187 level was a fairly consistent low point here. That stands out as potential support. We can also see that this level here, 238 roughly, that's about where price topped out. That's where we had the high before our gap. That's about where we are right now. So another potential inflection point to watch as we draw toward the conclusion of this year. So now, if we were to look at some of our moving averages, these are simple moving averages here because we don't have a full year.
INBS looks like it wants to go again.
Here, our 20 and 50-day simple moving averages fairly close here, about 227 and 220 respectively here. So those could be another area to watch for support. RSI also moving lower, still above the 50 midline, but downward sloping trend line in play. We did have some bearish divergence as well during this period where price was traveling upward. but the pace
AFJK drifting down to the 70s.
Finally, if we were to look at our volume profile study, you can see here SanDisk shows that the heaviest volume activity right here, kind of in the middle of where we've seen this range near around 215 or so. That would be the standout area for the volume activity, and then declining very notably once you get beyond those levels to the upside or the downside.
Yeah, it almost looks like a king cobra snake. I don't know if that's a chart pattern or not, but it certainly has that look with the really incredible performance in that kind of middle part of this year. A little bit more consolidation in that last quarter, but tremendous year for SanDisk. So we take a look at an example.
Yeah, it looks pretty good, Grover. XCRF. It's above the 50-day. Should go.
SanDisk, and it's a seven put vertical below the market. Acknowledging the performance, but also acknowledging the recent performance where it has been a little bit more consolidating. And so neutral to bullish strategy. If you look at this one, it's a $230 short strike, a $225 long strike in that January monthly expiration. Looking to collect around a third the width of the strikes. In this case, that would be a $1.70 credit for this example. You have a max profit of $170 on $330 in max loss potential. Find that break even. You go to that 230 short strike. That's the anchor of this trade. You take away that credit received of $1.70, and you're left with $228.30. That's your break even, represented here on our risk profile. You can see everything above 230 max profit, below 225 is where that max loss levels off at $330 per each one of these example spreads. That said, we're going to look from SanDisk, the biggest winner in 2025 in the S&P 500, and we're going to go to the other side of the performance spectrum. Bring back in Rick. We're going to talk Deckers. Now, Deckers wasn't the worst performing name in the S&P 500, but it was in that
INBS trying to go higher.
bunch. And of course, this is a parent company of popular brands. UGG, Hoka. Wasn't like they were
Apple.
shoes and other
Apple.
items, but apparently not enough of them.
Yeah, a difficult chart to be sure here, but when we look more closely, most of the declines happened earlier in the year. For the past few quarters, it's been a gradual decline here, kind of trending, drifting lower, but establishing some important horizontal levels as well. We can see here that we had some
Apple back down to the 100 period. Let's see, NVIDIA. NVIDIA trying to push above this level. NVIDIA just sideways. Next week, Friday and next week, we'll be looking for some more follow through. Microsoft. Microsoft trying to do something here in the day. Okay, S&P 500. S&P 500 trying to lift as well. S&P, if it can get through this level, 68.85 might be next. Okay. S&P 500 trying to go some more. We got some supply just overhead. That red band is supply.
As I was saying, sideways moving averages show that we have a consolidative phase here. Either the activity is so choppy that it doesn't really find a direction, or things are languishing and just kind of drifting here, and we're not really able to make a clear push one way or the other. So if we do start to advance beyond some of these levels here, the 251-day exponential moving average right here near about 114, that stands out as a possible upside area to monitor here. You can also see here the lowest level, our quarterly 63-day EMA here in yellow, that comes in near about 97.50.
Yeah, a lot of good stuff. Deckers, not the year investors were hoping for. It was a really strong performer last year. Wasn't able to build on that success, but popular brands, we'll see if there's a bounce back year in store in 2026. All that being said, got an example trade. Not necessarily going
Need to get some volume on this push.
More what the setup might be for 2026 as we're looking at a more bullish strategy.
Bitcoin starting to turn the corner, coming off the low Bitcoin.
Kind of at the money. So looking at buying the 105-110 call debit spread in the January 16th expiration cycle. So just a couple weeks from the end of this week. And what we're looking for here is a $2 debit. So it's going to create a risk reward where you're risking 200. You actually have a chance to make 300. So break even, you will need a little bit of help from the market. It's at 107. It's a little bit higher than where we currently trade right now.
They're looking at Deckers.
Get that rally into those first couple weeks of the year, a chance to make basically 1.5 times the risk, as you can make 300 again on that 200 in risk. 107, the break even. That's going to do it for our chart segment here. We thank the chart master as always, Rick Ducat, the lead market.
The supply seems to be too much for now. We got VWAP and supply right overhead. If we get above this supply, there's probably stops up there, I would think. Push through this level. Let's look at hedge flows. Okay, S&P 500 hedge flows. Yeah, they made a high there, but no follow through. As the blue line's rising, we're getting positive gamma from puts being sold.
Follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
All right, we're turning back up now. You can see the hedge flows are starting to turn. Okay, calls being bought, puts being sold. Okay, nice move in hedge flows rising up pretty quickly here. All right, so this is the best little rip we've had in hedge flows all day. Okay, SPX, bullish hedge flow. Okay, this is the best bullish hedge flow we've seen all day. Maybe we get some follow through. Could be very disappointed, but this looks pretty good. That's the best little rip we've seen so far in one go. Let's see if we can get something going here. S&P, we got to get through this level, and the volume needs to pick up.
Narrative around artificial intelligence in the first and second quarter, the market was really bearish on this name because they were not at that point in time talking about artificial intelligence and their implementation of artificial intelligence as aggressively as some of these other companies, and also the rollout of Gemini initially, or the Bard system, if you will, the Bard AI platform, just did not really sit well with a lot of traders and investors, and even the usability of that platform was not up to par with the street's expectations. We did see a little bit of a pullback. In fact, we saw a lot of calls for a shakeup within the executive team.
Okay, let's keep an eye on the hedge flows and see if they can keep going like this. Okay, these are 0 day.
That has really impressed the street, and you are starting to see them actually taking a little bit of market share from OpenAI. We're also seeing the fact that they are actually able to maintain and retain their search, the capitalization in this market, which was a big concern to start off, not only just last year, but also early on this year. So that was also a turnaround. And now you're also seeing some bright signs when it comes to the TPUs, which they've been leveraging TPUs for a very long time, but they have been able to leverage those TPUs a little bit more efficiently than GPUs that are provided by NVIDIA. And the TPUs themselves are a little bit more efficient, less power intensive, can get to exactly what you need to do as much as you possibly can at a cheaper rate. And so you are starting to see an uptick there. So there's a lot of tailwinds for this company here in the near term. In fact, we are actually seeing Citizens actually raising their price target on the shares up to $385. That's up from $340, and they keep the outperform rating. Once again, kind of talking about the same situation that we've been kind of mentioning here, search availability and their ability to capitalize on artificial intelligence.
Hedge flow still rising. We should get something going here. I don't know how far we're going to go, but this is looking a lot better. Okay. All right, starting to level off a little bit right here. Come on, keep going, keep going. Let's go. LATSTL, let's go. All right, so we're getting some action. Only took a couple hours. Finally getting some action. We need to see this volume pick up.
If you look at the 3-year weekly chart, it's still bullish in nature, but you do have to keep a couple of items in mind here.
Oh, there we go. No, that's what I wanted to do. Make this. Okay, much better. Much better. Able to see that much better.
Momentum is lacking here is that RSI is starting to hinge a little bit lower, not crossing below the overbought territory yet, but something to be mindful of. And that MACD is also starting to hinge a tad bit, where we could see a potential bearish cross with a 12 EMA.
Save that. All right. That's what I wanted to do.
The fundamental thesis that a lot of analysts are excited about will still be intact.
What about the histogram? Can I change that?
If they are able to kind of show that they are still monetizing artificial intelligence,
histogram.
Outsized growth when it comes to Google Cloud.
Doesn't need to be that dark. Let's go 30%. Okay. 30%. And the red settings, red.
Going out right here, but at the end of the day, you're giving yourself a little bit more time. What you would like to see is the stock obviously moving to the upside. This provides a break even of $339.85 with a max loss potential of $905. And the hope is that obviously the stock continues to move to the upside. And if it does so over the next 2 weeks, 3 weeks, Alex, time value erosion won't be as aggressive. You still have some upside potential here, but also it's risk defining in the event that we do see any type of pullback in the market. So looking for a little bit more of a breakout to the upside. You can also look at those technicals once again. This kind of bull flag from high to low is around.
Oh, that's better. Much better. Much better.
Level of $320 that gets you to around $340, which this would be in the money and would also be profitable. So that's also kind of aligning with some of the
S&P trying to push. Okay, MACD is very bullish looking right now. MACD. Okay, we need that volume. We need that volume. All right, might get a little exciting here, hopefully. Okay, 5:15 are on buy signals. The 60 minutes on a buy signal. Just need to see the 30-minute on a buy signal futures.
Yeah, so if you are bullish, you do think that there's some upside potential here over the next couple of weeks. This trade gives you the opportunity to have upside potential, but looking at time value, it's not going to erode as quickly because we still have around 60 days for this to actually mature in nature, around 45 to 60 days. But what you would like to see, Alex, is the stock moving in the next 3 weeks, at least by the monthly expiration for January, even maybe a week after that or so, in order for this to move in the right direction. And if it does not do so, then you're looking at a stop loss type of scenario where you want to define that risk. And maybe that's going to be 50% of the premium. That's usually kind of the standard that a lot of traders look at for a potential pullback and maybe cutting those losses here. But this is not a trade that you're really trying to stay in until the February expiration. You're just looking for a directional move over the next 2 weeks, 3 weeks.
Okay, Palantir not cooperating, fading again today. Hedge flows still rising. Okay, maybe we get something today. End of day.
Segment coming up, we're going to look at the streaming space and an outlook into the new year. We'll be be joined by Stephen Kent, the media director from Consumer Choice Center, right after this short break.
FRMI.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly.
All right, we're starting to go now. Trying to get a little bit more lift. Okay, buy some cheap calls maybe. We get a little run. We got plenty of time to run this higher. Okay, here we go. Volume is picking up. MACD is positive. Prices through VWAP. Looking really good so far, John Boy.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Okay, let's see how far we go with this.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the early call. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab.
All right, so can we get to 68.85, 68.90, possibly 68, maybe some 68.90 calls? Let's see. S&P 68.90 call, S&P 68.90 call, 31, 68.90 call, 68.90. Come on, stop that. 68.90. Can we get there? What are those going for? 68.90s. Come on. 68.90s. 360.
Is hugely indicative to me of just the end of traditional media as we see it. Now, I know this gets said every year. The next year is going to be
Okay, we could get to 68.90 hopefully.
television and pay cable-based packages. But this is really starting to accelerate in a way that I think people don't understand, that YouTube has become television. And the reason that I point that out is because traditionalists, year over year, have always maintained that the competition is between the traditional television packages and then their streaming competitors. So like your Netflix, your Disney, your Paramount Plus, but are completely neglecting the fact that most consumers are in fact sitting around in their living rooms.
INBS trying to break out again. INBS.
Television channels.
There it goes. INBS. Can we get 15, Frano? Can we get 15? INBS.
Millions and millions of dollars of debt, looking for a way out. Netflix is currently completely stagnant as a company in terms of its content on offer, traffic coming in, and there's got to be a major shakeup on the television side between the streaming side of things and then the traditional TV side of things. They're going to become one at some point, and it's going to be in 2026, I believe, because they have to actually unite at some point against YouTube as the actual real driver of most people's entertainment
Okay,
time.
can we get some more out of this?
And for those who aren't
Come on, let's go. We can do this. 68.90 seems doable. That's the next level of supply up here. Okay, so I'll pull this down here so you can see it. Supply. MACD still bullish. We got a little bit of profit taking right there coming in. INBS going for the highs. Okay, going for 13, INBS.
The disruption that's happening there, and you have real tour pros going to content creating platforms like YouTube and creating content. You can talk sports commentators who are skipping going to ESPN or Fox Sports, and they're just going straight to their fans directly through YouTube. You know, where does it go from here if you're a company like...
Okay, there goes the futures. Futures popping now. Here we go. Futures popping. Can we get through this level? Futures are popping. Let's see if we can't get some follow through. Come on, guys. You can do this. 5, 15, 30, 60-minute are on buy signals. Okay, hedge flows are rising. Hedge flows are rising. Still going. This is the best stint we've seen all day. Between 1250 and 1345. Okay, we've got, we didn't trade that much today. Only about 3 billion. Only about 3 billion is traded in 0 day. You can feel the slowness in the markets. But we are moving higher here.
Pluto and Tubi. Now, if you look at viewer stats from the past 12 months, and this was the first year in which Nielsen was able to measure and was doing measurements of Pluto and Tubi and these other FAST TV networks. In September, November 2024, FAST TV was about 6% of the market to Netflix's 7.7. And then if you fast forward to this past year, 2025, the fall, that was completely switched. FAST TV is now over Netflix. Netflix is under. People are just going to go for these free ad-supported networks because
let's go LETSGO. Come on.
Traditional television, which people do generally actually miss.
Futures.
Over streaming. And then Netflix again is starting to fade. It's starting.
Come on. We need more volume. We need MACD to continue doing this.
Be looking for cheaper alternatives in the market, and consumers just generally want something that Netflix currently doesn't have. So I know people think about Netflix right now as a total powerhouse, but Netflix is doing this purchase of Warner Brothers out of a position of weakness, not strength. I know that they seem like this 1,000-pound gorilla in the room, but they're not. And things
all right, come on.
Shape up really differently by the end of the year.
68.90 should be doable. Look at the volume coming in. Look at the volume. S&P, look at the volume. Live stream.
The Paramounts, the Comcast, these major, whether it's studios or just general content makers, look more like Apple, Amazon, Alphabet. Of course, Netflix will probably still be in that mix.
LETSGO. That was LSU. LSU.
Apple, Google, Amazon, that they've sort of created these studio environments for content creation. They're now making a lot of the content and bankrolling it, and then that content goes out to these streaming platforms. But I just think that there's still so much room.
Yeah, they stuck in my head. LETSGO. Let's go. I mean, that's pretty common cheer. Yeah, pretty common.
Packages together because they have so many different streaming. But I just tend to think.
Oh man, yeah. Okay, so we got a nice little move here so far. Nice follow through. Futures still going. 5, 15, 30, 60 are on buy signals. Tick cumulative. Would like to see that turn up, but that's still dragging its feet. Okay.
People's entertainment time, which again is simply just putting on YouTube videos. I'm a big believer in this. People ask me all the time.
We should get a draw right up to this 68.90, hopefully. Look at the volume, continues to come in. Watch that volume.
It's just about how people spend their time. And if
Yeah, I know. Yeah. You don't have to explain.
videos on YouTube, I'm not watching Paramount Plus. You can't do but so many things at once. And so at some point they're going to have to start treating content creators as the actual competition when it comes to entertainment.
Somebody just took some profits. We're pushing a bit higher now, though.
And trying to find where I want to put my advertisement if I'm a company.
All right, pretty decent amount of selling volume there. Somebody took some profits off. And the 68.90 calls that we called out, was that you, Cayman? Somebody just sold 2,500 calls into strength. One more shot. Come on, let's get one more shot up here. One more shot.
That has had a roller coaster last couple of years. We'll get the latest and look ahead to next year with George right after this.
Okay, let's get some more out of this. Let's get to 68.90 at least. 68.90. Let's get up here. Okay, got some more. Got some more upside. Okay, can they rip this higher? This is exactly what I was looking for. Look at that candle now on the daily. You know, we had to wait all day for this. They had to like drag it out, make us really bored, frustrated. You know, sometimes you just don't trade. Didn't do much today. Bought some Oracle ORCX. Bought some, looking to buy some Micron. Bought some NVIDIA and Microsoft. That's it. That's it. Not much more. Come on, keep going here. Futures. That was fun there. Futures. Okay, Nicole. All right, profit taking. Watch this profit taking right here. Can we get one more shot to the highs? We got plenty of time. We've got 2 hours and 8 minutes to go. 2 hours and 8 minutes to go. I'm your host, Cosmini, coming to you from theclosingprint.com. We had to wait all day for this, basically. We had a little run up around 11 o'clock, 10:30, 11 o'clock. We hit VWAP, got rejected, turned around, consolidated, and ripped again. We got 68.90 as a potential target, 68.90. If we can keep going here, buy some cheap calls on these little dips here. Fair value gap. Looks like it wants to keep going. Okay, watch the MACD. Still sloping upward. Hasn't flattened out yet. MACD. Watch your MACD. Watch your volume. We want the bulls to take control. We want the volume to be above average, above that those little peaks there. Okay, swing low. We see the swing low. Supply overhead.
Yeah, this one's kind of interesting. I mean, I sort of forgot about it, to be honest with you guys. But, you know, looking at the price action, we can talk about that.
Okay, what's Adobe doing? Adobe. Okay, one more shot here.
That has been published in the last year, around $28. So, again, that's something to keep in mind and consider. I think this name probably led the way in terms of the AI push with their liquid cooled servers, which, again, are compatible with NVIDIA's GPU chipsets, which are the backbone to artificial intelligence in this entire, data center craze. We have to consider Supermicro's technologies, which may be facing some commoditization issues. In other words, standardizations issues. Competition, I think, has eroded some of the value and prospects for the business. You have to think about
futures. Looks like they want to go again. Futures. Okay, futures still pushing 68.90. Possible 68.90. I didn't think we'd get this far earlier. Just looked like a lost cause, but they're definitely coming after this. The volume is picking up, sustained.
Which has really carried over into this year. So that's been a relatively, I guess, trust overhang, let's call it, for the business.
Okay, there we go.
And I do think that
there we go.
The server commoditization component of
looks like we're going to go some more.
Because gross margins for their business is still very low, at around 10% of sales, even less than 5-year average, around 15% of sales. But the challenge here is, and this is why I'm kind of baffled by the price action, to be honest with you, they do, and they have been.
Let's go. Pop this sucker.
If you just look at the earnings for Supermicro,
pop it up. 68.90 is a target for me short term. If we can get there, that'd be great. 68.90. Okay, futures continue to rip here. Futures continue. Okay, 5, 15, 30, 60 are on buy signals. Come on. It's looking good, looking good.
So there's a value component to Supermicro, and I think that the value component to the name is being offset because of the trust issues. Accounting irregularities.
Need some more volume.
I think that's still a regulatory.
Need more volume.
Not to mention the competitive overhang from bigger players like Hewlett Packard and of course Dell. Do you think that those two things are merged together, though, where if you're a customer of looking for these type of products, these cooling racks, whatever it may be, that you just have
Come on, pop this.
Dell's going to be able to deliver on
Futures, let's go. Pop it, pop it.
of uncertainty? Well, I think maybe what's happening here with Supermicro is
Futures making new highs now. 68.90 is my target. Hopefully we can get to 68.90. 68.90 calls are going for $4.75. They were $2.75 just a bit ago. So up $2, almost 100%. Okay, looks good. Sustained volume keeps coming in. Hedge flows continue to look strong. Look at the length of this move here in the hedge flows. That looks good. Always want to see this. You want to see the blue line and the orange line both rising for the most part. Okay. Calls being sold into this. Futures keep going.
Pricing that in, because typically when you have no growth or low growth businesses, these businesses will trade in the mid to high single digits in earnings multiples. And again, if you look at
Okay, so hedge flows look good. Look at that. Look at that length of that line. All right, so that's 0 day. Non-zero day looks good too. Okay, this negative gamma above this level could get really frisky. Love to see this blow out the top. Blow out the top of this. Would be nice. IMBS pulling back a bit. Back to 1160. IMBS.
earnings growth is now being reset down, but all those numbers are moving higher going forward. So again, I can't say what'll happen. It's a very special situation. We'll just call it for this name, which was really a darling, has fallen by the wayside. Specifically in the last 6 months, it's fallen about 37%. And so that might be based on sentiment that we've seen in the space, especially
a little bit early today. Around 11, about 1:30, we started to see the flow coming in. Volume started to pick up. Generally, we look for 2 o'clock, the 2 o'clock hour for institutions to come in. Are they going to buy this or not? I don't know. It's a real difficult one today because I would think a lot of these institutions are on the beach somewhere or with family on holiday. Not in front of their computer screen. So I'm sure they have some algos that, if this happens, then, trigger 100,000 lot or something like that. We moved through VWAP pretty decisively. The volume picked up very strong. You can see that VWAP move here. Okay, we moved through VWAP right here. The volume picked up. And what did MACD do? MACD launched, okay? You had everything you needed. All right, so now we're starting to pull back in a little bit. All right, so they're going to shake a few people out of here. Some people take profits. Let's see if they can follow through a little bit more. Give it a little bit more upside. INBS, I'm out for now. INBS, I'm out for now.
With Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Okay, can we get some more out of this? 68.90 was my target. Hopefully we can get there.
break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. Schwab Network.
Come on, futures, you can do it. Let's go. LATSGO.
Grandparents moved here. Did they know what our family would become?
I don't even know if they could envision it to leave everything behind, literally come across.
The hedge flow looks good though, right? Hedge flow, very decent. Hasn't stopped yet. Okay, still going. The inflections are higher. There's no inflections lower. Even these little inflections here are still higher high. Okay, you see that? Higher high. This is looking good. We're getting through this negative gamma here. So a lot of shorts covering. Monetizing puts. Looks good. All right, we got plenty of time. It's only 2 o'clock. It's only 2 o'clock. Let's see what we got going here. 2 o'clock.
Live from the NASDAQ market site right here in New York City's Times Square. Welcome to Power Lunch, everybody. I am Brian Sullivan.
I like Brian Sullivan. This guy, this is a good Irish guy here, Brian Sullivan. Okay, we're going to go again. Future's going to go again. Here we go. Here we go. Let's go. Come on. Look at that hedge flow. Wow, that looks great. 68.90, that's our target. Okay, I'll be taking half off at 68.90. Take half off into 68.90. Come on, futures, let's go. Trying to tap this level here and break to the upside.
Gold has been soaring on pace for its best year since 1979. But one smart money veteran says it is now time to take a little bit of that money off the table. We'll get to all that. Welcome, everybody. Hope you have a great New Year's Eve. Let's begin this hour with the technical side of the markets. In a year that has been dominated by big tech, which part of the AI trade?
Come on. We can get this. We can get the 68.90, it looks like.
Whose insights help traders separate noise from meaningful signals. He's also just a great guy. And he joins us now on New Year's Eve, live from Minnesota. Craig Johnson of Piper Jaffray. Craig, we're really happy to have you on the program. We know, listen, it's an interesting day. Thanks for joining us. You've made so many great calls in your time. Great to have you on the program. What is the technical setup for the macro market as you see it next year?
Let's go. Here we go. We're going to go. We're going to go. Can we blast right through 60? Now, what would be so cool is if we get a green candle out of today. We started off the day, everything looked green. Everything looked like it was going to follow through. And then immediately we got sell programs, knocked everything down. People started selling. Oh, there goes the S&P. There we go. We're going here. Following through. Go, go, go. Go. Futures breaking out. Futures breaking out. Volume picking up. Volume is definitely picking up on these calls. Call side. Futures.
And a slump. It's one of the reasons we love you, Craig, among many, because you're just going to lay it out there. It's something to remember, a little bit catchy. So what would be then the pump if you're only seeing a 5% gain for all of next year? It sounds like the first half, kind of to your point, may be a dump.
Okay, we tap that supply. Okay, we're getting rejected. No follow through. See what the hedge flows say. Hedge flows say, yes, keep going. We can keep going. These hedge flows continue to rally. Hedge flows continue to rally. All right, that says we could see higher. Okay, let's get it. Let's get it.
So I've been sort of turning my focus to a lot of these optical companies like Ciena, companies like Coherent,
and companies like Corning. I look at a company like, Corning in here, Brian, and it's like, if we go back, we're
Hedge flow still rising.
2,000 highs on that stock. And if we do, we've got a nice 20+% upside. If we look at Sienna, right, I could see another 20-30% upside, even though it was up a lot here in 2025.
Wow, because these are not beaten up stocks that have had rough years and you see a turn. To your point, these stocks have done well. They're glass, they're fiber optics that go into all those cables you talk about. Sienna, kind of the same thing. Coherent, a little bit on that side. These are names that have already been hot. It sounds like you just like the charts, I guess, on these names.
Well, we like the charts, but there's also that connection theme that's going to play out with this as we think about the data centers, we think about AI to really make
Come on.
the next level of AI.
All right, hedge flow's turning back down pretty abruptly. Okay, we're going to start the peak now. 68.90. I didn't think we'd get here, but you know, that was the target. We did touch it. We did touch it. Come on, let's just blow this out now. Let's the Bears had their morning. Let's have the Bulls finish up the day bullish. Nice finish. Green finish would be nice. It was kind of sad to see it, all that sell programs this morning, wasn't it? It was really sad. 60 minutes still looks pretty bullish. Looks like we could follow through. We just need more volume. Hedge flow still pointing. You see that? We're not making a low, not making a lower, not making a low here. We're making higher highs. It keeps turning up. So this is coming in waves, Okay. All right, that's a little lower there. Okay. Okay, we might pull back in a little bit. Don't forget those cheap call flies. Okay, you can always wait until Friday now because we got tomorrow off. You know, you're going to get a day of theta. Not that it's going to matter much because it's the end of January. 69.50, 69.75, 7,000 being the top. 69.75 is the maximum gain that you can make with these butterflies. They're cheap. They should be about $120 at the lows today or less.
So it doesn't sound like you're totally buying into the history as a guide story.
Oh, I think history is a bit of a guide, but when you go back and you pull together a couple of these pieces between the season in midterm election years, you go back and you also look at from an earnings perspective, when you get double-digit earnings growth and you also look at 3 years in a row, go into that fourth year, some of the returns, Brian, get a little bit more muted. And one of the other points that I would make too is,
all right, can we make it?
1986,
Can make a little bit more out of this.
times that we have seen double-digit earnings growth, and what you ended up seeing happening in 9
INBS, I'm out of that one. INBS. Hedge flows continue to look good. You can see some more upside. We can get through the 68.90. Can we see 6,900? That'd be kind of cool. 6,900s would be fun. Okay, SOPA starting to get a bid. What's going on, SOPA? SOPA.
You've got the jump, the slump, and the pump, Brian.
Jump, slump, pump. We love it. Maybe it's the no crow grow. Craig Johnson, Happy New Year, my friend. To you and the Rainmaker. See you soon. Thank you.
Thank you, Brian.
All right, you're very welcome. Well, the bond markets, folks, they just closed for the New Year's Eve holiday. The big bond story this year.
All right, let's go. Futures going to make one more shot, looks like.
Really here in the
Futures looks like it wants to make another shot to the highs here. S&P looks good. What of our New York FANG should be higher, right? Okay, so Microsoft did follow through. NVIDIA, not so much. Apple's higher. Netflix is higher. Google's going for the high of the day. Broadcom finally turning there, Grover. Broadcom turning back up. Let's see what Rick Santelli has to say.
You know where it was at the beginning of the year? 424. It's down a little more than 0.75%, down 77 basis points. Our 10-year currently at 416 where it closed. Well, it closed last year at 457. It's down 41 basis points. Now let's have some fun. Let's add in German boons and Japanese government bonds. You see the boon there? 237 to 285. It's up nearly at 50 basis points or 0.5%. And if we look at JGBs, and there's where our historic moves are, they're in Japan. Interest rates that were kept squashed down, negative territory, yield curve control. They threw everything at manipulating markets. The JGBs were purchased by the government like here in quantitative easing, but they also purchased ETFs. They owned, the Bank of Japan was a huge owner in all the markets. It's now coming back to haunt them. As I said, up nearly
Broadcom's on the move. Broadcom going there, Grover. Okay.
the dollar index, it's down a little less than 10%, and the euro currency, which is 57.6% of that dollar index. So there's an automatic inverse correlation, but it's up 14%, and you can see how
They're the same thing. They're the same thing.
You and I are going to make T-shirts and make a fortune, Rick. They're going to say bond moves big in Japan.
They're based on the same thing.
Happy New Year, my friend. Thank you very much.
To you too. Thanks,
Brian. All right, thank you. Folks, we are just getting started on this New Year's Eve power lunch here at the NASDAQ.
Trace,
the man,
more smooth.
And certainly the legend retires today. It is one
Trace is more of a smooth line, but yeah, it's based on the same thing.
We'll take a look back and also a look ahead. His legacy and Berkshire Hathaway. There is a live look of Times Square, the literal calm before the storm. And we are right up there in that office, in that studio, and we're back right after this.
Okay, yeah, positive gamma. The line will rise, Corey. Calls being bought, puts being sold. Negative gamma, line drops. Puts being bought, calls sold. Negative gamma. Okay. Once you wrap your head around that, people make it too complicated. When you think about institutions selling puts, what are they doing? They're looking for support. They're looking for no more downside. So that's positive gamma. They're looking for prices to move higher. They buy calls. They're looking for prices to move higher. Puts sold, that's the easy way to figure it, to understand it. Everybody knows puts sold. Puts bought, people are looking for downside. Puts being bought means the dealers are going to have to sell futures in order to hedge if the markets move lower. And that's why markets accelerate faster, because dealers are also piling on and selling futures to hedge their positions. So always good to know this. The better you know it, April. Let's see. One sec. I'll tell you exactly what I bought. April, Frano. Oh, here we go. Broadcom. Here we go. Broadcom. 373.80. 373.80. 370. 380. Going INBS again? Okay, I'm out of it. Good luck on INBS. I'm out of that one. Nice play, though. I did buy some SOPA. I bought some SOPA. SOPA. Okay, S&P. Are they going to run it? They got plenty of time to run it back up. Okay, so.
All right, welcome back. It is the bittersweet end of a truly, truly remarkable run. After 60 years, CEO of Berkshire Hathaway, Warren Buffett, is officially retiring. I mean, he's 95. He deserves it. Now, he still will remain chair of the company, but he's officially handing over the CEO reins to Greg Abel beginning tomorrow. You're going to talk about the Oracle of Omaha's legacy, his impact, and also where the company goes from here is Bill Stone, longtime Berkshire Hathaway shareholder and chief investment officer of the Glenview Trust Company. Bill, good to have you on. Happy New Year. It is bittersweet, certainly, but hey, at 95, can't blame Warren Buffett for stepping down. Does it change your investing view of both shares or either share?
Okay, S&P pulling back in a little bit. All right, so we made it to 68.90, right? We did make it to 68.90, almost 68.90. We had 68. What is this right here? That was 68.89.30. So we got within 70 cents of 68.90. That was a pretty good target. I'm happy with that. That was a nice little move there.
well prepared as you can be for any transition. You know, I mean, it's even seemingly an even bigger transition because you mentioned with him running it for 60 years, you don't see many companies that somebody runs it for 60 years before they hand it off.
And the thing about Buffett, and correct me again if I'm wrong, I have interviewed Warren Buffett. It was a long time ago. Went out to his office in Omaha. It was a very special day. It wasn't just that he was a great stock picker or investor. The last 20 years, particularly we saw in the subprime crisis, he was also sage. He actually rescued, in some ways, big banks. They came to him to borrow money. Talk about that sort of implied power he had, not just as an investor, but as somebody who almost represented the capital markets.
Yeah, I think you would kind of make him, wouldn't you say, akin to what J.P. Morgan was at his peak, right? That he could stop.
Yes,
or
as
at
a
least
human,
help
not the
stop.
bank, the man, J.P. Morgan.
Right, the man, yeah, sorry. I think that's the way I equate it to. He had such, people had such reverence for his opinion that he could change, really markets.
He not only that, Bill, as you know, he had special SEC dispensation. Everybody has to file their 13Fs, the quarterly holdings of what they own. Warren Buffett
I was hoping that we'd get more out of this. There's still time, but hedge flows have turned down, so that was a nice little run, though. So keep that in your memory banks. Whenever we see a hedge flow start to turn like that, and they keep going, and you get a straight line, basically, that's a good trend, whether it's up or down.
Hard to imagine, especially because he really paved the way. He turned, essentially, was the first one I know of that started and turned an insurance company into a vehicle for a long-term holding of investments. He was really ahead of his time in coming up with that. Further back, even think about just the capital allocation. He turned a failing textile mill that made suit linings. So most people maybe know the textile side. They made suit linings. So think about how their business would be not very good. It eventually was gone. But he took the money that he got.
That'd be terrible if they take this all the way back down.
And bought other companies along the way, See's Candies, etc. and the rest is history. But that's the one thing is he did it, and I do always tell people if it was that easy to do again, somebody would be doing it, and there are some people trying to do it. But he's certainly. And think about the duo that having Charlie Munger as your partner, and just hard to imagine that coming together again anytime soon.
Yeah, Danaher on smaller levels trying in the private market. I think Todd Bowley and his team at Eldridge Industries are kind of trying to replicate that just a little bit.
Yeah, Markel.
Let's move forward though. What about Greg Abel? Like, how does he's his own person. He's going to listen to his chair, obviously, but how does he differ from an investing perspective from Warren Buffett?
Yeah, and I think we don't know a lot, about his investments, et cetera, or, specifically. But I do think the good news is we don't need, we'd love to have Warren Buffett forever, don't get me wrong. But, Buffett's taken it from this textile mill to, the 10th largest company in the S&P 500. I actually think, a transition to a manager that seems to be what Greg Abel's specialty is, good at managing very large businesses and very good businesses, and frankly some businesses that are struggling a little bit within the conglomerate. I think that actually is what he may bring to the table more, because again, are you going to be as good of a capital allocator as Warren Buffett? I would bet against that, but we don't need that anymore. We have $381 billion in cash in that company, and it's really about taking advantage of opportunities when they come, and obviously, keeping the capital safe.
Yeah, you remember when Warren Buffett bought all those warrants at the end of 2007, 2008 drop? Remember that when he got all those warrants awarded for Goldman Sachs? Made a ton of money on Goldman Sachs.
Happy New Year. Thank you very much.
Thank you. Happy New Year.
All right. Thank you. Well, some companies, folks, they pay well, but OpenAI reportedly may be blowing them all out of the water. Up next, we're going to reveal some of the eye-popping stock-based compensations that are happening right now to many people at OpenAI.
One more bounce. There's still hope that we can close this a bit higher on the day. I got a doji underneath VWAP now. Volume starting to pick up. Shorts covering. Was hoping that this candle would look a lot more bullish than it is. Okay, so we'll see what happens here. Hedge flows are down, definitely moving lower.
ABUS.
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 Okay, S&P trying to push higher. ABUS, what is that?
ABUS.
That's a biotherapeutics company. ABUS, that's being chatted up right now. ABUS, that's being chatted up at the moment. ABUS, nice little pop there. Big move. 20 cents. ABUS. S&P still waiting for that to perhaps bounce here, give us a better look. Need to get above 68.90 If we can get above 68.90, maybe 6,900 is a possible play. Okay, maybe we bounce back up.
All right, welcome back. We hope you had a big year this year. But you know who also reportedly had a big year? Many employees at OpenAI. The Wall Street Journal got its hands on some company data, and it found that OpenAI is paying some workers very well. In fact, the report says the average stock-based compensation at OpenAI is a cool $1.5 million per employee. Of course, just one report. And
Stock-based compensation.
Can be skewed because, math. But if it's close to accurate, it is a big number. And in fact, it would be some of the highest pay of any tech startups in history. Maybe the most.
But it's stock-based. So they have to perform. So I understand why they make it stock-based. They're talking about AI employees, OpenAI.
Out here in Silicon Valley, it really just puts it into perspective. So let's start with Google, right? Before it filed to go public in 2004, it disclosed stock-based comp and adjusted for inflation, it was roughly 1/7 of what OpenAI is paying now. And if you zoom it out to a broader
Okay, futures continue to drop off here. Futures.
OpenAI's per employee stock comp is about 34 times the average at 18 other large tech companies in the year before they went public, according to a Wall Street Journal analysis. And those same investor decks, Brian, they show that OpenAI expects stock-based comp to rise by roughly $3 billion a year through 2030.
All right, so because as I referenced on the intro, math, average is the most misused word out there, because if you got one guy or one woman making $100 million, it can skew the average. Do we know, and maybe we don't, is everybody just making a bundle, or are there a couple of just superstars just printing gigantic sums of money?
You can certainly assume that there are a handful of MVPs that are garnering 9-figure salaries that are helping to skew that number higher. But what I will say is that OpenAI has been in the midst of this code red period where it's been all hands on deck looking to shore up their models because Google Gemini has made such strides. That's long hours during the holiday. It is a finite period for this code red that's supposed to end in January. And so people across the board, not just the people who are building the LLMs, but some of your mid-tier talent want to be compensated. And it's such a competitive market that OpenAI realizes it needs to pay up. And another data point for you here, OpenAI's equity spend is projected to hit 46% of revenue this year. For context, Palantir was at 33% before its IPO.
Little history. I was actually on the train. There is a train, believe it or not, from Mountain View, California to San Francisco the day Google, I would say IPO'd, but it was a Dutch auction. Anyway, a lot of the people on the train were employees that got really rich, or people literally weeping and throwing champagne. I've got to imagine that these employees, when and if they go public at OpenAI, they're not only going to be hugely rich themselves, but the entire region and the city of San Francisco, where you currently sit, that is a real shot behind you, Mackenzie, that they're going to have a huge tax windfall. The mayor has got to be happy about that.
Yeah, not a green screen. Bay Bridge behind me. Yeah, I mean, when you look at these numbers, and we were talking about who stands to gain the most if OpenAI goes public in 2026. We know that at least internally they are working through the mechanics of how to do that. We were talking about that in the context of SoftBank yesterday, their 10% stake. Microsoft has a 27% stake. They've already 10x their investment to $135 billion. But certainly a lot of very
futures continue to move lower.
Out here in San Francisco, and yes, they will have to pay taxes.
Maybe they actually may be paying more if some of these proposals go forward. But that's a different segment for maybe a different show. And by the way, let's not forget OpenAI actually started as a nonprofit 10 years ago. Mackenzie Sigalos, Happy New Year, Mac. Might see you later on if that's money. Who knows? Mac, thank you very much. All right, coming up. Maybe the
ABUS is hitting 5 here. Okay.
Where stocks heading next year? One Wall Street strategist says, rally on, Garth. He's here.
Okay, last trading day of the year. We've got an hour and 30 minutes to go.
Being a little overvalued in 2024, and we've seen that NVIDIA is still marching along. We need to try and find, I guess, better opportunities
on these pullbacks, trying to invest in Micron at these peak levels, it's going to be tough to digest for the investor. But that being said, performance is still performance. Trend is still trend. I'm a big believer in AI. I believe that this is not a bubble. Maybe certain segments like the quantum sector could be a little bit too early. But ultimately, this is the actual transition. This is where technology is veering. Otherwise, companies like Google and Meta and Amazon wouldn't have the CapEx just on this calendar year alone investing into this sector.
Yeah, I mean, what do you think about what's going on with the Fed? I mean, are you counting on a rate cut? Do you need a rate cut? And obviously, the Fed chair is going to be changing too. But right now, we have one price in. Whoever comes in is going to do one. So there's your one. How important is who runs the Fed or getting rate cuts to you?
This is where it gets tricky because it's more important about what Wall Street thinks, right? It depends on what Wall Street thinks in relation to where we are with inflation. The Fed policy stance has been long stated that they're looking for a 2% inflation average average rate, right? And there's concerns that if the Fed stance is too aggressive in cutting rates, that this could really stabilize inflation and not allow it to come down to that 2% average. And depending on which Fed head is going to be elected, there's
ABUS, this one's going here. ABUS.
Jump towards trying to do more than 2, maybe even pushing towards
MACD rising, volume picking up.
the door of 4 without a shadow of a doubt, especially if it's someone
ABUS trying to break out.
Trump and more in line with Trump's policy, it would make a lot of sense.
Okay, it's got an ATR of about 23 cents. Okay, let's see if we get a bounce here.
Instead of quarter basis point cuts on their first initial rate cuts. So, we've already seen an individual like Fed Marin looking and pushing for a 50 basis point cut. I don't know if that's going to be the case. And again, I don't know how the markets are going to react to this. I think that's going to be really telling. If the market does find this very positive, well, then certainly we know that the rate cut is equate to a bullish market reaction. Maybe that's tried and true, but if there's some concerns, it may just cause a lot of volatility and uncertainty. And generally with volatility and uncertainty, the markets never go up. They usually go down.
And I also think about, I know that there's a lot of geopolitics that are happening. They're trying to smooth lots of down.
Okay. That sucks. I thought we'd have something going here for us. It's really interesting that they would sell.
Buying opportunities. Is every pullback a buying opportunity? Because it has been year after year after year after year. I mean, at what point do you not buy in a pullback?
Well, I guess it depends on the names themselves. If we're talking about higher quality names, like 3 names that I absolutely love for the upside in 2026 would be Oracle, Meta, and Netflix. All 3 of these stocks are under their 200-day moving average, which is somewhat unfathomable for names like Meta and Netflix. We're talking about the king of communication services. We're talking about the king of media right now. And what's really underrated about Oracle, in my opinion, is the markets got ahead of themselves because of that earnings report with their forward booking numbers. It caught Wall Street by surprise. They immediately corrected themselves. Oracle's well off of those levels, off of earnings, but they had that recent news. They're now part owners of TikTok. And this is a segment that could be, in terms of short-term and long-term growth, very bullish for a name like Oracle. And of course, if they could figure out, their data center issues and actually have the capabilities of potentially achieving those, really frothy booking numbers, Oracle's severely undervalued for the long term.
Yep.
And, Meta being the powerhouse that they are, I think they're being overly punished for their CapEx. These 3 names just make a lot of sense, for investors to be looking at these pullbacks. It's almost as if it's a short-term gift, historically.
All right, low tick alert. Low tick alert. Okay, they're selling that. Hedge flows severely lower here. Hedge flows. Big drop in hedge flows.
All right, Charles Moon, stock strategist, Prosper Trading Academy. Great to see you. Great picks there because those are
Wow.
the people love to talk. joining us. I wish you the
68.
happiest New Year. Thank you. Coming up,
68.
well, what's 2026 going to bring? Jay Woods said 3 to 5% gains after he's called 3,900. And so he doesn't seem quite as positive on next year, but what's going to drive us or pull back when we look at AI and where's the smart money going? We'll be right back.
Look at this drop. Looked like we were going to rally. We hit the area that we thought we might see. Now we're right back down to the low. Yikes. Okay, we're going to take out the low of the day. That's the low of the day right there. That's the low. For a brief moment, it felt like we were going to be able to get through this. Volume picking up like it was this morning. Look at the volume this morning.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
What the hell is going on today?
Earnings breakdowns and trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Trading at Schwab is powered by Ameritrade.
Came right back down to the morning low. Shorts covered.
Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including
Again, hedge flows. All right, starting to hook right here. Hedge flow starting to hook up. Looks like. Right back down to this level, 68.65. Currently 68.70, 71.
CEO of Solidarity Capital Solidarity. Well, thank you so much for being with us. How are you feeling? Are you feeling? I mean, so many folks just say the earnings look so good.
Can we run this back up again?
Feel more positive than negative. Where do you sit?
I'm in that same boat, Nicole. Great to see you, and just excited about 2026. I think there's a lot of good momentum going into the new year. We're starting to see some of the impact of the rate cuts from the Fed. We're obviously going to have a few more next year. How many, of course, dependent on a variety of different factors. But rates coming down, you're seeing earnings reflect a lot of success from the consumer. Now, we do have some headwinds there. Consumer confidence.
Are they going to run this back up? This is crazy.
And is not as strong as it once was. And so, is the consumer still feeling the brunt?
The market is so thin that they're able to make these big moves.
Of the inflation that
Wow.
stayed. Now, new inflation has tapered off, and they've done a great job managing that.
Right back down to the same low.
Significantly, the investor and the consumer are still feeling some pain. But with all that said, everything's looking good to 2026. I'm excited about the IPO market.
Same level.
About small to mid-level M&A coming.
What's MACD going to do? MACD going to turn.
Large M&A opportunities. Does that come down to small, mid-level M&A opportunities in the private markets? There's a lot to like about 2026. It's shaping up well, and it definitely gets us excited of what the opportunities are out there for investors.
All right. Well, it sounds like you're in. I mean, why sit on the sidelines? It'd be a mistake to sit in cash on the sidelines, right? The AI trade, people really think this is the way to go. So, if it's losing steam, or is it changing sort of how it's going to drive?
Yeah, I'll kind of touch on that with your prior guest a little bit. I think and agree with him that AI is here to stay, that the opportunity to grow. However, there's going to be significant winners and losers in that trade. And so diversification is going to be really important to find the right opportunities to live with the AI trade. But there's also ways to hedge your bets a little bit too. Right now, obviously, we've had this incredible success, whether it's Micron, Broadcom, NVIDIA. these great successes that they've had. Well, NVIDIA now makes up about 8 to 9% of the S&P 500.
Hedge flows.
Makes a lot of investors nervous. Even the passive index type of investors, there's such an extreme concentration in the market with NVIDIA. And so it's
big flow right there.
To still benefit from that trade, from the AI trade, without having such significant exposure or risk if, you know, the rational minds come back into the market. Without question, the AI trade right now is driven by animal spirits. It is a bit irrational, to say the least.
What does that even mean? AI is driven by animal spirits? What does that mean? That just sounds like a dumb comment. All right, so we're just sitting here now after a big dump. Markets look very good. Ran up to 68.90, got our close to our target, rolled right back over. Fast dump to the downside. Hedge flows leading the way. Now what are we going to do? Crazy day. Crazy day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 2:40 p.m. We've got about an hour and 19 minutes to go. Futures just showing another bear flag.
Two stocks. That is an extreme from a historical perspective. And so for those who are interested, taking a bit of hedge, a bit of risk off, the equal weight's great. From the Mag 7 perspective, I agree completely with your prior guest. Love Meta. Love the opportunity. It's the lowest trailing 12-month PE ratio out of the Mag 7, trading in the 20s. I mean, really compelling for both what they're doing. Also, with the cash on hand.
Very nice slope to the upside. Very clean trade. And nice slope to the downside. Another clean trade to the downside. And right now, we're just kind of hooking. Can't figure out what's going to happen next. MACD's trying to turn. Volume picking up a little short covering here. That's about it. Disappointed in a sense because it looked like we were going to close on a much better looking candle for the daily. Not the case now. So this could go either way. We could touch the 21-day on Friday or even move lower down to the 50-day. So you should have some hedges in place. I chose the VIX calls. Let's see what VIX is doing for February. Those did spike as well.
Yeah, I mean, leadership is super important because it goes back to that old Warren Buffett comment of, you want to buy a company good enough that a ham sandwich could run, because one day a ham sandwich will run it. And so you want to look for good leadership, good structure, good business model. And at times,
ham sandwich
leadership team helps you
running a company.
Look at Apple. Earlier in 2025, they were the dog of the Mag 7, right? Especially with the tariff fears that they have. Tim Cook did an incredible job, one, getting a dozen 747s to fly a bunch of iPhones here right the night before tariffs hit, but also just to manage the tariff impact, to manage the administration relationships across borders, did an incredible job. And when you look at
volume coming in, it's just shorts covering most likely.
Mid-cap space, That's really something you want to focus in on is good leadership team. How are they managing the balance sheet, the CapEx? How are they managing, if at all, stock buybacks and the importance of those to drive returns? That's a big factor that we look at, but it's not everything.
Understood. It's great to see you, Jeff. Thank you so much. Jeff McLean, CEO, Solidarity Capital, Solidarity Wealth. Enjoy your happy new year. May it be a good one. Coming up, we're getting ready to break it down and look at the Fed because the Fed can drive this market. While some say we're too Fed fascinated, others think the rate cuts are imperative. We'll be right back.
BTBR.
The final 90 minutes of the trading day, that's when markets make headlines and traders make decisions. From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close. Here on the floor, I bring you real-time sentiment from traders driving the action. And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings. Live coverage of the close every single day. This is Market on Close.
All right, looks like we're going to roll over out of a bear flag here.
Only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets.
Stocks near the lows, lower half of the day's range. Micron at the lows of the day. Adobe back to earlier levels. VWAP, Adobe didn't get much follow through. Palantir pulling back. Okay, so maybe they take this down again. Hedge flows turning back down again. Hedge flows.
You can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Barnes, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time. Stream Schwab Network at schwabnetwork.com. Welcome back to the Watch List. We want to bring in our panel, Jeff Weniger, Head of Equity Strategy of Wisdom Tree, and Kevin Nicholson, Global Fixed Income CIO.
Okay, we got an hour and 12 minutes to go. Hour and 12 minutes.
Jeff, how are you feeling overall? I mean, the Fed made the move here in December. We saw some dissenters. There seems to be a lot of divisiveness on the Federal Open Market Committee. But people do think that monetary policy and fiscal policy will drive this market in the new year. What say you?
Yeah, we'll see. It should be pretty much a non-event type year for the Fed because if you look at a lot of the consensus, whether it's street consensus or the dot plots, I mean, what is it going to be? A cut or two? Nothing wildly aggressive. I don't think there's really any expectations of such. The reality is that you have an economy that just printed a 4 handle on an annualized GDP growth rate. You have markets internals. What sectors aren't? I guess staples. I guess you could say staples is doing poorly, but industrials is a sector in rude health. Tech and communication services melting higher. Not really quite sure why they should even be cutting.
Yeah, and there are people who think that, exactly that. Kevin, what say you?
It's a mixed field right now. Jesse, if you think about this, with me, I think that the Fed is probably going to be on hold for the first couple of meetings next year, just because they need to actually see the data. Because right now, there was not a whole lot of clarity that came from those minutes that we saw yesterday. You see that there are some committee members that are very much worried about inflation. There are some committee members that are worried about labor. And then there are some committee members that just want to leave things the status quo because they believe that we have already reached a good point, and they just want to wait and see what happens.
There's plenty of people who think that the tariff story.
Okay, INBS is starting to move again. All right, it consolidated since about 2 o'clock. Really about 1:45. Looks like it's going to start moving a bit higher. S&P pulling back more. INBS ticking up.
Inflation sort of stays where it is, but there is concern about labor. Is that the picture? Because it seems like the Federal Open Market Committee members seem to mostly agree that a cut could work. It's just when. It's the timing of when they want to do the cut.
And look, well, having groupthink on any committee is not a good thing. And so you want to have the Austin Goolsbys and the Stephen Myrons going in opposite directions. I hope they're sitting around and arguing with each other. That's the way a good committee should function. And, Kevin brings up a very good point. The data right now, because the government shutdown, is you make any heads or tails out of that CPI print. There's been a lot of skepticism with regard to that. What were we collecting in data in the autumn? How do we even know?
There's supposed to be 37,000.
A little bit easing now.
That's the total trade, 13 each? Okay.
Year-over-year case chiller the other day. Wisdom Tree Research continues to find negative year-over-years in rents. Those are two big line items in the household purse. So we probably have something relatively stable, but that PCE continuing to be stubbornly above 2%. They're in a little bit of a pickle in the near term until we can get a little bit of smoothing out and more solidity in these figures.
Obviously has so many clients, and what's on the agenda? What are you telling the clients? I'm sure they're calling and asking a lot of questions.
All right, we're headed down to the low again.
Your client first, for the most part, and growing Wisdom Tree. Just what is the outlook when you tell them about 2026, Jeff?
INBS hit the 200-day. That's the 200-day INBS. Intelligent Bio.
Big, massive analyst team. I'm thinking about my colleague Brian Manby putting together some of these exhibits with how many firms, what percentage of the firms are trading for north of 10 times sales. And I mean, a lot of stuff showing up 1999, 2000. And you can put the finger directly on Silicon Valley. So we have a lot of trepidation with regard to that area. We've been steadfastly constructive.
S&P just grinding a bit lower with an hour and 8 minutes to go. Hour and 8 minutes.
On that end. So we think that we could probably get some alpha in 2026 in developed equities. A lot of the themes and theses that we're on, they haven't really changed in my view. Japanese equities, for example, with the NISA expansion, the corporate governance reforms, and so on. So that's pretty much where we are. And with that big red flag, I guess you could say, with the Broadcoms, Teslas, and Silicon Valleys of the world.
Yeah, and Kevin, I'm not asking you to make predictions, but maybe some surprises or some things that you're really secretly waiting for, or maybe you have a base case or a bull case. What are you watching?
Well, when we think about our base case going into 26, we think that, S&P will be up 8 to 12%. We think international is going to be flat to up 10%. And we think GDP growth is going to be 3%. And you're going to get inflation at 2.6. So at the end of the day, where I think the surprise is going to come is
okay. Netflix, we got 3,000 buyers of 3,000 January 30th. 95 calls at $4.30. That was midday. Netflix buyers of the 95 call for January 30th.
Even if the Fed does lower rates further, we think that we've seen pretty much everything that's going to happen as far as the 10-year going down further.
A rare losing last day of the year. Just happens to coincide with the JP Morgan collar. Okay, here we go. We're pushing a little bit lower now.
Yes, this is where Jeff and I disagree. We continue to like technology. We believe that the Mag 7 is still the place to be for all intents and purposes, because a lot of these companies can weather the storm. They have a lot of free cash flow available to them, and they are able to see their way through rough times, which is unlike a lot of other companies. We do think that we will see some broadening out as far as the sectors are concerned. We also like financials as well.
All right, and Jeff, as I think about some of the final thoughts here, because this is the wrapping it up and no Santa Claus rally, still have 2 more days to complete what is technically a Santa Claus rally parameter of the 5 last trading days and the 2 first trading days. Do we see it? Does it matter? You had 3 great years.
Oh, individual sessions, I haven't the foggiest idea. Who knows what will end up happening in the first trading sessions of the new year. But look, it is a raging bull market. And let's figure out the line items here. Broad U.S. equities, gold, silver, basically the metals complex in general. We have a 4 handle on headline unemployment in this country. We have inflation that have had a 9 on it. And is
S&P.
now question mark. We'll call it 2.7 for now, but with a question mark on the back end of that.
A little bit of short covering here, S&P. This is a new low of the day right there. New low of the day. Okay, so this is no longer significant. This was the previous low of the day right there. Whoops, what happened there?
Yeah, and look, ETF strategy, there's been so much interest.
SPX.
In ETFs have been incredible. That's where people definitely like to have some hedging. They're not in one position.
Zero Gamma down there.
ETFs have become extremely
Got a lot of selling in today.
Most of the folks I speak to still think that's the case for the next year. Kevin, you get the final word.
Well, I think that a lot of people are saying that this is equivalent to 1929 or 1999, and we think it's more like the 1950s and 1960s, where we can sustain growth for a longer period of time, and that's where we think we are right now. That's the cycle.
Wonderful to see you both. Jeff Weniger, Head of Equity Strategy at WisdomTree. Kevin Nicholson, Global Fixed Income CIO, Riverfront Investment Group. Great to see you both. And friends, thanks for being with me here on Schwab Network in 2025. This is the watch list. I see you every day at 9 a.m. and 2 p.m. So I'll see you next year, right? I wish you a happy, blessed, healthy new year. And keep it here on Schwab Network every single weekday because we do have you covered all day long. I'm Nicole Petalides live at the New York Stock Exchange. Market on Close is next.
S&P trying to hold the low. This low of the day. Futures, looks like another bear flag on the futures. Hedge flows, trying to hook upward, hedge flows.
You get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always
Calls and puts working. Trying to bounce here. Shorts covering.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Okay, we only got about 7 stocks green on the day. This is crazy. Very unusual day. That can be said. Very unusual day. We only have 50 stocks on the S&P 500. 450 stocks are declining. We only have 8 on the Qs. 8 to 9 stocks on the Qs. So 91 stocks, 92 stocks are declining. And IWM doesn't look much better. Crazy, crazy. All right, low tick alert. Low tick alert. Okay, low tick. Making new lows here. Okay, puts are getting a bid right now. They're jumping. Puts are jumping. The ones I'm watching here. Futures dropping off. Okay, so we're almost down to the 21 day with one trading day this week left. Okay, today is our last trading day of the month. We got the JP Morgan collar roll. People talking about what those strikes are.
Earlier today, all of these different indexes were trading almost in lockstep, all down around 40 basis points or so. That's where we find the S&P and the Dow, the NASDAQ down about 0.5%. But the story all day long.
SIDU, that one's moving.
Market breadth,
okay.
But not a lot of movement. So right now, in real time, less than
S&P dropping very strongly.
And the NASDAQ components are actually higher on the session, but the moves are relatively contained. And what does that mean? Well, that's the recipe for what we see on the screen right there. Let's take a look at some of the other products that we got on our radar in the futures world. You see the 10-year yield actually starting to climb a little bit into the closing bell here, up 4 basis points. Is I would say, pretty significant move, all things considered. The dollar index is little changed. Gold, I don't want to say this is plunging, just because we have seen some pretty dramatic moves in recent days in the metals market. We don't have silver on the screen, but silver is actually below 70. So if you're looking for volatility, the metals is where the volatility has been. I'm sure we'll talk about that throughout the show. Crude oil, pretty much been hanging out around 58 the last couple sessions. It's back below 57.5 now in the February futures. And Bitcoin, certainly an area that has garnered a lot of attention over recent years.
Okay, nice move on hedge flows here. Continue to drop off with a little bit more than an hour, less than an hour to go.
So that's I think where investors are going into 2026.
So you would essentially ride that type of a rotation into next year.
I don't think this is the backdrop to pull off a risk. I think the key is diversification and also making sure that you're watching the yield curve, because I think the one thing in the horizon is if yields get above 4.5% on the 10-year, we have seen that as an indicator of a risk-off sentiment, but we're not there yet.
We are not. And just to amplify your point, and Brenda, we can start here. The S&P over the last basically 2 months is essentially flat. We got the 6,900 in the S&P late October. You've seen financials up about 5% since then. Transportation stocks up 5%. Software down 7%.
Junk bonds. Let's see what junk looks like. Junk. JNK.
How are you viewing things?
Junk is okay. It's neutral. A low volume sell off. I'm not really that concerned about it.
I don't think it's enduring change, but I think it's healthy to have a
that was responsible for so much of the strength that we saw from April really through September. But I do think when we look at fundamentals, I think the story continues to be strong. Our concern is that is very well defined, and everybody is expecting 2026 to be a strong year. And generally, markets perform best when there is some level of skepticism, which maybe we've had a little bit of that in the tech trade more recently. But nevertheless, there's a little bit of skepticism and there's room for upside surprise. And when we look at this coming year, we have projections for mid-teens earnings growth for the S&P 500. Valuation is elevated. Expectations for economic growth are high. So we have to ask ourselves, where is the upside surprise going to come from? And I think it could come from areas outside of tech. If other companies and industries can really figure out AI. And what we saw over the summer, especially with the MIT survey that came out, is a lot of companies were working with AI, but not having a lot of success. So if we start to see that success grow and manifest itself in better profitability in some of those sectors outside of tech, then I think that could be where the surprise comes from. But we think it's really important to stay disciplined in this environment. And so we have generally been trimming equity as markets have been at or near all-time highs, and we expect to continue to do that as next year progresses.
Well, Warren, I mean, I guess you're kind of in that camp of folks expecting further, kind of good things here. The 7850 on the S&P, your year-end target for next year. What gets us there in your view?
Yeah, I mean, I think you have, when you stand at the beginning of a new year, you have kind of a process of elimination you go through, because we're never going to see all the wiggles that happen throughout a year. So we have, the big picture is Fed is easing. I think that's pretty well known. It's just a matter of how much, 2, 3 cuts. We think 3. We don't see a recession. I mean, there's been some fiscal contraction, but we still have, historically high fiscal deficits, and we think those will expand in the first half of the year due to the big, beautiful bill impacts. And then we have earnings growth accelerating. We have Q4 earnings estimates. It's really important. Q4 earnings estimates have accelerated, and that's not what you see usually seasonally. This is the fastest acceleration of Q4 earnings we've seen since the post-COVID recovery in 2020. So when you put all that together, it's really hard, in my opinion, to construct a bear case. I understand the valuation point, but we've looked at that and they don't concern us. In fact, I think what we see is margins expanding by 90 basis points, the Fed cutting. And so again, we've never seen a year historically where multiples even contract.
Okay, let's see what,
So it's all
okay, we're going again.
The Goldilocks environment.
Gonna go again here. S&P, we're gonna drop more.
At least through the first half of the year, that's when I think all the cyclical disinflation pipeline continues to come through.
Junk.
If there's gonna be a problem,
IWM.
it's gonna be later in the year when we start to
IBB. Biotechs.
and the rates market's gonna have to recognize what that
Biotechs.
means exactly, and the yield curve may normalize. But up until that point, I think
Biotech's neutral.
they're pretty strong tailwinds to the bull market.
Brian, how much are you focused on that kind of interplay of whether we get this first quarter acceleration in the underlying economy and then what it does mean for the Fed? I mean, are we just going to be able to bake in, you called it a neutral Fed. So you think they're going to be kind of in wait and see mode in the first few months of next year?
Yeah, I think that's a great point. I think the first half of the year, especially when considering Trump's making an announcement in January, and then we know the effective date of when the next chair is going to come in. I think it's a wait and see, because right now economic growth is above expectations, which will keep inflation a little warmer than that 2% Fed goal. But at the end of the day, to Warren's point, it's not a recession. I think it's more of that investors for the last.
Okay, we're making more lows here. Okay, making more lows to end the year. Wow, that's that was completely unexpected. Started off the day, if you recall, started off the day, all the New York FANGs were pointing higher. Looked like we might have a nice little rally into year end. Immediately, I mean, right after the opening bell, we got sell order programs came in and just knocked everything down a notch. While it is a negative, I'm not really that concerned. I mean, the last time we pulled back to this degree over here, you can see these red candles, previous red candles right here just a couple of weeks ago. The 50-day continues to hold price. We're at the 20-day. I don't see anything that says that we should drop dramatically.
Beating expectations in the U.S., and that's not happening broadly internationally. We think it's important to have some exposure.
What time we? Okay, we got plenty of time left.
So we think that diversification is important. That we would not expect
Futures continue to lose it.
returns that we saw this year internationally versus U.S. Again, unless we start to see the fundamentals really get better. But think that diversification.
Earnings are going to be the key. Earnings are going to be the key.
And would agree that if you look at small and mid cap stocks, still think there's room for more appreciation there. And would think that being diversified this year is important. But also just think being disciplined is the second piece. And I think that volatility, as much as everybody expects this to be a phenomenal year from a fundamental perspective in the U.S., I think that volatility will still be.
S&P is still moving lower.
We think that being nimble and
I think everybody's going to be saying the same thing. Everybody's going to be running to the bearish side of the boat. Sundog, I would recommend. I don't do recommendations.
Overlook the possible impacts. What are we looking at right now? It seems as if it's kind of cooled off as crypto has come back, but then we see silver doing what silver's doing, and you see these periodic eruptions of sort of meme stock action.
Yeah.
Okay, we continue to drop off here. Futures continue to drop.
Debasement trade, which people are
wow.
Obviously been talking about.
Wow.
About it for years. I think that the defining secular backdrop right now, coming out of COVID and the pro-cyclical deficits we run now concurrently.
68.55 coming into view. 68.55. 68.55 is coming into view.
The left tail to protection of purchasing power, the right tail. And that debasement trade, it's not just watch the dollar go down. It's this blob of liquidity that moves from market to market. And it's a new mindset amongst retail investors. I think it's very difficult to model. Like you said, we try to, but I anticipate it being with us. It will just rotate, like you're saying. We're going to rotate from crypto and into silver, and next there'll be something else. And I do think it's supportive, though, ultimately for assets in general. And that's the secular backdrop. It's one of the reasons you don't see a recession, you don't see the Fed tightening, you have deficits that are higher than 6% of GDP. I think you have to refrain from being underweight equities at the very least. And the next decision you make is what you pair with those equities.
Yeah, covering should start pretty soon.
Dissuades people from having heavy short positions or being too aggressive or maybe being underinvested. And I guess for as long as it does last.
Yeah, we're right at the 1 day estimated move now. Okay, sorry.
Thanks very much, Brenda, Warren, and Brian. Meantime, another big year in the books for NVIDIA, the AI giant climbing another 40% in 2025, helping lead the year's.
All right, SIDU, little pop there. Can we get some more out of this? INBS pulling back. INBS pulling back.
AI spending growth and U.S.-China trade tensions. Also, when we saw a lot of the market lows, but that April low was the bottom for NVIDIA. Shares did stage a massive comeback through the summer, climbing back towards 150.
INBS selling off.
GPU demand really took off. NVIDIA's market cap actually crossed $5 trillion, making it one of the most valuable companies on the planet. But then since late
What time have we got? 3:15. 3:15.
China revenue could actually change that downward trend. And why do I say that? Well, reports today say NVIDIA has up to 2 million H200 unit orders from China-based customers. These are chips that have now been approved to be shipped to China. Chinese firm ByteDance, the parent of TikTok alone, could get approval for $14 billion in chip purchases from NVIDIA. And so that's why NVIDIA is turning to TSMC to ramp production. You can see shares are up about 1.5% today on that news. But Chinese government approval really is just a total black box. Any H200 revenue could.
This is a crazy day. I got to tell you, this is a crazy day. Wow. Crazy. Jeez.
barely reacting flat today because investors have lived through these repeated starts and stops on China chip sales. So until orders actually turn into shipments and shipments into revenue, the market is just taking a wait and see approach. Or maybe people just aren't paying attention right now and they have the day off.
That's no doubt true, although also huge base effects there. It's harder to move the needle for
Silver.
Very good point too. Yes, that is a good point.
Silver with the pullback. Okay, let's look at silver. Silver. Pretty decent pullback on silver. We're going to drop to the 21-day maybe. Eiffel Tower pattern. A lot of people talking about.
Mike, NVIDIA is a name we continue to own at Intelligent Alpha.
Adobe.
At Intelligent Alpha, we use the modern large language models to do our stock portfolio analysis, our stock picking. So our models still like NVIDIA. And I think to Christina's earlier point, right now, this whole China thing has gone back and forth for so many months. I remember 6 months ago, we started thinking about this. And I think we were very early to the game thinking that, look, eventually, these chips, the higher end H200s and probably Blackwells eventually will be sold into China. And here we are today still talking about it. It hasn't happened yet. And so I think once we maybe start to see some actual
SOPA still going.
The P&L for NVIDIA, maybe that's when the stock finally gets credit for it. But I think heading into 26, the AI trade is still on. It's still intact, in my opinion. And I think we still have a few more years to go in it.
When it comes to, NVIDIA, of course, as I said,
SOPA on the move.
Stock, you see valuation compression, pretty much along the way. It's at like 26 times forward earnings. This is going to be, 160 billion in free cash flow in the coming fiscal year. So do you think that's just kind of temporary, or is the market looking ahead to when, of course, inevitably it slows growth off a big base?
The market's probably looking ahead to some extent, but I think there is a challenge of where is the big incremental buyer, right? I mean, indexes obviously are probably helping all of the Mag 7 because they're so overweight those stocks, but who's the big idiosyncratic sort of incremental buyer for NVIDIA? Do they need to see some of these numbers from China to adjust? Do they need to get a better sense maybe for what the demand is heading into 27? Because if you think about 26, what I think is really interesting.
Hedge flows. What are they doing? Hedge flows. Turning back up. Selling some puts down here. Get everybody scared now. Yeah. Not a whole lot of time left to do anything here now.
I think we need to start to get a sense of what does the demand look like maybe into 27 to get investors to feel a little bit better about that, to be that incremental bidder.
When you say the AI trade is alive, I mean, there's so many iterations of it, or it goes in these waves. So we had, early in the year, the DeepSeek scare. And then later in the year, the market just decided it wanted the, kind of Alphabet, Broadcom ecosystem over the OpenAI, Microsoft side of things. Is that going to continue to be a little bit of a push-pull, or are we going to be able to get some clarity into how the winners shape up from here?
I think next year the big story in AI will be about distribution.
VIX calls are up about. VIX calls are up a bit. Not a big deal. VIX calls are up about $15 per contract.
I think that's where the tables turned a little bit because we finally saw from Google with all of the tools, all the resources that they have, they finally put out a great model, and now Gemini 3 is also great. Now it's neck and neck. I think those two companies are really the two that are vying for frontier model sort of winner. In 26, I think it's more about how do these models get distributed and actually into users' sort of daily workflows, daily lives. Google does have a good advantage there. So
Palantir, shorts covering. Okay, let's see what the New York Fangs look like. All of those pull back. Microsoft pull back. NVIDIA pull back. Okay, those two are not working. Google pull back. Everything's pulling back. Okay. See what happens on Monday. Hedge funds, portfolio managers closing. positions end of the year to start off the new year with some cash to buy new positions. So we'll see what happens on Monday. I got a feeling, it's not Monday, Friday. Got a feeling we're going to see big change, maybe some stocks coming off that get bought by institutions. I don't see any reason to get too upset about the markets right now. We are a bit extended. If you look at the longer term charts, we are a bit extended. Other than that, though,
AWS just had a great Q3. And on top of that, they've now announced deals to bring OpenAI into the platform. They may do
equal weight index. Yeah, that's back to the 21 day. Okay. Number of stocks above the 20-day dropping to 50%. We had a bounce just 2 weeks ago at this level. Same thing with the 50-day. We could see this turn back up on Friday into Monday. That's what I'm thinking is going to happen.
Either gain favor or start to become viewed as legitimate winners in the AI world?
Software is another space that our models have been more interested in.
Multiples aren't that intense at the moment. Multiples has room to expand. A pullback wouldn't be that surprising, though, right? Pullback 5% wouldn't be that surprising to start the year. Hopefully we don't.
And so our models have kind of come back and said the software names have been beaten up a lot. Adobe is one name that we do own. We owned it earlier in the year. We were wrong about it. We own it again now. Hopefully we're right about it going forward. But I think the take from our models is one of two things is going to happen. Either these companies are going to prove that they can integrate AI into their businesses and AI can or they're going to show that in some cases AI just won't be as bad as people think. Because I think what happened in 25 was for many of these businesses, the worst case scenario got written in, which is that AI is going to destroy Adobe. It's going to destroy Salesforce. And I think the odds of that are probably low. So I think that software trade does become more interesting as we head into 26.
Doug, really appreciate you.
Almost 1,000%. Okay, we're going to go back down again. Almost 1,000%.
All right, we are just getting started. Up next, healthcare in the new year.
We're going lower.
Evan Seigerman, season store for the sector as the group lags behind the broader market, where he sees the most
S&P.
opportunity. We are live in the New York Stock Exchange. We're watching closing bell.
S&P making a new low. Well, this is really unusual, I have to say. I don't recall the last time this has happened. No bounce. Last day of the trading, last trading day of the year. 6,900 futures. The low right at 6,900 just now. Is that going to be it? Doesn't look like it. 60 minutes on a sell. Pretty aggressive. 2 60-minute candles. Pretty aggressive. If you look at the 60-minute chart, obviously. Here's the 60-minute. Pretty aggressive move there. S&P. Looks like we're headed here. Maybe. Wow. Wow, wow, wow. The other hedge, obviously, we could do some SPXS. That's coming off the low. That's $30. $30 for some protection there. It's a wasting asset. Or you could do put credits, put flies for cheap. They're going to be expensive today, most likely. Maybe on Friday. On Friday, we could see whether or not this is going to follow through or not to the downside, or if there's going to be an opportunity for institutions to sell into this into the last day of the year and then have cash to buy positions on Friday. I'm thinking that's what's going to happen. So we'll talk about that on Friday. Tomorrow we have off. So everyone enjoy your New Year's holiday. Try to stay safe. What do we got? About 35 minutes to go. 35 minutes to go. SOPA, just off the highs of the day. SOPA. SIDU trying to break out as well. SIDU. SOPA, SOPA trying to break higher. Consolidating. Could be active after hours. Futures, another bear flag potentially. Lots of selling volume. So much for the JP Morgan collar, right? 7,000.
RDACU may resume in less than a minute.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
AFJK getting back down to the 65 level. That's where I'm thinking about buying some shares down here. Sit on it a few days and see if we get a nice pop back up to the 130s.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Sam Vardas alongside Alex Coffey over in Chicago. Joining me now here on the floor of the New York Stock Exchange, though, is Dennis Salfa, who's the broker and global real estate advisor for Sotheby's International Realty. Thank you so much. Happy holidays. Happy holidays. And you're dressed for the occasion for New Year's Eve. I love it. I love it. Look, you're here to talk about the housing outlook. Obviously, at this time of the year, we're looking ahead to 2026. You and I only spoke a few months ago.
Okay, looks like we're going to punch lower here. Looks like we'll punch lower. 68.55 puts are going in the money.
They're just stuck in place. You have Gen Z that feels like they're never going to own a house. Affordability is going to be the defining factor in 2026. I would say that there's some glimmers of hope, though. I do expect affordability to ease slightly. And my big idea with 2026, what I believe will happen, wages and prices. You'll really see strong wage growth, and these wages will outpace price growth.
Futures, more bear flags. Sitting just below 6,900 on the futures now. So below the 68.90 level, we had a bearish leaning. We're looking for it to eventually get back above 68.90. That didn't happen today. All right, we're pushing a bit higher now. The puts are pushing higher. S&P is pulling back pretty aggressively. Okay, lots of volume here. Lots of volume in the. Okay, lots of volume.
Interesting. I mean, what are we talking? Q1, Q2?
Lots of volume in these puts.
Now and then to actually see a meaningful change, because as you say, little green shoots here and there, positive, encouraging sort of baby steps, as you say. We're taking a look at that data yesterday, and yeah, you're right, we are seeing a deceleration, but then there's also like pockets of the country. I mean, this is such a big country as well. I mean, so you have such diverging sort of trends happening in different places, but yes, what is going to change between now and whenever that's going to happen? There's not one
Okay, futures.
It's going to take time. It took us a very long time to get to this point, right? Affordability is such a mess because of numerous things that have happened over the years. We've had massive underbuilding, we had massive government spending, we had ultra low mortgage rates, we had parabolic price growth. Just a number of factors got us here. So this isn't an overnight fix. It's going to take time. But when you really see prices, you see incomes, you see rates really align, that's when you start to see affordability start to ease. So it's a reset in 2026. Real estate's very cyclical, and this is a tough housing market, and it's going to take us time to get out of it. But if we can see improvement, specifically with wages, prices, mortgage rates too, you know, they're around the 6% level, lower 6% level. We started this year around 7%. We hit 8% in 2023. So this is an improvement. This does give buyers some purchasing power, specifically those on the margin buyers in 2026.
Not to mention, we just had a very sort of sobering conversation with our previous guest, which was talking about the fact that you know, obviously the job market is changing because of what artificial intelligence is now doing. So obviously people are worried about that. So you've got the affordability, you've got the rates. I'm just wondering, you know, looking at the housing market in 2026, obviously there's been a big conversation around the home builders as well.
Okay, can we get a bounce now?
That they've had to come out with to try to
Get a bounce.
Are you seeing anything as far as easing margin pressure for some of those companies?
Yeah, I'm just thinking that.
That are dealing with, you know, a market.
I'm just thinking that this is. These are institutions, hedge fund managers, taking profits off. It's causing some selling, maybe adjusting positions, collecting cash, maybe sell some. There are losers, the last trading day of the year. And then on Friday, when we start the new year, they'll have cash to buy positions. So that's what I'm thinking. That's what I'm thinking. Okay, got shorts covering now. Shorts are covering. Here we go. Shorts are starting to cover. Hedge flows turning up. Okay, hedge flows turning up. Shorts covering.
About 54% of mortgage holders, they're holding a mortgage rate under 4%. So no one wants to give that up.
I'm interested in some of your notes as well that you pointed out about how people are going sort of.
Okay, shorts are covering, getting a nice little pop back up.
Home buying and you know home ownership now. I mean, you say that the path looks very different now compared to how it has in the past. And you sort of the reasons why people go out and purchase homes. Can you sort of talk us through some of the trends you're seeing and why?
So the median age of the first-time buyer, it's jumped to 40 years of age.
Right, yeah.
So this is just a totally different environment. And you hear from Gen Z how frustrated.
Come on, let's go some more.
They've done everything right. They have an expensive education. They have a good job, yet they can't get ahead. They feel like they can't get into the housing market. So you're seeing Gen Z and just young people.
It's just shorts covering for now. Shorts covering.
They want to get into the housing market. It's not the traditional way that we might have done it in the past. They might be purchasing investment homes or purchasing a home that has an accessory dwelling unit, a duplex. And this way they can rent out part of their home, and that helps to offset the cost of insurance, of taxes. They're having to just be creative, be flexible. They're purchasing properties with friends, anything they can to get into the housing market. There are a lot of people that
still really believe in the dream of home ownership. And they understand the value of home ownership. They want to become homeowners. They want to build their own equity. So in order to do it, yeah, it's a challenging environment, but they're having to be creative.
It's interesting that you say that because obviously Gen Zs and millennials, for that argument as well, have seen their parents do it a little bit easier than they were able to do. But the whole idea and the concept of home ownership, I mean, have you seen that being put on the back
Her voice, I don't know what it is. It's just very squeaky, like she swallowed one of those toys. Sorry. Okay. Looking for a little bit more upside, short covering. We've got 25 minutes to go. Looking for a little bit more upside, maybe get back above 68, 65 or so. That'd be nice. Zero gamma. Let's see if we can pop through here. Trying to push through this level. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We've got less than 25 minutes to go. Looking for a bit more short covering. See what happens here. Okay, let's push this. Let's go. LETSGL. Let's go. Yeah, let's go. Go, 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 go. Go. Push it, push it, push it. Push, push in the bush. Let's go. Let's rip this sucker back in the opposite direction. Be nice. Here we go. Futures coming off the low. Looks like shorts covering. Dealers will need to close positions as we start to rise here. So people will start covering, monetizing their puts, hopefully a little bit more. Can it turn out to be more than this? Isn't there a song more than this? Okay. Okay. S&P 500, SPX.
SMST.
Can we get some more out of this? Come on, let's go. Let's go. Let's go. Come on. We can do it. We can do it. We can do it. Go, 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 go. Go. Go, go. Go. Let's go. Damn it, Janet. Let's go. Buy, buy, buy. Look at all the volume in this. Shorts covering, dealers having to close positions. They're having to, traders are having to monetize those puts. Getting a nice follow through. Don't hyperventilate, Vinny. You might pass out before the closing bell. All right, this looks great. Looks great. Big whippy price action today. Would like to see a big wick on today's candle. A lot more downside than I was anticipating. But it is what it is, right? As they say. Okay. Can we get some more? More short covering? We got some nice momentum here. No follow through. Come on, you can do it. Hope you're having a good day. Hope you're having a good day. No one ever wants to see a red day unless you're bearish, but yeah. Santoli, I like this guy. He's good. Mm-hmm.
Different relationships. I think Warren will remain active. Ideally, he'd have a relationship with Warren. Warren would have a relationship with Greg, much like.
All right, one more time to the highs. To the lows. So what are we going to do here? We're going to roll over.
Feedback. There's a great story with Warren and Charlie that on an afternoon, end of the summer weekend, Warren would deliver an idea to Charlie, and Charlie would say, Warren, that was the stupidest idea I've ever heard. At least do me a favor, go home and take a look. And they come back the next day and they reverse the opinion. No, Charlie, you were right. It's terrible. No, Warren, you were. And that banter back and forth sort of surfaces truth. There's the core belief, that you want to find businesses that have the capacity to reinvest. They have strong, powerful brands. They have management who can take long-term bets, which is a scarce group. It tends to be family-run companies. They'll still look for family-run companies, businesses where they can make the long-term decisions and free themselves up from Wall Street.
Yeah,
It's really been the unhinging of Berkshire from sort of Wall Street requirements.
For sure.
Has really
All right. So we got a little short covering rally. Now we're going to see some more selling.
percent versus
Well, that's not what I wanted to see.
19 in the S&P.
Wanted to see a little bit more upside.
Warren in May did announce that he would be stepping back at the end of the year. He still said, look, I'm going to be there if there are large opportunities. I'll be looking. I'll be helping out. You get the
Yeah, I can't see Warren being completely out of Berkshire. He'll be around.
MSTG.
Right.
Guy's done a great job during his lifetime.
Well, I have to just
What did they say? Millions of percent that he was up in his lifetime? I forget what the number was.
exists is called liability. And people are walking around with a big sack on their back saying, oh my, how are we ever going to unburden ourselves with this liability?
Yeah, right.
Well, the markets will give them every reason to unburden themselves because the market will deliver at a time when it's no longer 400 billion.
Mm-hmm.
It feels like 600 or 700 because what you're buying will have stumble. And you see the ingredients of stumbling being sort of assembled by extra leverage in the system and by valuation excesses in the system.
Right.
It's an across the board thing. Things you have to be fairly opportunistic, but the notion that 400 billion board.
The call flies that I have for the end of January, those are $150 right now. So if you wanted to get in, they're $150. We got in at 130 and 140. Those of you who got into those.
So you mentioned the family businesses and these other companies that really seek to sell to Berkshire Hathaway. Is there any risk that won't be as much the case if Warren himself is not there eventually?
Well, I think Greg's been there, and then so it often proceeds over time. It's not. It can be sort of like signing the line right off the bat, but typically they get to know each other. And an ambassador of that interchange has been Greg increasingly. Its example, especially.
Okay, we've got AFJK's pulling back some more. I'd like to starting to get towards close to 60. So I have a limit order to buy some at 60. I'll scale in with the potential that maybe this pulls back even more down into the 50s before going back up again. AFJK. Momentum traders have been messing around with this one for a while. Okay. Gonna run one time to the highs. How much time do we have? 17 minutes left. 17 minutes left.
At full speed and with full throttle.
Yeah.
When finished, if there's money left over, the mantra is send money to Omaha.
Yeah.
At that point, it gets mixed up with all the other cash and properly invested.
Right.
A firm that doesn't sort of separate.
Okay. Let's see. Adobe.
Stumbling, and Warren avoids that by.
Yeah. Sundog, I wouldn't be too concerned about the markets right now.
Do you make much of the fact
I really believe there's a lot of this is portfolio managers and hedge fund managers taking their losers off, also maybe taking some profits for the end of the year, and then taking some cash to get ready for Friday and Monday, the start of the year. All right, so Adobe pulling back in. I could close this for how much? About $30 maybe. Adobe. It's at 50 cents right now. Okay, so I'll let the premium, the theta kick in to these. Good. All right, looks like we're going to go some more here.
They've repurchased $61 billion worth, and as that widened moat between the spread between intrinsic value and market price increases, you have a chance of seeing accretive acquisitions.
Yeah, their value-sensitive investment instincts apply to their own shares as well.
Yes.
Thomas, so great to have you weigh in on this. Thank you very much.
I welcome
It's good to see you.
the opportunity. Thank you very much.
Come on, futures. We'll see some more short covering. Dealers closing positions. People monetizing puts that are maybe just in the money. They're going to take some profits off. It's not going to matter much because those puts that aren't in the money, they're just going to expire worthless. Dealer doesn't have to worry about those, but the ones that are like 68.50, 60s, 68, 65s, they'll need to take those off. Nothing. We've got 14 minutes to go, a little bit less than 15 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Coming into the closing bell, the last trading day of the year. Not the best way to end the year, but we are only about a 1.5% off of all-time highs. So there's that as well. Okay, so we've gained what, 45% from the April 7th low. So if you've been in a hedge, if you've been in a index fund, it's fine. It's fine, like JEPI or something like that. Okay, JEPI, JEPI, JP Morgan. Okay, a little bit off the high. JEPQ. We're not going to be up every single day. These still look fine. SPHD. That looks fine. TRBCX. Yeah, these are fine. These are fine. TRBCX. These are fine. S&P. Okay, what are we going to do here?
FUN. WTO.
Micron. Okay. Palantir, short covering off the low of the day. Palantir. Okay. 68. 68.55. 68.55s. Okay, here's the S&P coming back down.
WTO. BMNZ.
Futures just kind of sitting here. No slippage.
WTO.
Okay, so it looks like we're going to pin right in this area. Okay. We'll close Adobe next week, maybe. RCAT.
12 minutes left until the closing bell. Let's get back to Christina for a look at the key stocks to watch.
All right, Mike. Well, let's start with
shares of Chinese EV makers, many of them taking a hit today as Beijing really revised its vehicle trade-in subsidies for 2026. So the program incentivizes people to trade in their gas-powered cars for an EV and a rebate. But the program is raising the minimum eligible purchase price for a new EV, meaning some of the budget options will no longer qualify for the incentive.
Low tick alert. They're selling right at the close.
Shares of Corcept Therapeutics in a nosedive today after the FDA did not approve one of its key drugs for a rare hormonal disorder. The company said it would meet with the FDA to look for a path forward, but that's why shares are down almost 50% right now. And
Look at the volume. Look at that volume.
Shares are also sliding after a downgrade from Wedbush. Analysts see near-term pressure on consumer electronics, especially handsets, smartphones, as higher costs push up prices and manufacturers cut production, and they expect demand to weaken, which in turn means less demand for GlobalFoundries chip manufacturing services. Shares down about 3%, Mike.
All right, Christina, thank you. Well, coming up, retail's rough ride. We're breaking down the year that was and ask if whether rosy days might be ahead for the sector. That and much more when we take you inside the market zone.
Okay, moving lower. We'll keep going here. We've got 9 minutes to go. 9 minutes to go. Markets continue to drop off. A lot of volume here. A lot of volume. Low tick alerts. A lot of stocks getting sold.
WTO.
10 minutes to go. 9 minutes. 9 minutes to go. Okay, we're at the low of the day right now. Right here at the lows. No short covering. A little bit right there.
WTO.
Wow, close at the low of the day. That would be. I haven't seen that in a while.
SIDU.
Last trading, not only the last trading day of the year, but close at the low of the day. That's wild. Volume ramping up on the sell side into the close.
WTO.
Futures trying to bounce. Not very successful here. Ooh. We've got a little bit less than 8 minutes to go.
WTO.
These shorts going to cover now? Adobe. Micron. What's Micron doing? Micron. Okay. Micron down 2% on the day. It's starting to turn back up. Micron. Pretty good prospects for Micron going forward into the first quarter. 274% earnings growth. That's huge. All right, we got some shorts covering here at the low. Going to close right at the low of the day. Don't fret too much about the markets. Most of the indicators, most of the things I'm watching suggest that at the worst case, we'd probably see maybe 2 to 5% pullback. I'm not thinking that's going to happen. I really got to base our opinion on the first 2 trading days of the month. That's going to be Friday and Monday. Okay. So there's still a good possibility that this is just the hedge funds and portfolio managers selling end of the year, profit taking and taking some laggards off, accumulating some cash for the new year, start a new year. That's what I'm thinking. So looking for a big bounce here. How fast can they rip this back in the other direction?
in retail heading into 2026. Kate, we begin with you. Some tough going for some restaurant stocks.
Mike, it's so true. BTIG called it a humbling year for the restaurant sector, and that's really putting it mildly. Fast casual and quick service restaurants really took the brunt of losses this year. Cava, Shake Shack, Chipotle, the Bloomin' brands all seeing major pullbacks down double digits year to date. Sweetgreen, though, the biggest laggard, it was down nearly 80% this year as younger consumers tightened their spending. Meanwhile, the winners for the year, fast food names, McDonald's, Yum Brands, QSR, and Brinker, Chili's parent company, all fared best. The standout performer, though, Dutch Bros, up over 16%. This, of course, as Starbucks continues to try to stage a comeback. I spoke with TD's Andrew Charles, and he said some key themes for 2026 will be value offers continuing in fast food, and look no further than McDonald's adding value assessments into its franchisee system, grading for proof of that.
One more low here.
Already seeing that with Chipotle and its new protein-heavy and GLP-1 friendly menu ahead of the new year. Charles predicts more specialty menu offerings to come. And then finally here, loyalty programs will be in focus as they provide, of course, a lot of data and ability to target consumers with offers in this hyper-competitive landscape. Mike, we will see if it works in the new year. Back over to you.
Yeah, a lot of efforts to adapt. Yeah, we'll see how it goes. Kate, thank you very much. Let's get to Courtney Reagan with a look at the rough year for retail. I mean, maybe in some of the expected ways and others that weren't.
Yeah, I mean, the XRT ultimately is up 7.5%, which isn't terrible, but it was half the S&P 500's performance. And if you would have told me that would be the case in April, I actually wouldn't.
Okay, 4 minutes to go. 4 minutes to go.
You can see this dramatic drop from that April 2nd tariff announcement. But then many retailers started to find their footing. Two of the biggest surprises of the year for me, the resilience of the consumer and retail's ability to mitigate tariffs. Low-price players soared, Five Below 80%. Dollar General gained 75%. Dollar Tree 60%.
Shorts covering.
But some specialty names soared too.
Fair value gap.
Grew 59% in 2020.
4 minutes to go. 4 minutes to go.
100% in just the last 6 months. UBS has American Eagle and Victoria's Secret on its 2026 buy list too. Tapestry shares gaining 96% this year after its deal to buy Capri was blocked in late 2024. So things turned out all right. Now, PVH, Deckers, RH definitely among the biggest losers of the sector. RH down 54%. Lululemon shed 45% under some internal missteps and increased competition. Its CEO is stepping down. Target didn't rally like other discounters.
Woo! Look at that drop there. Wow.
And looking to the new year, Jefferies does think it is more constructive for retail, but quote, selective still when it comes to stocks. Nike, its top pick, but it does suggest a short for on holding, while UBS puts on holding on its buy list, along with Ralph Lauren, TJX, Signet.
3 minutes to go. 3 minutes to go.
All right, Court, appreciate it. Let's bring in Oppenheimer senior analyst Brian Nagel as we head into the close. So, Brian, broadly speaking, the setup, as a lot of these folks, strategists will tell us, is that, okay, consumers going to get a little bit of a windfall with higher tax refunds and things like that. Is that going to move the needle for the group, do you think?
Well, good look, happy holidays. I think it's interesting because I think as I start looking at 2026 now, it starts tomorrow. 2025, the last couple of years,
We're going to close at the low, absolute low of the day. What's going on? Okay. Well, we're coming into the close. 2 minutes to go. 2 minutes left. All right, we are going to make a new low here into the closing bell. There you go. New low. Those 68.55 puts went from $1.55 up to $6.50 in the last 3 minutes. Wow. In 3 minutes, it went from $1.55 all the way up to $6.50. And still climbing. 610. 1 minute 20 to go. 1 minute 20.
suffering from pull forward demand. And then if you look at companies like the athleisure brands, Nike and Lululemon and others, I still think those companies are suffering because they were not able during the pandemic to really
Wow. Wow. Okay, those are $7.80 now. $1.50 to $7.80. $8.60. These are ripping here. Wow, look at these go.
Nike, because the stock is up today as a new CEO doing an insider buy. It's an uphill fight, but you still like it here?
Okay, 30 seconds to go. $11. $11. Wow, these things are cooking. $11. In minutes. Okay, that was $11 move, $10 move there in the last few minutes of the trading day. All right, folks. I was going to say have a great weekend, but enjoy your day off. I will as well. I got to run to the store and get some apple cider for the kids for New Year's. Don't fret too much about the markets. I'm sure it's going to be just fine. If you had to believe in portfolio managers and hedge fund managers, they're all saying the same thing, looking for earnings, which will be up in 2 weeks. There's probably a lot of selling from hedge fund managers and portfolio managers, collecting cash for the end of the year to start anew.
Trading for the year, the market's last day showing some losses, but relatively small ones. The Dow's down about 300 points. The S&P down about 2/3 of a percent plus. The Nasdaq and Russell 2000 about the same. Every single S&P.
All right, so that's it for me.
Today. Real estate, energy, and materials among the worst performers. Materials hit by another bad day for metals. Gold, silver, copper, all down after being down and then up and now down again. Another big loss for platinum, down 17% this week. Nike,
Take care. Have a good evening. We'll see you on Friday. Ciao.